NFTs is there as well. Sick. We got. I know who NFTs is. That's the Krasenstein Bros. KK, you there? No, we'll bring him as KK as a co-host. What's up, man? KK, can you hear me? Romy, can you hear me? Just make sure my audio is good. You can hear me, man? Yeah, they can't talk. What's up, everyone? KK, can you hear me?
Yeah, but your mic is crap.
My mic is crap. What do you mean? Is it too loud or what?
It's terrible, man. It's muffled.
Romy, is it muffled? Because Bob is next to me. He's telling me it's perfect.
It's perfect, man. I'm just busting the balls.
Oh, for fuck's sake, man. We got Andy. Andy, how are you, man? Good to have you back.
Hey man, good to good to hear you, man.
What?
I'm okay. Just that I'm losing my voice, man.
Why too many speaking events?
No, I was actually in South Korea. You know, drank too much alcohol, man.
I don't know, man. I wouldn't take you as an alcohol guy. You're just too level-headed.
Well,
I
I
drank too much,
literally, I literally thought you were about to say alcoholic.
No. By the way, we have an interesting project. Etihad is doing an NFT, and we got them on the show. I think they're a sponsor of the show. I'm an Emirates.
I swear,
I'm an.
in my introduction, I have a section which goes like, and if you're wondering how Etihad sponsored a bunch of degenerates like us, and then I explain exactly what happened. Because I'm actually surprised, like they're sponsoring us.
Man, look, to talk about yourself, we have my. Oh, by the way, I've got to announce we have Michael Bay. Everyone knows the director, Michael Bay, is coming next week on Thursday to do a segment on the immersive nature of the metaverse. He's an ambassador to a project, and we're working with that project as well. So it's going to be an interesting segment. Function, how are you, bro?
Mario, what's going on, my brother? It's a little loud. I'm just eating some breakfast real quick. Just popping in, saying what up. How you living?
Good, man. Good to have you again, bro. We got
Appreciate you having me.
Wahid. What's up, man?
Very good, very good.
Where were you on Tuesday? The NFT show was probably one of my probably my favorite space. I'm gonna be honest. That we've done to date. It was on Tuesday. We had all the top Gs from the NFT space. It was a deep discussion into utility. I brought you up a lot of times. We talked about metaverse fashion, but you were too busy for us on Tuesday.
Mario, dude, I could just do shows with you all day and do no work. I don't. Way too many shows, man.
All right, Twitter's lagging again today, glitching. A lot of people in Discord group are saying they're having issues hearing us. So yeah, that happens. Everyone happens every once in a while. It happened 2 weeks ago where Twitter starts to glitch. You've got to try to going through a browser. Just go on Discord, everyone. I'll do a tweet and I'll pin it with the Discord link. Discord community is lit, and we'll help you there. There's a bunch of mods that will help you fix the technical issues you're facing. 2-3 weeks ago, I think we had like 70%, no less, 60% of people couldn't join the space. And then last week we even had a space keep crashing. So it is what it is, but we already have over 300 people, almost 400 people already in the space. And we've got Nader from DISO. Nader, I know you're not a big fan of having the mic. You know, it even took us months to have you dox your identity. So it's a pleasure to have you on the show. Nader, you there, DISO? You're muted.
Mario, can you let Nader up on stage, please?
Oh,
he's right down below.
Of course, man. If he can request, oh, there he is. Hey, Nader, I'll bring him up now. And what was your name? Sorry, who's using the DISO account?
This is Dylan using the.
Oh, Dylan,
the
yeah,
DISO
of
account.
course, man. All right, good to have you on here as well. I've just sent an invite to Nader to come up, and then
Perfect.
the organizer. So, Romy, if you can bring up Nader, his name is Nader, Nader. It'll be great. I've sent him an invite, but it's not working, so I might need to DM it to him. Otherwise, who else we have? Alpha Illustrated, sorry. Oh yeah, Charlie. How are you, man?
Hey man, it's good to be back. Funny being back in under a different guise.
You've doxed yourself. I think you doxed yourself on our show, no? A few weeks ago.
Not to this account. It's quite public that I run Coinfessions from this account, but I doxed the first name.
Yeah, exactly. So I know you DM me. I'm gonna be connecting you to to there's a project, a pretty big NFT project. I just can't. They don't not allow me to disclose who it is. They'll reach out to you probably another week or so. But I think you're gonna have a really good collaboration with them. Very legit designer. I think they're doing an auction on Sotheby's, I think it was. But I've connected you to them to come up with it. I've got a really interesting strategy. Let me send the invite to Nader. Nader, I'm gonna send you a DM and you'll get it. So just keep an eye out on your DMs. You should get an invite. Otherwise, KK, do you want to kick off the introductions, man? We didn't have you last Tuesday, and the audience kept asking me where the hell is KK. Didn't know what to say.
It's simple, man. You tell them the truth.
What's the truth, man? That you're sitting in your
You know
bathtub
it.
doing nothing?
Nothing is subjective, man.
That was a sick show, man. I swear. On Tuesday, it was our first. So for anyone that just joined, we used to do. I think most of you know already. Like what we do is already almost 1,000 people in. That's fucking cool, despite the glitch. So really grateful to have you all in. Loving the community. We used to do a 7-hour show every week. We started about 10 weeks ago. Obviously, about 2 months, about a year and a half ago, we used to do Clubhouse. Then we took a break, so to take NFT Tech public, and had a lot of things going on. And then we started on Twitter Spaces 10 weeks ago. And from day one was by far the biggest show. Was it the first show, KK, that we had Tom Nash and Kim.com go on a debate for like an hour and a half?
Yeah.
That was a sick show. That was a sick show. Like 60,000 people joined. So it was a 7-hour show every day. Not every day, every Thursday. But then obviously not many people could last 7 hours. And so what we did now is we split it into two, especially with us getting very involved and doing a lot of acquisitions and partnerships in the NFT space behind the scenes. We're doing a show on Tuesdays, purely NFT. Again, I'm passionate as fuck about NFTs, in-game NFTs, play and earn gaming, and social tokens. These are the industries I'm interested in. And so we're doing a whole segment on Tuesdays, purely NFTs. Did 4 hours. Function was a fucking cool show, wasn't it, on Tuesday? Do you like it?
Dude, I loved it, bro. I was fucking vibing. That was a fun ass chat.
You guys have an insane community. And one thing I was talking about before we kick off the show and welcome everyone and welcome all the speakers, and Nader's up on stage. I introduced Nader. Before I do that, I just wanted to say, like, for when I speak to a lot of the traditional guys, again, I've been in crypto since 2017, so I'm more on the traditional crypto guys, Bitcoin days, Bitcoin maxis, etc. And that's the world I come from when I launched my first company. Talking about the NFT community to these guys, they don't understand. And I want to, Etihad, you're on stage. Yeah. Like, I want to talk to you guys about it, probably privately, and even when you do the pitch. If you don't get that, and it's just a crazy, crazy community. If you don't get the NFT community, at least now backing a project, no matter what celebrities you have, it's really difficult to gain traction. And like Nader, this is a discussion we can have as well later on. Like you did, we did the launches. I feel like I'm part of DSO, but we did the NFT launches on DSO. It would make a big difference. Maybe we did that behind the scenes. If you just get that I've been focusing a lot on building those relationships in the NFT community. If you look at every project that launched over the last 12 months, and we're going to disclose numbers soon, we're doing a bit of research on it. The projects that had that support from that community did significantly better than projects that didn't. Even if the projects that didn't had big celebrities in Web 2 or great utilities or big VCs backing them, they don't have that NFT blue tick of approval. It just they didn't do well. It's just been fascinating to see. So that's why I'm obsessing about understanding the community and playing a part of it. But not sure if you've seen that as well, Function. Like, you've seen so many projects that are fucking good projects, but they just flopped because they didn't understand the NFT community. They just looked at it as another industry, and they've got enough clout without caring about the NFT community.
100%, bro. I think it's super interesting. It's a really, really delicate balance. If you end up joining into the NFT world and buying celebrity projects, you're most likely going to lose all your fucking money very, very quickly. And you start to learn very fast which founders, which communities, and like which people are the ones that are the real players, and like what levels of participation they're going to participate at. And then you get to choose how to participate in that community as well, and see how you can help it grow.
Yeah. Cool. I'm going to start off the intros. And before you do that, KK, I want to personally introduce Nader. Nader, as I said earlier, not a fan of the mic, what you've built from the basis days. And we didn't speak directly, but I knew a lot of the VCs that invested, and I passed. the way you've handled basis, the way you've dealt with investors, the way you've launched DSO, and the success you achieved, even though we're at a different stage now, is something you know, not enough people know about in the crypto space. So I'm really happy to have you today, even though we're not doing a segment on DSO and social tokens today, something that we want to do maybe not next week, but the week after, because it's a fascinating topic for me. But it's a pleasure to have you here, man.
Thanks so much, man. Can you hear me okay now? And is it coming through?
The audio's perfect.
Oh, awesome, man. Well, Mario, it's been a minute. Thanks so much for having me, man. I'm just thrilled to be here with everybody, and yeah, excited to be a part of this.
Cool, man. Appreciate you being here. And also want to give a shout out to Crypto Mom. Crypto Mom, I think this is the first time you're on the show.
Yes, sir. Hey, Mario. Hey, everybody. Yes, and I love it.
All right, cool.
I'm a fan.
We're gonna do a DeFi segment after the news and market analysis. So the way we kick it off, we have a pretty clear agenda that KK will introduce and lead, where we go through the market, just a macro analysis. Usually we got a lot of technical analysts, a few Bitcoin maxis, but we tried to change it up a bit today, just to get a look at the market and I want to focus more on the fundamentals today, and then we look at a few developments in the space. And then we dig into the discussion about DeFi, looking at DeFi 1.0, 2.0, 3.0, what's sustainable, what's not sustainable, etc. I think it's going to be a good discussion, and it's something I'm going to be learning a lot from. So it's good to have you. And KK, I'll let you kick it off, man.
Man, do you know what the world's fourth most spoken language is?
Yeah, I know. I know you've been fucking with me with questions like this every day.
Okay, don't worry. Do you know what it
English,
is?
the most spoken is.
Yeah, it's Sugandis, bro.
All right, so let's kick it off. All right, you can mute yourself now. So, buenos días, damas y caballeros. Bienvenidos a la mesa redonda de criptomonedas. Wait.
Buenos días, damas y caballeros. Bienvenidos a la mesa redonda de criptomonedas.
De criptomonedas. Okay, all right.
You fucked this up, man. You fucked this up, man. So bad. That's the best.
Man,
I said I want music at every show. I want music, man. We have a whole device we bought for music, and you come up with Google Translate talking Spanish.
Bro, what the fuck, man? It was either this or Mandarin Chinese. Like, come on. Anyways,
kick it off.
All right, so what is up, guys and girls? Welcome to the 69th episode of the Crypto Roundtable. Today's roundtable will be focused on a crypto market analysis and news segment, followed by a DeFi segment, updating you with the latest news in the DeFi space, comparing DeFi 1.0, 2.0 with 3.0. Is 3.0 even a thing, though? Regardless. Plus a segment dedicated to Coinfessions and some project pitches to wrap up the day. Throughout today's session, we'll also be selecting 5 winners for a giveaway of 1K each, as well as giving out an NFT to one person, which Mario can expand on a little bit later. As always, we'll be giving the prizes out to a person in the audience that stays with us from the beginning till the end. So make sure to never, ever, ever, ever leave the space. Today's show.
And we've given, and just want about the giveaways, everyone. We've given away about, I said 120K a few days ago. My team corrected me, Mario. It's not 120K, it's about 100K. So excluding today, we're giving away 100K since we started on Twitter alone, 9 or 10 weeks ago. So, and to win, remember, you have to follow all the speakers, to compensate them for their time. You have to share the space and look at my pinned tweet. Join Discord. I'll put it above as well. And what was the last one? You have to be in the space. So a lot of people won, but we checked and they either fell asleep or left the space, and we gave the prize to someone else. So you have to be in the space. We sometimes mention code words, etc. It's going to be random winners again, and there's going to be more giveaways today as usual. So yeah.
What's the NFT giveaway?
Don't know. So Romy will send. Romy can send me information about the NFT and who's sponsoring it, so I can announce it in a bit. But yeah, I'll announce that shortly.
The NFT is going to be Mario's first ever drawing. All right. So today's show is sponsored by Etihad Airlines, RCube NFT, Quantum Museum, O Games Builders, and as always, our beloved Faith Tribe. Now, as me, you're probably wondering why Etihad Airlines would sponsor a bunch of degens like us. They're basically launching a collection of Boeing 787 NFTs, which will link in a pinned post shortly. RCube NFT, on the other hand, is also part of the Etihad NFT team, so they're helping them with the launch of their collection. Quantum and Open Game Builders are basically building the world's first metaverse based museum and the world's first fossil NFT collection as well. So we're going to pin that all up above in a bit. And lastly, we also have Faith Tribe, which is a digital platform for the creation, design, minting, customization, production, and distribution of digital and physical fashion items. So, as mentioned, I'm going to be doing a post attaching all their links shortly in a pin post above. Now, yeah, I guess we'll just hop over into the market analysis and news segment.
Cool.
Mario.
Before we do that, I want to just two things. First, the NFTs by Quantum Museum. They're giving an NFT of the Tosunoria skull, 10 million years old. So we'll send through the link. I'll pin the link now. Romy, can you please pin it on the roundtable page, and I'll retweet it as well. Also, we've got your friend, your best friend, Charlie dropped out, but we have Tom Nash on the panel, man.
Tom
Your
Nash is
BFF.
my
Yeah,
Nash,
man.
Tom Nash
Your
is my,
idol.
is my midnight lullaby, man. I go to sleep listening to him talk about China.
Tom,
I wish
how are you, man?
King.com was here. Otherwise, I feel like my second half is not here.
Man, he's always coming. He's come almost for the last three shows. He comes in the audience, so he's been enjoying the show. But it's really late in New Zealand, so he doesn't speak. But he's always in the audience. He was in the NFT show a few days ago. Just cute to see Kim in the NFT show. Didn't expect it, but yeah, man. Like he's listening to my voice as he goes to sleep. So I like that. But it's good to have you, man. Who do you want? So Wahid, do you want to kick it off from a market analysis perspective? I know you focus on the macro, and I think you and Tom can kick it off from a macro level, and then we go to Andy and Nader to start, focusing more on the crypto side. Also, when you're not speaking, Wahid, just mute. I'm gonna mute you now, just because there's a lot of echo from your end. So and then unmute and mute, just to avoid the echo. And for everyone else, I'll be tweeting the Discord link. Make sure you join Discord. There's even panelists. You can join the Discord there. Engage with the community. Very, very engaged community there. The Roundtable fam. So I'll be pinning that at the top of the space as Wahid kicks off the market analysis.
Okay, great. Well, thanks again, and good to be back. As Janet Yellen once said, not that I'm a fan of hers, but she said it's going to be looking like paint drying. You're going to be watching until paint dries on a wall. That's how long QT would be. Well, that's how consistent I'm going to be. There's a game being played, and I've told you this 1,000 times, where they are going to try and get the market to accept higher rates with an ever expanding debt profile, which I just don't think is going to happen. We are in a environment now where people are saying, are they going to pivot? Are they not going to pivot? I think it's irrelevant. We're at 2.25 to 2.5%. Everyone is waiting with bated breath, like lemmings, for his speech tomorrow. Funny how we are all waiting, literally trillions and trillions and trillions of risk assets around the world, waiting for this guy to dictate what the price of risk is. But c'est la vie. This is where we stand. And he dictates the price of risk. And we have an inflation problem, but we have a 330 trillion debt problem. That, by the by, just went up again yesterday when willy-nilly they decide to forgive everyone's debt. Well, not everyone's debt, but $10,000 worth of student debt for everyone who makes less than 150,000, which is most students, by the way. So again, we take one step forward, and then we go 2 steps back, and then 2 steps forward and 3 steps back. So we're playing this silly little game. I called the market bottom in June, saying, "Look, we're gonna rip." Of course, now we consolidated, but I'm not proud of my call. I believe it's inevitable that things will reflate up because, again, I just cannot see a path where we cover $330 trillion of global sovereign debt. And by the way, just as much in unfunded liabilities, pension funds, 401ks in the US and globally. And so unless someone can actually give me a path where interest rates globally go up 1 or 2%, which with the debt and the unfunded liabilities is worth 6 to 7 trillion, 100 basis points. If we go up 2%, that's 12 trillion. You're taking up what 60% of an American economy in terms of interest expense. I just don't see that happening. So we're going to play this footsie game. We're going to wait. Are they going to be hawkish? Are they not going to be hawkish? Unfortunately, folks, we might have one big puke where everyone panics and they realize that's it, checkmate, and then they have to retrench, pivot, and then you're going to see everything go vertical. And not in a fun way. It'll look fun, but as I told you, and I told many people on these calls, it's going to feel miserable because it's going to have structural inflation till the eyes could see. We're going to be sitting here with, no interest saving, no savings in your bank accounts. And I really think gold, silver, real estate, and utility tokens, and I emphasize utility tokens because tokens that don't actually offer some form of utility every single day, um, those will not do well. But I really believe blockchain crypto, where no shenanigans can be played, it's permissionless, you have fixed supply, and real utility. I think those things are going to rock it. So looking forward to those days. I'm still constructive, Mario. I think we're going to have 1 month of noise in September, and then maybe a little bit of October, but then that's it. We're going to get a forced pivot right around the election, and then everything's going to go vertical, and then that's it.
That sounds pretty exciting, pretty bullish to me. Tom, are you in the same boat on a more
Well, I
macro
have a little
level?
bit. I generally agree with almost everything what he just said. I have a little bit of a different perspective, but we come to very similar conclusions. So I've made videos, as you all know, about the debt problem we have. I don't want to repeat that. I think that's one major obstacle as far as creating increased rates. The other problem I want to add here is why I tend to agree that the Fed is irrelevant in this problem. Is look, right now we have a very dire situation. On the one hand, inflation is absolutely destroying the economy without people noticing that. So if you look at the real estate markets going down, retail margins coming down, Nvidia just reported yesterday, and Nvidia is kind of the king of tech as far as margins and sales. Nvidia has been saying, well, our margins are dropping, demand is declining. So inflation is slowly eroding everything away. Disposable income is coming down, and yet the right now we basically are waiting on what comes out of Jackson Hole tomorrow, as if it matters. It doesn't matter. I agree with what he. Here's the problem: whether the debt problem is going to prevent them from doing this, or whether just political pressures are going to cause the Fed to say, "Well, we won. Everything is Gucci." I think that a more dovish approach from the Fed is inevitable, especially with midterms coming up, which I think is one element to remember. They just try to bribe everybody with these debt forgiveness issues. That $10,000, it's just that it's bribe. It's straight up midterm voter purchasing, but it didn't work, and I don't think it will work. But it's the first sign of the government is basically is unable to allow the Fed to continue in this hawkish approach before midterms. So what, in my opinion, happens is because of the political pressures, because of the debt problem, which Wahid alluded to earlier, is that the Fed is, I don't know if it happens in Jackson Hole, but probably within the next month, the Fed comes out and says, we won. You remember the Iraq speech with George Bush? We won. So that kind of scene happens on the financial scene. We won. And then the market celebrates because people are just looking for an excuse to just buy back in.
I think that's actually very brilliant. I agree.
Yeah,
100%. They're going to need any softness information to justify it.
We agree on that definitely. But the problem is long term, Wahid. I think you'd agree with me. Is that after we burn out through the initial 2 or 3 months of this fucking bonanza party, the reality will sink in, and it's like when you lose weight and you start eating again, you come back fatter and like less in shape than before when you just let go. I think inflation is going to come back next year, and it's going to be worse than we could ever imagine. And I think that for the rest of the year, we probably are looking at a very interesting pattern that will allow some bull runs. But 2023, it just doesn't. I agree with Wahid. It looks very bleak.
Yeah, look, in terms of trivia, and I'll shut up. I encourage the audience, just for giggles, to look up charts of the Zimbabwe stock market, the Venezuela stock market. Heck, look at the real estate company Solidaire, Mario, in Lebanon. It's up like eightfold. That's what happens in inflation environments. That's hyperinflation. So I'm not saying we're going to get that, but we're going to get inflation, and risk assets go up by default. They do not go down.
can we see? So Tom, the argument, and we'll go to KK, Andy, and Nader, and other speakers, Hector and Crypto Mom, to discuss more crypto-focused analysis. But Tom, in the traditional financial space, is anyone even considering Bitcoin becoming a hedge against inflation or a store
I don't
of
know if it,
value?
look, I'm not an expert in cryptocurrencies and not on Bitcoin, but I'll tell you one thing. Bitcoin has really changed over the course of the past 2 years. It went from being this rebellious, retail-based, kind of decentralized craziness into pretty much being owned by Wall Street. The big players all are deep, deep into Bitcoin. Everybody who matters and cannot lose are deep in Bitcoin. It's lost some of its decentralization aspects, but it gained pretty much. It's now the house. So Bitcoin is now the house, and the house never loses. So with this kind of change, we're losing some of the the romantic aspects of what Satoshi Nakamoto wanted from this, but we're gaining. I think I don't know about
You just drop out, or is it my end?
going, going away
Yeah, you just dropped
anytime.
out. Oh, you're back. You're back. All right, cool, man. You just dropped out, but I think I got everything you said. Before we kick it off with the crypto-focused analysis, for anyone that's facing glitches on Twitter Spaces, you go on Discord. I've pinned it above, and I'll do a tweet about it. That happens sometimes. You have to try Twitter Lite or Twitter Browser. That should fix it. Try closing the app and going back into it as well. But usually Twitter Lite, Lite, or Twitter Browser. Discord can help you out. The guys there are sorting out anyone that's facing glitches. But KK, do you want to go through your overview? It's been a while. I haven't had you as co-host, man. It's been like a whole week. So do you want to go through your
I swear,
general?
it's like I know I left you on Tuesday. You developed like this defense mechanism where you have to be strong and do everything on your own. But it's okay. Mama's back.
Okay, before you go ahead, Mama, just want to say something as well for everyone listening. The giveaway of the NFT, man, is fucking legit. The Quantum Museum NFT. So that's what the team just told me. The price of this piece, which is an ultra rare piece in this condition, is around $10,000. But watching and making some investigation in an auction house, the price around in an auction house. Okay, the price around. Okay, so the sponsor saying it's worth about 10K, but then the team. But if you look at auction houses, etc., it's looking at 25 to 30K. So it's not a shitty random NFT. It's a legit NFT. So check it out. It's one of our sponsors. I'll do a tweet about it as well and pin it above. And we'll shout out all the so this is by Quantum, Quantum Museum, Quantum. I'll do a tweet about them. And of course, our other sponsors are Etihad and everyone's favorite Faith. But KK, do you want to go overview of the crypto market? And then we'll go to Nader, Andy, Function, and Hector and Crypto Mom for a deeper analysis.
Yeah, for sure. So, I mean, you sort of kicked off the discussion with Tom and Wahid regarding the macro and just what's expected to come and what's happening on a bigger sphere. But I think I'm going to use this opportunity just to focus on the two biggest movers and just to discuss some of the price action that we've seen right now, as well as some of the quote unquote future signals that we're seeing in the market, which based on previous analysis and based on previous actions seems to be somewhat of a trap. Again, none of this is financial advice. We're simply discussing what happened previously. But as of now, Bitcoin is currently trading around the 21,700 range. And the past few days have been somewhat of a bloodbath, essentially seeing Bitcoin fall from the 25K range all the way down to the 20,700 range. So right now, I think it's somewhere around those levels. It might be up by 100 or down by 100, but give or take. So as with all major drops, of course, there's typically a meaning behind it. And one of the biggest assumptions in the space regarding why Bitcoin dropped so much in the past few days or within the past week is potentially because of Celsius Network. So Celsius basically received approval on Friday to sell mined Bitcoin to cover operational costs. And it's being widely speculated that Celsius sold 7,000 BTC, which in US dollar worth is approximately 170 million, on the FTX exchange on Friday, which essentially seems to have caused a potential cascade of further liquidations. Ethereum, on the other hand, is currently trading around the 1,700 range, so it also suffered a bit of a drop during the alleged BTC liquidations, bringing it down from the 1,800 levels all the way down to the 1,500 levels. But the ETH USD pair seems to be slowly recovering amidst the upcoming merge and just the positive news that we're receiving with regards to all the updates and all the stages of the merge. The fear and greed index has actually dipped back down to extreme fear, and I'm referring to the Bitcoin fear and greed index, as I always do in every episode. And as opposed to the fear levels that we were enjoying in the previous weeks, it's essentially back to extreme fear, which again seems to have been caused by the alleged sell-offs in Bitcoin. So the index is currently around the 25 level. I think last Thursday it was within the 30s. So it looks like the market is quote unquote becoming a little bit more conservative. Signal-wise as well. So it seems as though the market is likely to potentially get even worse before it gets better, as the 50-week SMA is likely to cross over the 100-week SMA, which confirms a so-called bearish crossover, which is essentially just a signal that traders use. However, last time we had one of those crossovers back in February 2019, despite the fact that traditionally it means it's a bearish signal, it actually trapped traders on the wrong side of the trade, and Bitcoin did the exact opposite of what was expected. So it actually went up. Again, nobody knows if this is going to be the case this time, but you never know, right? So traders are essentially expecting this signal to have a bearish effect, but judging from history, it was essentially a trap. So Bitcoin actually went up if you check the charts for February 2019. Yeah, I mean, from a market perspective, that's about it for Bitcoin and ETH collectively. I think we can essentially start a discussion starting from cryptos all the way to the macro.
Andy, I know it's late in Singapore, so you want to kick it off first?
Hey, no problem, man. I think I just share three different points, So, and also one of them is to answer to one of the points that you mentioned. So I had a really good week last week, in Singapore. I had a chance to host a roundtable with a private bank, and to my surprise, the bankers are actually pushing their clients to look at digital asset in a different manner. They are telling them about how DeFi can be the next big thing in the coming months. There might be a bull run, and then they are also pushing their private clients to look at NFTs. So in the whole conversation, I felt that is not as bearish, like what KK has mentioned, because those private bank guys are pushing really very hard. Perhaps this is also one of the reason, why one of the gentlemen mentioned that there's a change of hands in Bitcoin, and all the capital market guys, the Wall Street guys are holding on to a lot more, Bitcoin or cryptocurrency than we thought. So the whole discussion is amazing, and I also felt that there's a new stream of money that is going to be pumped into the Asia market, just because in the conversation itself, apart from the private bank, we have leading auction houses like Christie's. They are also present at the round table. So this is some bullish signs that I've encountered last week in Singapore. And other things that I also like to mention is that since I'm more Asia focused, I was also giving advice to the Korean government. I also like to bring out another thing that I think is going to be interesting. Samsung's investment arm, or Samsung Securities, they are trying to launch their own crypto exchange. That is actually a very big thing, because the regulators in South Korea. I just came back from South Korea anyway. They're trying to push the crypto agenda a little bit harder, than the previous the previous party. And I do see that other domestic leading security firms like Mirage Asset, and a few other security firms doing the same in the Korean market, and that will also help the overall Asia market. Just for information, Samsung Securities is one of the first one of the first guys in Asia to launch a global blockchain traded ETF. So these guys are really trying to push very hard in Asia, I'm very glad to have met some of them. And then last but not least, there's also mentioned that the NFT market is really bad. I think it is really bad. We have like this pseudo rare, rugging 500 over ETH a few days ago. There's all these liquidation rumors and so forth. They're all coming. I think the market is not as strong as before, but just a little bit of an insight from my end. I actually just launched a NFT book with Bybit Exchange. I managed to sell 8,000 of them in the first minute um, because of the low price. You know, I realized that the pricing at this bear market is actually very important. If you are trying to sell something big, you get a certain celebrity to support it. You sell a few thousand or ten of thousands, that kind of NFT is kind of hard to push. So myself and also Bybit, we try to come up with something more innovative, low price, good asset, just try to suss out the market. So these are some of the things that I think we have to find ways to grow the NFT market in a slightly different manner. So these are the three things that I want to share.
Yeah, I think 2 points you made that's interesting, and as I prepare to go to Nadir as well, I'll kind of link it to 2017, 2018, which is when Nadir you're already pretty active in the space with your first project. Um, so one thing you mentioned, Andy, is that institutional money, and that's very important. Institutional money is not shying away from crypto, and I think it's very important for everyone listening. I want to say two things. First one is that yeah, institutional money is not shying away. Governments are not shying away, as even though the market corrected heavily, because we're no longer having the theme or the discussion, is crypto a fad? That discussion is kind of over. Now it's when is crypto going to, what's the next interesting thing? What's the next interesting utility of this technology? So is it social tokens? Is it other forms of NFTs? Is it gaming? Is it DeFi 3.0, 4.0, whatever number we're up to? Um, so that's a very important distinction to 2018, because I have a lot of discussions, and for anyone listening that joined post 2018, especially anyone in the NFT space, in 2018 things dried up to extreme levels. Like just things died. You have projects that couldn't raise, shitty projects were raising a lot of money in 2017. 2018, you had well-backed projects struggling to raise capital. Axie Infinity was struggling to raise capital. So we're not in that same boat. Assuming, and Wahid and Tom, which dropped out. So we're trying to bring you back up, Tom. But Wahid and Tom talked about, and KK touched on it as well, the macro, the macro situation as an economy with the risks of inflation, etc. Assuming no black swan events, I don't see a prolonged bear market like 2018. Just looking at the sentiment right now. So that's my 2 cents, and kind of link it to Nadir. You were very active, and I've got a few questions that kind of digress away from just the market, because I've been pretty curious about everything you've done with diesel. But first off, how do you see the market today compared to 2018, as someone that's raised capital in both markets, and someone that's building pretty heavily right now, and someone that's been hit pretty hard as well by the bear market with diesel?
Yeah, Mario. Thanks for having me. It's a great question. Yeah, I've actually been in crypto, I think, for almost a decade now, since 2010. When I got in, really got in is 2012, and was able to mine, I think, 24 bitcoins just on free electricity on college campus. Mine 24 bitcoins. So it's definitely seen a lot. And what's interesting comparing 2017 and 2018 to now, just to answer your question, 2017 and 2018 were really about, it's so funny to look at what people invested in then versus now. So in 2017 and 2018, everything was about early layer ones, like really early layer ones. I mean, like the kind of EOS, which isn't really around anymore, was probably the biggest thing that raised money, and it was over $1 billion that it raised. And Tron, and a lot of things that aren't super popular today, but were kind of foundational, infrastructure, right? And I think the people who were investing in that were still nerds. You know, people like me and you, Mario. You know, like people who are kind of understand the tech and get excited by tech, the tech underlying technology. You know, I think that's really what was happening in 2017 and 2018 is people who are nerdy, who understand the tech, were kind of the only people in crypto, and they were saying, what's the underlying infrastructure going to be that's going to take us to the next level? Today, you know, it's actually gotten much, 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 much broader, and we've moved from investing in underlying tech, although that is still a big theme. But there's a new category, which is you know, things like NFTs, things like DAOs have also, you know, become very popular, and I think these things are inherently social in nature. They're things like, you know, things like art, things like community fundraising, that didn't exist in 2017 and 2018, and I think it shows a trend towards um, crypto getting more mass adoption, right? Like these things appeal to much more than just nerds now, right? It's like, you know, a lot of our you know, quote unquote normal friends, or, you know, or people in day-to-day life, you know, can invest in NFTs and enjoy them and understand them, and I think that's a shift, you know, towards more social experiences in crypto being the focus.
I have a question for you, man. So you were really early, earlier than I expected in crypto. Um, there was a big debate we had on Tuesday with the NFT community. That's obviously most of them are very new in the space about the concept. And Charlie, who's I think here, yeah, Charlie's there. Charlie, do you remember when you did a confession? So anyone that hasn't checked out Charlie's account, Coinfessions, so Coin Confessions with an I at the third letter, Coinfessions. Charlie, you read remember you read a confession about someone that was talking about diamond hands, and they were diamond handing their crypto. And Nader, we talked a lot about this on DSO, which I'll let you introduce as well, which we forgot to introduce. Um, and we had a debate on whether that was a good strategy, because there's two sides to that coin. On one side, the people that made their money, and I'm going to be asking the speakers throughout the show, how did you make your money in crypto? And if you lost it, how'd you lose it? Because I think a lot of people were interested to know these stories. We never did this. But people that lost their money, the people that made their money, the most money, were people that just held Bitcoin or held ETH throughout 2016, 2017, 2018, 2019, 2020, 21, up to today. So there's a good argument about being diamond hands or hodling, but there's also an argument against it, because a lot of people that did not sell when the market was frothy, we saw a lot of VCs that didn't sell tokens when they did it sitting at 50, 20, 30x to do the right thing by the projects. And we've been victim to that as well. We invested over 200 projects. In many cases, we just didn't want to sell because we really liked the people backing the project. And we struggled, or a lot of VCs struggled a lot more than us. We're doing pretty well. A lot of VCs struggled significantly when they sold, when they didn't sell the tokens when the market was frothy, and then things dropped by 90, 95, 99%. And many of them will go to zero. For every EOS, for every Polygon, for every Solana, there's thousands of others or hundreds of others that try to do the same thing and failed. So my question to you, Nader, is being in the space since 2010, so 2 years, less than 2 years since the inception of Bitcoin, what's your argument? Which side are you on? Are you more diamond hands, or are you more like sell at the top when it's too frothy and buy when there's blood in the waters, or timing is difficult, or are you somewhere in the middle?
Yeah, I mean, it's a really great question, Mario, especially for anyone who's trying to actually make money in crypto, you know, and I'll just summarize, you know, the question's kind of like, should you just find a few projects and hold them in diamond hands and just not worry about it? Or should you be kind of a day trader flipping everything, you know, like which one's going to make more money, right? And I think the frustrating answer is both can make a huge amount of money. You know, if you look at who the richest people in crypto are, a lot of them are diamond hands who held projects they believed in and just didn't sell, and otherwise were very lazy. They didn't have to do anything day to day. They just picked a few projects, they held them, those projects went to the moon, and now they're super rich. That's one category of people. There are a lot of people like that who are rich off of that strategy. But there are also a lot of people who are day traders who are very, very, very wealthy, right? I mean, Sam Bankman-Fried didn't even know what Bitcoin really was when he got in, and he just, you know, Alameda, his research firm, you know, is very much a, you know, kind of day trading operation. And he does very well with that, right? Of course, he also does diamond hands into some projects too, so he mixes like anyone. So I think it's both. You know, I think if you're going to do the day trading approach, that's something that requires your attention, 24/7. Whereas buy and hold does not. You pick your projects and you hold them. So that's the main reason why I personally, uh, uh, just diamond hands it, right? That's my approach. But uh, if I had more time and I wanted to day trade, I don't think it would be bad, right?
Okay, so
think
Nader, just to
you mind if I jump in for a
go
second,
ahead, man.
bro?
Yeah, of
I think
course,
it's
function anytime, bro. Anytime, man.
so I was just finishing a haircut real quick. Just got the fade. Was listening to what y'all were saying. I think there's a very, very like large differentiation between what side of the market that you're speaking about when you're talking about trading and like taking profits and things like that. Especially when you're talking about the current state of the markets, right? Like 2017, 2018 timeframe, it was much easier to kind of decipher like when to take profits if you had experience from 2015 and beyond. You kind of only had to play in the realm of coins and like large scale coins, large cap coins, and micro cap coins. That was really like what the majority of the conversation was about. Nobody really gave a fuck about NFTs or DeFi or any of these other protocols that are being built. And so I think there's like a whole new like almost a whole new strategy like that has the potential to be built in these markets. I think like a lot of people over leverage on holding JPEGs and probably have over leveraged on them as monkey pictures have gone from 400,000 to $100,000. And I think that's probably a huge lesson for people. And in reality, like my main thing is like if like you aren't pulling out at the top of the cycle even like a little bit, then you're fucking out. You're fucking out. You're dropping the ball. Like the goal, at least in my reality, isn't to collect.
The hard question is,
collect,
how do you know?
Let me just finish my thought for a second. Like the goal here isn't, in my opinion, isn't to collect monkey JPEG pictures and like flex them on the internet. Like the goal is to have as much Bitcoin, as much property, as much guns, as much real fucking assets as possible as the world moves the way that it's moving. But go ahead. What were you saying, Nadir?
Go ahead.
Oh,
go ahead,
I was just saying, function. How do you know what the top of the cycle is, right? If you pull out, and you're wrong, you'll end up, losing a lot of money, right? So you have to be maybe if you're 24/7,
you won't lose a lot of money. You'll end up losing opportunity cost. It's kind of the same idea as like the top and the bottom. Like you don't know when the bottom is. Like I think the bottom is going to be a lot lower than it is right now. That being said, like I might be fucking wrong, and I've been dollar cost averaging ever since Solana was fucking $27 and ETH was 800, right? Like I understand that my preferences may not become reality, but I can also leverage like the current state of the situation to make those educated decisions. So like when I was selling monkey pictures, I was selling them for $350,000. Did like ETH, they were at 100 ETH at that time, or 80 ETH, right? They immediately ran to 150 ETH like 2 weeks after I sold the monkey pictures. Am I mad about that? No, of course not, because I like secured some of the assets. You're never ever going like the number one rule in crypto is you're never going to catch the bottom and you're never going to catch the top. So you just got to be as strategic as possible to get somewhere in a decent realm where you're like cashing out enough capital and you have enough play capital for when the bottom hits again, and you rinse and repeat the same thing.
So Nadir, I want to ask you a question about and I ask tough questions. Again, for everyone facing technical issues with Twitter Spaces, please go to Discord. I know a lot of people are complaining. And remember, this is being recorded, so you can listen to the recording afterwards. So Nadir, to my first question that I have for you, and that'll be tough. We usually get about 50,000 listeners on Twitter Spaces alone, and that's without before distributing on the podcast and YouTube. So it's going to be a pretty big audience. And I want to kick it off by saying I'm a big fan of what you're doing with DeSo. I was one of the guys that talked a lot about it outside the platform. DeSo was originally known as BitClout and rebranded to DeSo. I'll let you introduce DeSo and what DeSo does. And then if you don't mind, I've just got a few tough questions about the journey that you've had with DeSo. And I'll touch on a few strings if that's okay with you. But I'll let you kick it off with what DeSo is. And I think everyone in the audience, I highly recommend you check it out. The DeSo account is on the panel. highly recommend you check it out just to understand it. I'm not saying invest, buy the coin, etc. I never say this about any projects, but I just say that what they're doing is very innovative, and the concept to me is very interesting. But I'll let Nadir do a quick introduction on what DSO is before I ask a few questions, as a very intrigued individual.
Thanks so much, man. Yeah, of course. I love hard questions always. It's more fun that way. Yeah, man, I'll do 20 seconds on DSO and my journey. So I'm the creator of the DSO blockchain. Started working on it in early 2019. DSO is a layer one blockchain, like Bitcoin or Ethereum. But it's built to power storage heavy applications like social applications. That's why decentralizing social media is our goal, DSO. Yeah, it's got a lot of traction. We have over 1.5 million wallets. I know, Mario, you have an account on DSO. We recently listed on Coinbase. Sequoia and Andreessen Horowitz are major holders of DSO. And the reason we're excited is just that, look, we're all talking about last cycle and this cycle, but I think a bigger question is kind of what's going to be next, like Function, to your point, what comes after the monkey pictures, right? And we really think that the kind of next cycle is going to be a big focus is going to be decentralizing social media in much the same way that like Bitcoin and Ethereum are decentralizing money, And so what does that look like? Well, with DSO, what we've noticed is that all the blockchains on the market today, if you look at them, none of them are really equipped to handle storage heavy applications like social applications. And that's really holding the space back. So, just for example, if you want to store a 200 character tweet, right, like on Ethereum, just a 200 character tweet, it costs about $100, which is a lot of money. And for other blockchains, the new blockchains like Solana, Avalanche, Polygon, all of those are actually about 25 cents to $1 to store that same tweet. And if you wanted to even have a few tens of thousands of users doing something that requires data storage, like posting, you would break those blockchains, right? And so, in contrast, we built DSO to make storage and indexing efficient. So it costs 1/10,000th of a cent to store that data, to create a profile with a real picture that's stored on the blockchain. And so, for the first time, you can build social apps that are truly decentralized, censorship resistant, right? Remember, censorship is a big deal in social now. I think it's only going to get bigger. And so, we think the next step for crypto is to go from disrupting money and finance to disrupting things we understand and day-to-day normal mainstream users use, like social marketplaces and all that.
So my first question, Nader, is, and I think we have a lot of audience members. I'm just going through them now, that have an account on DSO, that I met on DSO as well. So I think that they'll have similar questions. The first one is, first I'll tell the story of DSO, how it started. I think you guys launched it in a very smart way. The issues with the bonding curve that we had, just very briefly, for anyone that doesn't know the story, DSO launched as bigclout.com, and they launched. I didn't expect it to blow up as it did, but their strategy was sick. As originally, I had a growth hacking agency. That was my mindset in the old days that I stopped maybe a year or two ago. But it's about like you making noise and trying to gain traction through very smart strategies. And their strategy was to onboard all the biggest names on the platform. And I know we're moving away from market analysis, but this is a very fascinating topic. It's a journey of a project that's taken, blew up, dropped significantly. What their strategy is now, raised a fuck ton of money, and what they're doing is really interesting. So I think the panelists and audience members, you really enjoy it. So what they did was they scraped at Twitter accounts, all the top Twitter accounts. I can't remember, top 1,000 or whatever it was. And then they moved them on BitClout, put a price, and allowed people, starting with the VCs they invested, to buy coins of these people, and then speculate, assuming the coin whether it will go up or down. And then even people that didn't accept to be on the platform, anyone that had a big account on Twitter was automatically migrated to the platform, which is a very smart strategy. That got a lot of fucking traction. It blew up, had multiple seven figures in trading volume a day. Now the model, and DSO wasn't ready for it, or BitClout back then wasn't ready for it. Wasn't even listed on an exchange. No way to take your money out. And a lot of people called it a scam. And I have a question on how you dealt with that stress as well, Nader. Nader had an account called Diamond Hands. He was anonymous, and he was, a lot of people on DSO treated him like a god, an anonymous person that launched his platform, competing with Twitter. And some people, lost a lot of money. I lost a fair bit of money on it because I don't know how to trade. A lot of people made a lot of money. So that's how it started off. The vision was different about creating a decentralized blockchain. Just mute yourself, KK. Or I think someone unmuted. And then what happened is the way you make a lot of money on the platform was you would buy a coin in someone really early and then hope they'll go up. The earlier you buy, the more money you'll make. It's that simple. The bonding curve was very fascinating without getting technical in that it heavily compensated anyone that's really, really early. But then if you're stupid like me, you'll just invest in accounts really early and they turn out to be scam accounts, which happened a lot to me. That was the downside to it. But if you knew how to do your due diligence, some people made a good amount of money on the platform. Now, what happened afterwards, that's where my question comes into Nader, is that it blew up really heavily. And then now the trading volume is, I think you're looking at tens or hundreds of dollars or thousands of dollars a day. I haven't looked at the metrics in a while, from millions of dollars a day. And that was it was dropping even during the bull market for various reasons. And it doesn't mean, that this cycle is pretty common. It doesn't mean the platform can't grow again. And you made a good post, Nadir, about, I think it was Polygon or some other protocol that was in a similar position as DSO is now in terms of market cap, etc. But out of the 1.5 million wallets that were open on there, daily active creators is in the hundreds. The every new accounts a day are in the hundreds. And then you've got the amount of money traded on the platform is, and I'm talking about the platform, not the blockchain itself, is again, 2.5K today. And again, it was in the millions at the peak. So my question first is, when you blew up and you were a private person, now some of us knew who you were, I knew who you were, and I knew your background. So I was comfortable putting money on the platform and I put a fair bit of money. But others didn't know who Diamond Hands is, who's behind the platform. I had people from the press reach out to me and others, hey, who's the fucking founder? And that led to a lot of hate. And CoffeeZilla made a video about diesel being a scam, which I think is extreme. And Stephen can be pretty extreme at times. How did you deal with this? I think we did a whole segment a while ago on dealing with the cancel culture in the space, and because of the amount of scams, everyone throws that word everywhere. When diesel was being called a scam, and you're building something, you've only done the right thing in the space. You've got massive respect from VCs and from anyone that knows you. Being called a scam so heavily, and even having people that are respected in the space called Big Clout a scam, and what's known now as diesel. What was your response to this? That's no longer an argument now because now it's listed on an exchange. But beforehand, how did that impact your personal life, and how did you deal with it?
Yeah, Mari, this is fun, man. I love this. Being able to go through such an exciting time in my life, man. I mean, so yeah, I think a lot of people have launched projects anonymously, and when you launch something anonymously, there's a lot of skepticism, and like you said, a lot of people were calling what something that I worked on for many years a scam. Even though it had some of the biggest, people holding coins, and obviously now it's listed on Coinbase and many other exchanges, like you said. But I think it's funny. I launched pseudonymously as Diamond Hands, like you mentioned, and it didn't bother me. I think there was a lot of articles about how this thing is sketchy and all that, but at the end of the day, it was I think improving a lot of people's lives. It certainly showed what's possible with social tokens, which was the point. The app you're referring to is called BitClout. It was the first app that launched on the DeSo blockchain. It was intended to be a proof of concept, which is really funny. We were kind of we just put it out there. We said, oh, like no one's gonna use this. It'll just allow us to iterate on the layer one, which is DeSo. But like you said, it blew up. I think it's very interesting. If you talk to, I can't confirm this, but I really think if you talk to some of the more influential people in the world who are a part of the kind of 15,000 people that we preloaded into BitClout, I think that those really influential people would say their first experience with crypto was BitClout. We got so many people into crypto who never would have used it before with that mechanic, and that is the social tokens on BitClout, which are still a major feature, on DeSo today. You mentioned the volumes down. Yeah, I mean, 100%. I think it's something that was very, I call it very viral, but not retentive. That's also something that you see in crypto a lot. Is something will blow up, and then it kind of fizzles as people move on to the next thing. But I will say about social tokens, just because I think we're talking about macro trends and what's going on. There is another category that kind of pumped and then fizzled, and then for a really long time, and that's actually NFTs. A lot of people who are joining the space for the first time don't remember that in 2017 there were many projects, multiple projects that had tens of millions in NFT volume. When NFTs first came out in 2017, CryptoKitties was a really huge project. It broke Ethereum, But then in between, 2018 and 2020, like Mario, like you said, like the volume was like like basically 2K, a day for NFTs. It's like zero, right? So I think crypto is one of these things where stuff that has can create real value often goes through quiet periods. I think that's part of the reason why the buy and hold makes money, is if you can stomach those bear markets, you do very well. But yeah, I really believe that social tokens are going to come back in a very big way. And I think it just requires some iteration and yeah, some time.
My question,
right?
so question I have, this is where the tricky question comes in. So your account was called Diamond Hands. I'm a supporter in the concept of diamond handing. Not always, but obviously you made a lot of posts, and a lot of people have done the same about diamond handing within BitClout, and gave examples of why we should. BitClout was DSO, my apologies. DSO was about $200 at peak, steady at about 100 and something, and then had a floor of 100 for a while. That's the DSO coin, which is on Coinbase and other exchanges. Now it's at $6, which is fine. Then what you had is over a 95% drop from the peak. But on top of it, you had a lot of people that were holding creator coins. So when you bought like Elon Musk coin or Mario Nofo coin and Nadir coin or whoever else, those dropped by 99%. So wouldn't that, like, the people that were diamond handing on DSO are the ones that lost over 95 to 99%, if my math is correct. But then people that exited when there's a lot of hype, they could be buying back in right now. And I'm looking at doing that as well. They're the ones that either survived or did well. Isn't that a perfect example of how diamond handing or hodling a coin or any project is actually a very risky strategy? And for every Bitcoin, for every Ethereum, for every Solana, for every Polygon, for every Decentraland, there's hundreds more that try to do the same thing and failed. So maybe social tokens as a concept works, but maybe creator coins on DSO didn't work, or BitClout as a platform didn't work. And the diamond handing approach, which is the name of your profile, is a risky approach in many cases. What's your stand on this? And also, so that's number one. Number two, have you had, like, did it bother you? And of course, not your fault, and I've never faulted you in any way. You're a great entrepreneur. But have you ever felt bad for the people that did diamond hand and did lose 95, 99% of their holdings?
Yeah, it's a great question. Like calling myself Diamond Hands on DSO early on, it's really funny because I think nobody's lost more money than me, on the way down. I bought DSO all the way down. I think Michael Saylor with Bitcoin, he's the Bitcoin guy. He says, I'll be buying the top of Bitcoin forever, right? Well, I'm going to buy the bottom of DSO forever. This is kind of how it goes. All of my, I had a lot of, obviously, when we started DSO, it's a big part of my wealth. Now, just keep more, all my money, I just keep buying DSO. But, and so, because of, and by the way, same with creator coins. I've never sold a DSO. I've never sold a creator coin. I think, I know a lot of project founders who day trade their own coin. They dump at the top, they buy at the bottom. It's just not something that I personally don't like. It doesn't feel right to me. So I don't think anybody's lost more money than I have. But that being said, look, a lot of things go through a down cycle. I mean, it's if I felt like there was no future for DSO, then certainly I would feel bad that things are down. But because I know that everything we're doing is going to kind of create a new category in crypto, and by the way, because I know also that there's not very much competition for DSO. There's not a single other layer one that you could launch BitClout on today. There's not actually. Think, Mario, you might remember posting on BitClout cost you how much? Like nothing. You didn't even notice it, right? That's
But then
why we were able to
there's
get
the
so many
issue
people.
there's the issue of centralization though, which is, I mean, how decentralized is DeSo? Which, by the way, I didn't bring up that argument, by the way, neither, because I think decentralization is a process. You can't launch in a decentralized fashion. So I'm a fan of the protocol. So, and Hector, I'll give Hector the mic right after, and I think he has a couple of things to say. But the decentralization aspects, it's a different argument to have on why DeSo so fast. Would you agree?
No, well, yeah, absolutely. I mean, look, I think it's really important, and actually, DeSo is arguably more decentralized on day one than things like Ethereum were. I mean, DeSo, before anybody could buy DeSo, it was running on a few dozen nodes. It's a proof of work blockchain right now, moving to proof of stake. And Coinbase, a lot of people don't know this, but Coinbase and multiple other exchanges actually won't list a layer one unless it's sufficiently decentralized. So they actually went and did a full analysis on all of the miners. Where are the miners? How many there are? They found there were hundreds of them, pretty geographically distributed. A lot of them in Canada for some reason. We don't mine DeSo. We have no idea who's mining it. It's hundreds of nodes, right? Is it as decentralized as Bitcoin or Ethereum is today? No, Bitcoin and Ethereum have tens of thousands of nodes. But I mean, compare it to even some of the more popular proof of stake blockchains like Solana, and actually it's more decentralized than that. The cheapness of storage comes from how it's engineered, how it's designed to power the use case, right? Which is actually being able to, cheaply store posts, cheaply create profiles, store images, things like that. So, yeah.
So I know, Tony, you're putting your hand up to ask questions. Before I give Tony the mic, and Hector, if you want to speak at any time, welcome to unmute or put your hand up as well. But Nadia, one other point from my end is, first I want to give you props. So most people, just again for the audience, one interesting thing about DeSo, something I hated, is people could sell their creator coin. Now, the people that did obviously made a lot of money, but they lost reputation. Others, Nadia being one of them, me not to the same extent as Nadia, so I never sold any of my creator coins for any of my projects. But any creator coins that I purchased when I thought the platform is not doing too well, I sold. Whereas Nader, something I've got great respect for, every creator coin he purchased, not only his own creator coin, which is pretty, any ethical person wouldn't sell their own creator coin, but any creator coin he was holding in his portfolio, he never sold it. So Nader, you lost a fuck ton of money, and I actually thought about how much money you lost. Like, it's insane how you went all in on this, which every entrepreneur should do, and something we don't see in the space enough. We see a lot of people raise a lot of money, or their coin does well, and suddenly they're buying Rolls Royces and shit. I'm not going to mention names. Same in the NFT market. They raise money, it's like they made a profit rather than raise money, and they owe the people that gave them money responsibility. And when basis, when for regulatory purposes, your other project, when you didn't proceed with it because there's too many hurdles from a regulatory perspective with basis, you gave all the VCs their money back. Again, something else I respect. So give you massive props there. Another thing I want to bring up, and then we're going to start a DeFi segment in a few minutes, and we've got some great minds to discuss that topic. But the last question I have for you, actually, before I ask my question, Tony, you had a couple of, hold on, let me bring up Tony and Wahid. Oh, shit, I can't bring up people. Romy, you can figure it out if you can bring up people, Tony and Wahid. That'd be great. Function, I'll let you speak before I ask my next question that was going to link to DeFi.
Yeah, I mean, I guess my main question, Nadir, is like, what's like your strategy for bringing people over to your social platform? I mean, I've been around since 2017. I've watched at least 5 to 10 social platforms attempt to launch and absolutely fail miserably, mostly because they're focused so heavily on tokenomics and other metrics that they actually miss the main point of building a social network, which is bringing people onto the platform and getting them to use it. And like there's probably like not many people that understand it as much as and as deeply as I do. It's like very, very, very challenging to incentivize users, especially beyond a financial model that will only be temporarily relevant in a bull market when price is only going up, to bring them over into a platform that will keep them engaged and meet their other incentives such as clout and attention as deeply as Twitter or some of these other social platforms. And like getting market share for something like that is not fucking easy. So I guess my question for you is like, how are you going to do that?
Yeah, man, it's a great question. How do you get traction for decentralized social apps in general, right? It's really, it's DeSo is a blockchain. You can build apps on it, and how do you get that to be popular? There's kind of two approaches. One is to make DeSo have really, really, really good developer tools, so that when someone goes to build an app that wants to mix money or social, when somebody wants to create the next social token or NFT or that kind of experience, DeSo is really easy to use to support that, right? And so, in some sense, right, uh, getting people onto DeSo is a problem of having people build on DeSo, and once that you get that ecosystem of developers building on DeSo, of which there are hundreds, maybe even thousands now, it's not really up to us to build that viral app, right? On Ethereum, you have things like Axie Infinity and obviously OpenSea that all got built on it and created that traction. DeSo is a similar situation, right? Ethereum, even 4 years in, kind of had no traction, but it had people building things that eventually got traction. So in some sense, it is a little bit of a long game of DeSo being the only blockchain that you can build storage heavy applications on, social being the most interesting, I think, but marketplaces are also a possibility. Um, and being the best and only thing at that, I think, positions us really well to kind of have that Ethereum moment where there's a lot of people building and something becomes popular. But aside from that, we also invest in new apps ourselves. And the app we're most excited about today that, or there's two apps I think that on DeSo that are very popular. Well, one is diamondapp.com, which is where it's kind of like a decentralized Twitter. I think apps like, there are others like DeSoFi, which is very exciting. It's a mobile app like Twitter, but again, all your content's decentralized, stored on chain, and it can mix money and social, which is how you get social tokens. But those apps that are just kind of like decentralized Twitter, I think will become popular as censorship increases on traditional social media. There's really no alternative to DeSo apps in terms of censorship resistance and being able to say what you want to say and not get instantly banned by whoever is the dictator of the app you're using, except for DeSo. So I have a thread on that on my Twitter, posted a few days ago about how that's going to play out. So that's the kind of decentralized Twitter. And then there's one more big bet. There's many bets on DeSo. I think, man, there's decentralized Zoom, there's decentralized Instagram. So many things are being built on DeSo that all have their own ways that they will succeed. But another bet that we're excited about is DAOs. We have a app called DAO.io, which is kind of like if you mixed kind of Reddit, Kickstarter, and Coinbase all together. DAO has a lot of extremely good kind of viral growth hacks you can do with it. We haven't done that yet, only because we're adding a lot of things to it, like DeSo stablecoin and a bunch of other things that people really, really want in DAO before we push it viral, like we did with BitClout.
Hector,
but yeah, so all that.
Hector, I see your hand up. Hector, I'll let you jump in.
Yeah, just wanted to clarify that DeSo is not unique in that sense. Like there are blockchains that handle large amounts of data. For example, Bitcoin SV handles really, really large block sizes. With what we've seen even yesterday, there's like a 4 gigabyte block, and there's even a social decentralized Twitter platform existing already called Twetch, where you can go in and onto the blockchain etch, write anything, and as like a Twitter style, and people can pay in BSV to engage. And so if you write a comment, write a Twitch and post it, other people can like it, and you will receive payment for it. So that sort of engagement already occurs on other blockchains, and it's happening today. So I don't see the unique value prop of DeSo being the only one doing that.
I think it's very reasonable to. I think it's very reasonable to be skeptical, Hector. But I think when you actually look at the numbers, so BSV is about 10 cents to store a 200 character post, and obviously you have to do some math to figure that out. And so DeSo is really about taking it to the next level, where I think a better comparison to DeSo would be something like Filecoin or Arweave. Arweave and Filecoin are about the same cost to store something as on DeSo. The difference is they don't vertically integrate storage with what you would normally be able to do with smart contracts, with computation, essentially, right? And so you can't actually build a social app using just Filecoin or Aave, whereas you can do that on DeSo. You're right, Hector. You can do that on BSV as well. And also there are people trying to do that. But again, when it comes to getting the mainstream in, I think there's multiple orders of magnitude that you have to improve on in terms of the cost before it gets to where it needs to be. And I think that's what's special. But look, I encourage competition. I think it's good to have more people trying to decentralize social media, right? That's not like, I didn't mean to say DeSo is the only one and going to be the only one forever. I'd be very happy if there's others. But yeah, just to clarify a little bit, hopefully that's helpful.
So Nadia, I want to pivot to the discussion, which is DeFi, and I'll let you kick it off, and then other speakers could jump in. Ryan, good to have you again, bro. I think the audience loves you, man. So it's glad to
Thank you,
good
man.
to have you back.
Thank you.
So the evolution of DeFi, man. So we saw DeFi 1.0 get into DeFi 2.0, 3.0, and Nadia, I think you've made a tweet or two about it as well. So do you want to start explaining to the audience, and then we'll kick it off to KK and other speakers afterwards. And speakers, put your hand up at any time. But kick it off for the audience, a simple way to explain DeFi as a concept. DeFi 1.0, 2.0, 3.0 that is being talked about now. Without getting too technical, at least not yet, as a concept, the flaws and the opportunities in the space, and anyone wanting to get involved in that question goes to all speakers. Anyone wanting to get involved in the space, because I ignored that trend. I was too busy with other things, and then got into the NFT space, ignoring DeFi. At least me personally. IBC, my incubator, did a bit of work there and invested in a few DeFi plays, but not too much. No DeFi liquidity mining, etc. Would be good to kick off with an overview of the space. Now, did you want to kick it off since we were speaking to you, and then we're getting
sure.
up as well?
Yeah, I think the question is, what is DeFi 1.0, 2.0, and hopefully 3.0, right? Right, Mario? Just to make sure.
Exactly, and the opportunities in the space. So one thing I try to bring to the audience, by the way, everyone in the audience, just remember, because I know a lot of you want to know more about the giveaway, the winners are being announced randomly on Discord. And I mentioned code words throughout the show, so you make sure you have to listen. Code word number 1 out of 3 is X, the letter X. So yeah, Nader, for the audience, they're also interested in, all right, I want to get involved in the space, and I want to come in, it's still early now, before it gets hyped up again. And I think Andy or someone mentioned how there's a lot of talks behind the scenes about DeFi, a lot of traditional money coming into DeFi, and we've seen a few announcements or moves in that space. So anyone wanting to get into the space, how to get started, that will be the next pivot after explaining it.
Yeah, absolutely. Yeah, and just a little callback. I think when I was in 2017 doing, well, actually, my first company was called Basis, which was really created the algorithmic stablecoin space, which ended up causing a lot of problems this cycle. Not Basis, that we didn't launch Basis, but Terra obviously did, and it's very much inspired by that early work we did with Basis. But at a high level, DeFi, I think 1.0 was investing in layer ones in 2017 and 18, right? Infrastructure, you wouldn't really call that DeFi, but I think a lot of people were investing in those projects in much the same way they do today. And that, maybe if you want to put that, maybe DeFi 0.0, right? So layer ones in 2017, 18. But then I think, in 2020, we got DeFi 1.0. DeFi 1.0, I think, was all about what's called lending protocols. So if you've heard of Compound or Aave, it's something where you can lock up collateral, get an interest on that collateral for locking it up, and potentially take a loan against it, right? And that enabled essentially you to get leverage on what you were doing in crypto, which was very exciting and very interesting. So Compound, Aave, MakerDAO, all enabled that, and that was a big part of what got DeFi going, DeFi 1.0 going in 2020. And then what came out of that, which is very interesting, is when Rob Leschner launched Compound, he actually gave away coins to incentivize people to lock up a collateral in his lending platform, right? So he wants to lend out, he wants to build a lending platform. He said, oh, I'll give people Compound coins, in order to lock it up. So that actually gave rise to something called yield farming, which is where a new project is launching and they're giving away coins when you lock up Ethereum or some other coin. So I would say lending, yield farming was kind of DeFi 1.0, if you wanna call it that. And I think now, or rather, like more recently, what's been happening is people have kind of been mixing NFTs and DAOs. So DAOs are kind of like uh, almost like a Kickstarter, like you want to raise money with a coin and have that entity be governed by a group. And so I think NFTs and DAOs are probably, you could say, DeFi 2.0, right? I mean, the fact that you can raise money from anyone in the internet and actually govern that with the collective that you raised money from is very interesting. And yeah, I don't know if that's a good take or not, but that's kind of what I see. And then DeFi 3.0,
Yeah.
who knows, right? Maybe it's social tokens. Like, I don't know.
Maybe I can jump in here just with a little bit
Yeah,
of
of
clarity.
course, man.
So
I was about to give you the mic.
thank you, buddy. It's Ryan again. So good to be here with everyone again. So for me, DeFi 1.0 was eliminating traditional financial institutions with smart contracts. Because if you think about specifically what a bank is or what a lender is, it's just an intermediary between two people. So if you think about a bank and a lending contract, if I'm depositing money into the bank and Mario, you're borrowing money, the bank just sits as a facilitator. So DeFi 1.0 was essentially replacing the bank with a set of smart contracts. So that was all good and well, and it worked really, really well. The problem is that what the companies needed to do was they needed to gain traction. They needed to attract users. And so how they did that was what I call DeFi 2.0. And DeFi 2.0 was the ability to create liquidity on your platform by giving people free tokens. So we called that yield farming. And how that worked was you would go to a platform like Uniswap or SushiSwap or whatever. You would put up your tokens into the liquidity pools to make the protocol bigger so more people could have a better experience on the protocol, right? And for that, what the token would do is it would mint tokens out of thin air and reward you for being a liquidity provider. Now, there's nothing unethical about that. It is essentially assuming that a number of tokens in the tokens emission pool were reserved for marketing, for getting traction on the protocol. And DeFi 2.0 was when they printed these tokens and gave them to users of the network. Problem is that what DeFi 2.0 created was it created a whole lot of free money and what we call yield locusts. And the yield locusts used to jump around from DeFi farm to DeFi farm to DeFi farm wherever they got the best yields. And the problem is that instead of the mechanism serving people correctly, and that is by attracting more users to the platform to stay and use the platform, we got the locusts. And the locusts started to come get the yield, dump the tokens, move on, come get the yield, dump the tokens, and move on. So that model didn't really work. And so now what we're seeing is what I call DeFi 3.0, and there's a hashtag that's going around. It's called hashtag real yield. And real yield is effectively a hashtag or a term that we're using now to say there are some platforms that reward you as a percentage of fees generated on the protocol. So they don't do this by issuing new tokens out of thin air and giving you those tokens, but they rather give you a percentage of the revenue generated, which is the real yield that the protocol is generating. And the reason why that's so much better is because it's sustainable yield. It's not printing money out of thin air. It's absolutely sustainable yield. And there's a whole narrative and there's a whole bunch of tokens that do this. GMX is one of them. Kujira is another one. And there are a whole lot of others that do it. I won't list them all here. But that is a much more sustainable DeFi type protocol. Now, a lot of people have been saying that DeFi is dead. And specifically, they reference what happened with Terra Luna and the whole ecosystem collapse. Funny enough, today I read the newsletter that's written by Pantera. Pantera is one of the biggest and most successful funds in the space. And the one thing that they highlight is the one correct thing, and that is throughout this entire state of liquidations, which was an absolute black swan event, the likes of which crypto has never seen, the size of the Enron collapse in traditional markets. The DeFi protocols all worked exactly how they were supposed to work because they were managed by smart contracts. What didn't work were the centralized finance protocols, Voyager, Celsius, all of the others. I'm not going to list each and every one of them because there were humans involved and they were not built using smart contracts. And you can see that what happened was every single one of them got themselves into bad debt situations and liquidity crises. And in fact, most of them are actually insolvent. Why? Because there was a human involved. The decision wasn't made by an algorithm or a smart contract. And if that was the case, then maybe they wouldn't be insolvent today. Maybe they would have just liquidated the participants as and when they should have been liquidated, and today we wouldn't have any problems. So I think DeFi is very much alive and kicking. We have a new narrative called Real Yield, which is, in my opinion, DeFi 3.0. At the same time, a lot of people are declaring DeFi dead, but anyone that looks under the hood will tell you that every single DeFi, or most DeFi protocols, I won't say every single one, but most DeFi protocols are doing exactly what they should be doing. And I think right now, I'm of the opinion it's a great time to be investing in DeFi. And if you read the Pantera newsletter, which is available free on the web to anyone who wants it, you'll read that Dan Moorhead says that he thinks that that's the biggest narrative that they should be investing. And the number two narrative is NFTs and metaverse.
I second that. I actually agree with you, Ran. DeFi is far from being dead, and I don't know if I should jump in now, but I just wanted
Yeah,
to
of course you
touch
can.
on. Yeah. So I just wanted to touch on what Nader was talking about diamond handing on his project Desos. So a lot of people would view that perspective as, oh my God, why didn't you sell at the top like everybody else? So the conviction that he has for his platform, like a lot of builders in the space, I think that's the best approach, in my opinion. So, coming from a traditional finance and banking system background, uh, DeFi to me being cheaper, faster, with no governing body right now, and a lot of the people that we are actually engaging with behind the scenes are in traditional finance. So what the space doesn't see right now, they don't see Wall Street making deals in the back end to try and get into crypto. Everybody's busy crying about, okay, DeFi is dead. Okay, this algorithmic stable coin is done and we'll never get back up. But I'm super bullish. I'm super bullish because of the QE and printing more money by US government, which increases cash flow into the economy. In turn, makes people want to buy crypto. But I stand corrected.
Is anyone like, is there, Kate, I know you have your hand up, so I'll give you the mic right after, but is there any, like, my first question is, does real yield really solve the Ponzi structure of DeFi? One of the issues that DeFi, the yield,
It
it
does.
just,
It does, because the actual project has to, number one, be generating revenue. Uh, they can't give they can't give to the community from uh, token emissions. That's number one. And number three, the actual project needs to have product market fit, which I think is like the right thing. Like DeFi is actually moving into the right direction with this, because the business
Yep.
has to actually generate revenue for it to actually be able to do real yield properly. As Rand said, there's a lot of projects right now currently stating that they are hashtag real yield, but it's actually not the case. And you have to do your own research. You need to actually hop onto platforms like Token Terminal to check the revenue stats of the project itself, and then compare the revenues to token emissions, and then you're gonna know if it's actually real yield or not. So there's
Yeah.
a very simple formula where you basically compare the two, and then you're able to tell if the project's actually able to offer it sustainably. The only issue that I'm seeing is that I get, when you're dealing with revenue, right? The basic accounting equation, you're not actually able to see operating expenses. So you're still sort of guessing unless the project like publicly discloses that. But that's like the only point of confusion that I had myself.
I think what I'll do, I mean, for my show, I didn't come to show my show, but I think what I'll do next week is actually do a show on real yield. Just and I'll look for like 10 projects that are actually generating real yield, and I'll show how they're generating the yield, because I think it is the next big narrative. I'd rather be investing in a project that's giving me real yield than emitting tokens. And again, I said there's nothing wrong with emitting tokens. But when you create a lot of money out of thin air, I kind of think that that's what created the last bull market. So if you think about what created the last bull market arguably started around July 2020, July, August 2020. That was when the first signs of life came after a very long crypto winter that we had. And if you look at what started then, at the same time, what you'll see is yield farming also started. So what actually happened was you kind of started printing crypto money out of thin air because all it was just token emissions. And that made people feel very rich. I mean, I remember in September or October, I can't remember the exact dates, but I was mining sashimi. First, I started mining sushi, then I started mining sashimi. And I remember the APYs were absolutely insane. Like it was like I was earning like, I don't know, 10,000% in the beginning. Made me feel very rich. And what I would do is I'd cash out some of my emissions from pickle and yam and all those things. And that made me rich in crypto terms. And I take that money and I'd reinvest it in many other things. And I think that that is what actually started the crypto bull market. It was a whole lot of these token emissions, token emissions by protocols. It was kind of like stimulus, but for crypto.
Peter,
Now we're paying the price of the stimulus for crypto, and I think we're about to start paying the price of the stimulus for the economy. If you know what I mean.
that's a good way to put it. Peter, I know you have your hand up, that Wahid. Go ahead, Peter.
Thanks, Mario. Yeah, the concept of real yield is very important because without it, then DeFi is strictly a zero-sum game. Money goes in when people buy, and money goes out when people sell, and there's no real revolutionary aspect there because it's just pluses and negatives that all add up to zero. That's what zero-sum means. So a means of generating some kind of external value is essential if we're looking at DeFi protocols for the long term. Now, there is a kind of dirty little secret involved here, and it kind of dovetails with the diamond hands discussion. Studies show that 90% of people, retail investors and traders who try to trade end up losing money over time. So a lot of DeFi protocols can kind of mask their zero sum nature because traders are simply leaving liquidity in the market. And this is relevant to another thing. When you're looking at which DeFi protocols to potentially purchase and hold, make sure that the liquidity to market cap ratio is healthy. Make sure that one token represents pretty much close to what it should. If it does not, then we end up in a situation where if there is a strange bull run, one or two people, the top wallets, can sell the very top, and then kind of anything that was sustainable for the protocol, whether it's real yield or not, goes out the door entirely. So there are optimal ways for projects to launch. There are optimal statistics and optimal numbers for us to look at, and liquidity to market cap is just one of them. The only concern I have about real yield is when we start talking about profits of a particular entity. And I think most DeFi protocols are probably backed by some kind of corporate entity. When the profits of that centralized institution are funneled into a liquidity pool, I think you do run into some regulatory challenges, at least in the United States.
I think the minute that you bring in a corporation that's centralized at any point, then it's not DeFi. So you can call it hashtag DeFi, hashtag real yield. It's DeFi and it's not real yield. And that's garbage. And to me, to be honest, I'll never invest in a protocol where I know there's a centralized company making any kind of decision, because there's always a conflict between the shareholders of a centralized company and the open source protocol. So to me, there's got to be a clear divide. And the minute that there's a centralized company owning it, don't jump on the DeFi train. Then get onto a different train. It's called CeFi. Get onto the CeFi train.
I think, of course, it's important that the protocol representing the tokens be totally separate from any centralized entity. But I think it's a bit of an oversimplification to say that any corporate entity means that there can be no decentralization whatsoever. If the token protocol itself is completely owned by the community,
You're muted, I think, Peter.
Yeah, I think Twitter just muted all of us.
Oh, shit.
Thank you.
Peter, you're muted. Yeah, go ahead.
Cool.
What the fuck's going on?
It happened
Peter?
again, didn't it? Yeah.
Yeah, it did. Go ahead, man.
Thank you so much.
You're not allowed to talk about cutting up the centralized finances, because then Twitter mutes you guys.
Could be. But so again, a corporate entity can often be a red flag, especially if there's no efforts to make any separation between the protocol and whatever the corporate entity is doing on the side. But if there are clear demarcations,
Ah, this is fucked up. It just keeps saying everyone's muted. It's from my end. It keeps muting everyone from my end without me touching the phone. So I'll see what I'll do. Let me try to get out of. You gotta unmute Peter. Let me unmute everyone, and let me try to get out of the app so it stops doing it. I'm out of
There
the
we
app.
go.
Can you see? Perfect. All right, cool. I'm
Peter,
gonna be out
Peter,
of the.
I think I heard what you said about the fact that if there's clear lines of separation between the centralized entity and the token. And I have a question for you, and I'm really not being facetious here. I really want to know if there are examples like this. But are there any examples of a entity where there is a centralized entity and there is a token, and the token has been a huge success without kind of a controversy as to where the revenue is being generated or whether the how the pie is being split by the token holders and the shareholders? My biggest my biggest red flag is, for example, XRP and Ripple. You know, where you got a centralized entity selling decentralized tokens, which is for me is a no-go zone. But I'm interested to know if there are any other hybrid examples like the one you mentioned.
No, I
Well,
would say that.
yeah. So one example I can chip in, I think ENS has done this well. For example, they have an ENS foundation that manages various trademarks and site hosting and whatnot. But the revenue is all generally generated on chain and whatnot. So that's one example.
Foundation, then it's just, I mean, a foundation is the same as a DAO. It just manages the tokens of the revenue on behalf of the share of the token holders or of the community. That's cool. But what I'm again just unless we're not aligned, um, I don't like token structures where there's a centralized entity which is not a non-profit foundation, and there is a token. You got to choose. You either want to be one or you want to be the other, but you can't be both. When it comes to foundations, I mean, there's an Ethereum foundation which was very, very successful in the old days in building attraction. Today, less important in the Ethereum ecosystem, but very instrumental. But all they did was they were never a for profit. They were always a not for profit. They were always giving out grants. They were building the ecosystem, etc.
Ron, thank you for your insight, by the way. And I think you and I are slightly, we're not on the same exact philosophical page, but it's still a good discussion. Since you asked me the question, I'm not here to shill, but I do work for a token protocol called Everrise, where there is a corporate entity, but the independence of the token protocol itself is extremely important. And the philosophy there is that there does need to be innovation and there do need to be solutions that get built out, and there will need to be improvements to the protocol over time. And also, there is kind of an affiliate link. Like the token protocol can stay totally separate from the centralized entity, which is building out solutions that complement rather than supplement the token itself. So, if you can manage to lock the token behind a smart contract locker, which Everrise has done, then you start getting into a world where you are addressing some of these concerns. Now, if you do have the philosophical position where total decentralization is necessary and any centralized entity is shady, then I agree. Some of these protocols, including Everrise, may not be for you. But to me, the main innovation of decentralized finance starts and ends with self custody. And when you have a token that allows for that entirely, and there are no inflationary mints, and the token protocol can work side by side as a community with a centralized entity, in my view, you might start looking at a place where real yield can come in a responsible manner. If I agree, XRP and Ripple Inc. have had a strained relationship, and if the corporate entity exists strictly to dump its tokens on its holders, then we have a serious problem. Now, of course, then you say, well, aren't we all just trusting the corporate entity? Um, yes, in some ways. And some people say that trustless systems are the be all and end all, and that anytime you use the word trust, that's a bad thing. I like to live in a world where I can still go with my gut from time to time and say, like, okay, I do trust some people because I like what they're building. I find them innovative, and we're all learning together. But I understand that's not for everybody either.
What I saw. I mean, I kind of like that build. I got to be honest. Um, and I was always skeptical about decentralized or I don't know centralized entities operating in a decentralized environment. And I think for me, the cherry on top was this recent state of liquidations. And again, I don't know anything about the Everrise token, so this may be an exception. But what we saw is again that every single one of them failed. They failed, and as a result, the retail consumer who thought they were investing in decentralized assets ended up centralizing their assets again behind a corporate. And right now we have a massive hole. I think we're $2.8 billion in Celsius and a couple of $1 billion in Voyager, and The list goes on and on and on. And for me, that was
Oh
like
yeah.
the nail. Yeah, for me, that was the nail on top, the nail in the coffin.
Well, the
The,
reason,
the
sorry to cut
DeFi
you off,
protocols
the reason,
operated perfectly.
yeah, the reason those failed though is because they violated the principle of self custody. They said, "Oh, let us hold that stuff for a minute, and we promise you some money back." If a token is ever saying, "Let us hold your capital and we'll give you more back," that's not the self custody that DeFi is all about, and that's not going to fly with me or I think anybody up here.
Well, just to chime in here, I think something very interesting is it sounds like people are kind of debating DeFi where you put your money in and it's still kind of self-custody or it's managed by a smart contract versus where you put your money in and the centralized entity is managing it. And something that I think nobody really talks about and we're not discussing here is the fact that, yes, Voyager and Celsius failed, but the yields that you can offer customers when you take custody of the funds and invest them are can be much higher than what you can get in the pure smart contract world because you can actually take that money and do productive things with it. For example, banks, will take your money and lend it to people to buy homes. By the way, I'm not in favor of any approach. I am, but I do think it is important. You look at the pure DeFi yields, and they're usually much worse than what the centralized entities are offering. And I think that we can't ignore that there's some advantage, or rather it's a trade-off, right? It's not a
I'd
black
point
and
out
white.
here that a lot of the advertised DeFi yields are because they were lying, not because they had higher yields. They pretended they pretended to be investing in products that offered 10, 15, 20% APY, but behind the scenes they were actually just bankrupt. So they had access to the same yields as everybody else. They just lied about it. So I don't know that CFI I don't know that custodial CFI yields are actually higher. I think they just lie more often or subsidize it with their own coin or something.
They're good at marketing. Let's just say they're good at marketing. Self custody is everything, and that's DeFi.
Wahid, you've come from the traditional space. What's your take on DeFi? Have you even looked into it? Does it interest you at
No,
all?
absolutely.
Do you believe?
I mean, absolutely. So, what we're talking about is a problem that we're trying to solve, which is basically giving capital to people who need it and people who have it wanting to earn a yield on it. Okay, that does not just lie in financial services and banking, tokens, etc. So, and not to talk about my project, but essentially, we came from the traditional world, Web 2.0, where we were open source design system for independent fashion designers to come on, and we help get them funding, and we fund them, and they create great things, and we sell them on Farfetch, yada yada yada, put them on the metaverse, give them access to materials, etc. That is centralized. Now, we thought the best way to do this, and the gentleman that spoke, Rand said, you ought to go completely decentralized. There's a step change. It takes baby steps, but you get there. And in a decentralized DeFi ecosystem within FaithTribe, for instance, what are we doing? We don't want to be an arbiter of which designer gets to do what. So designers come to our platform and they can choose to borrow token. And when they borrow the token, they can mint their NFTs, they can order leather and knitwear and manufacturing and get on the factories. But now they're borrowing. Now, I don't want them to borrow from me. I don't want to have to decide if we're going to actually sponsor this person. So they're borrowing token from a DeFi ecosystem where other people who own FaithTribe are depositing their token. Now, it is the DAO governance structure that decides which designer gets the sponsorship and which doesn't. Okay, that is exactly what the other gentleman mentioned, which is lack of trust in a centralized structure. Because and I can tell you, in fashion, it's even worse than in banking. It's rigged. It's personalities. This woman looks cute and not, and this guy is great and not, and it's horrible, right? And so actually, DeFi in a normal business, Mario, that is not Celsius or Voyager and all this bullshit, like a normal business where a designer wants to come on and wants a shot at making a sketch and maybe selling products one day. That funding in a DeFi sense has to be decided by a governance structure that is 100% independent if you want it to have credibility. And so that's a real life example, Mario, of DeFi applied in the real world. and the yields are yield. They're not Ponzi. The yield comes from the actual profit margin of the said designers that are being sponsored.
Tone, you've seen the evolution of DeFi since the early days, and as someone's really focused on Bitcoin, other than the argument of it's not DeFi unless on a decentralized blockchain, which is a very fair argument and a separate argument. What's been the take of you and other people in the Bitcoin camp on the trend of DeFi 1.0, 2.0, 3.0, and have you really spent time looking into it?
Can you guys hear me okay? I'm at the airport. It's always hard to get spaces working with earbuds.
Yeah, man, it's really loud on your end. Really, really loud. We can hear you, but it's just really a lot of
Any
background
minute now, Tone will be on his own private jet and it'll be very quiet there.
Yeah. Well, wait, it's actually not that loud around here, so I'm not sure what the background noise is coming from.
I saw so I don't know whether they're using AirPods or headphones, or just maybe try to take off Bluetooth and just put it on your mouth. That might help, just like the old school, 1995 way.
No, that's hard because then the whole airport is gonna hear your conversation. So this may not work. No, I'm using Bose like the noise canceling headphones.
Yeah. Mario,
That's really.
I'm gonna jump off. Thanks for having me this week. I'll see you guys again next week.
Oh,
I
good,
gotta
bro. Thanks
jump
a lot
off
for coming
too.
on, man.
Thank you so much,
Right.
guys. Thanks for having us.
Appreciate you, Nader. Thanks a lot, man. So yeah, Tone, while I know the mic is not great, so I'll let you in a short way just give your thoughts on the DeFi trend and what the Bitcoin camp thinks of it. The louder you speak, I think the better we'll hear you.
Okay. All right. I have to. Okay. So how's this? Is this better?
About the same, but we can understand what you're saying.
All right. I mean, I guess I could put it on regular.
Twitter's working for me. I'm gonna leave and come back.
Right. So KK is glitching. He'll be back. Yeah. Go ahead, Tone.
All right. Look, I took off the. Oh, yeah, now it is kind of loud here. I took off the earbuds. Like I can speak, but like.
It's much better, man. Yeah, it's much better now.
Okay, but like the thing is, again, because I'm on the airport and I have you on speaker, so I'll get to speak. I get to piss off 2,000 people, and then you won't get to say much because it'll be harder for me to hear you. Basically, because I'm at the airport and I have everybody on speaker right now. So.
All right. Cool. Sounds good.
I heard a little bit. Like I wish I come in here and I actually get to listen to a bunch of people first before giving my comments. I briefly heard the comment on Ripple. I mean, the Ripple token was an outright scam from the start, and the only business Ripple Labs is in is selling their unlicensed, unregistered security token. And if the SEC wasn't grossly incompetent, this would have already been, established. But because the SEC is grossly incompetent, there is a very high probability that Ripple is actually going to win. And then every single token, from Ethereum to 98% of everything else, can continue being an unlicensed, unregistered security because there will be no global regulator that could actually do anything about it. Is that good or bad? Debatable. I can actually debate both sides, whether that's good or bad. I slightly lean towards the bad, but like I said, I can easily argue both sides. But that's a completely different discussion. The whole DeFi stuff, I mean, everything is DeFi, everything is decentralized in name only. So you're right, Mario. My view is there is a technical side to it, and then there is the economic, social side to all of these DeFi projects. The technical side is really not that debatable in my mind. The only project that is most and perhaps only decentralized is Bitcoin. So if you're not building on top of Bitcoin, then your project is completely centralized based on the platform you are building it on. But then your project itself is potentially centralized. And I'm saying potentially. There are a few projects that think they are decentralized, and I will, again, argue with them that they're not. And if you do build a completely decentralized project on top of a centralized blockchain, that doesn't really do you any good. That actually gets you into a shit ton of trouble, and every algorithmic stablecoin will eventually learn the problem with that if they don't implode based on their own merits first. So I personally have not seen any innovation in this DeFi space. That's me. That's my opinion. It's all the same. Everything that's been done 10 years ago, 20 years ago, 30 years ago. The only difference is it's just easier to move data around because of technology just getting a little more advanced. But there really is no innovation. Like Celsius had zero innovation. There was no innovation at Celsius. They had an unlicensed, unregistered security, in my opinion, the Celsius token. They were holding a lot of money in the Celsius token. They were holding people in the Celsius token, and they were running a Ponzi. They were basically taking money. They were giving out a few loans, but they were basically profiting from the rise of their own token in order to pay people a yield. And every single one of these things that it pays people some kind of a yield. Where is this yield coming from? 99% of the time, the yield comes from the creation of their own token. I would love to hear a counter argument. I would love to see an example of a DeFi project that doesn't actually have their own token that makes them a lot of money. This is why I think BlockFi is one of the more ethical and honest companies in the space. And BlockFi had a bunch of arbitrage where they were able to generate a lot of yield. That a lot of that arbitrage had to do with Grayscale and GBTC premium. Maybe they were giving out good loans, but now that BlockFi no longer has enormous arbitrage to generate their own yield in order to pay people a fraction of that yield, though it was a big fraction of that yield. Like they're kind of they got completely screwed, and that's why they got bought out by FTX. And FTX did not buy them for their business; they bought them for their client list. They bought them for. I mean, this happened to me and my companies back on Wall Street as well. Eventually, you buy out the company for some of their intellectual property, their client list, their list of high net worth people, and you convert them to your own business. All of these DeFi projects, if your DeFi project has its own token, then that is the business model. There is no other business model. I have not seen one. I've seen a lot of amazing stories. I've seen a lot of hype, but I have not seen a single business model uh, other than our own token price goes up, we have a lot of money, we can do this and that, and we can provide our people a lot of yield. And most of the time, they find gimmicks to have people hold and stake their own token. It's like, oh, you pay a lower fee if you use our own token. To me, these are just gimmicks in order to pump the token. There is very few examples of tokens that don't generate this kind of speculative premium. One of the examples was an old token called Blockchain Capital Token. I think they did something weird with it, but the original white paper had a very honest creation of a token. The token was going to be fully backed by VC investment, and it was a legitimate VC. It wasn't like a former car salesman that decided to be a VC because he can pump a token. It was an actual experienced VC company, and they created this token as a fraction of their $1 million raise or $10 million raise. Each token was $1. Each dollar that backs the token was invested as part of the VC, and then the token's value is that how is that dollar performing, plus a little bit of premium of ease of transfer of the token, the fact that it's on a blockchain, a little bit of hype, but there's absolutely no reason why that token should be worth 8 times the underlying dollar, unless the VC has performed an 8x investment thesis. And the other example is something like a token for what do you call it? Oh man, like not an entry fee, but like a man, uh, like a subscription to something. I forgot what the name of that is. So you have to have a token in order to, but again, you're just using the latest technology for ease of use, not speculation. So like a membership token, for example, right? Like we've had memberships pre-blockchain.
So in other words, like you don't really need blockchain for that. I'm gonna let Fubar jump in quickly, Tone, because they had hand up, and then I'll introduce a special guest. But Fubar, before I introduce a special guest, I'll let you and Peter just respond to Tone's points. Again, focusing on the utility of DeFi as a technology, and maybe you can touch on real yield again, because we've got a few guests that jumped in that weren't there for that discussion.
Absolutely. And I'd like to point out, I think, a clever trick that seems to be keep getting pulled over and over again. I keep hearing DeFi has failed. Look at Celsius. And this seems to be a complete misunderstanding of what DeFi is. Celsius is not DeFi. It never was. It pretended to be, but I'm not sure how people got fooled by that, frankly. DeFi
Did it drop out for me? Anyone else? Oh, it dropped out. Feedback dropped out.
Yeah, it looks like he
So
left the chat, but I'll say
No.
I don't know if this is what he was getting to, but the funny thing about Celsius was like they paid off their Aave loans before they paid out people. So it's like that just shows, they needed to pay off their DeFi stuff before centralized.
Yeah, so it just shows that the flaw of CeFi, and having human greed interfere. Whereas if it's a protocol, you kind of cover for that issue. I'm trying to fix your issue there, Fubar. So while fixing that, I'll give Peter the mic, and now Richard just jumped in the house. A lot of people were DMing to have Richard come and discuss his take on DeFi. Peter, I'll let you take the mic.
Thanks, Mario. Yeah, I mean, I don't disagree that Bitcoin is probably the only fully decentralized peer-to-peer payment mechanism right now. And if that's true, we can all just go home. But I think the fact is that people like innovation and they like options and they like communities. And so over time, I mean, I don't think DeFi is going away. It just becomes a question then of which communities can become minimally viable. And I also don't disagree that many DeFi protocols are scams and are running through money for no reason. But if you can organize a community around an idea, if you can organize a community around a reason to exist, then it becomes that minimally viable community where the participants actually engage with it responsibly. Now, this also requires some trust. I'm not a trustless maximalist, so I understand. Like, you have to check the vibe of that community. You have to decide whether its longevity is a serious proposition. But if it is, then the self custody kind of gets its power. Then we kind of say, like someone said before, that Celsius made sense because it's able to amalgamate capital and therefore generate a higher yield. But then it's too centralized. So in my view, successful DeFi protocols with a vision towards longevity do have a chance at achieving that amalgamation of capital in a way that it can perform equally well to, or at least nearly well, as centralized institutions like banks. I liken it to the idea of a credit union a lot. The armed services in the United States have them. The Navy Credit Union is a good example. These are financial institutions that are able to interact internally only with themselves and offer preferable interest rates and better yields than traditional savings accounts. Why? Because they're organized around ideas. They're organized, around people who want to be together. And it sounds a little crunchy, but considering the fact that the cat is out of the bag here with DeFi, and I think we can all agree, like, these smart contracts are not going to suddenly stop getting launched. It then becomes a race to see which communities are minimally viable, which ones are going to be around for decades, and do your own research and good luck.
Hey, Peter, can you actually define DeFi? That's another thing. Maybe a couple of other people can as well. Can you actually define what DeFi is and give 3 examples? Because you started your conversation saying a bunch of Celsius was pretending to be DeFi. Can you provide like 3 concrete, like define it first and then provide 3 concrete examples that are, viable right now in DeFi?
Sure.
I can do it.
Well, I'll give a shot. You can go after Richard because the question was directly asked to me.
I can add 2 more too.
Okay. Well,
So Peter, I'll let you go. Peter, I'll let you go, and I'll let Richard go, and I'll let Crypto Mom go. Go ahead, Peter.
I may be short on examples, but on definitions, I am not short. First of all, finance is literally the efficient allocation of capital. We can just start there. And then decentralized, on top of that, means that whoever is controlling all that capital doesn't have the unilateral power to deploy it. With DeFi protocols that exist in liquidity pools, that power is decentralized over the token holders. Now, if there's a whale holding 99% of the protocol, then of course that's not decentralized. But if you have a means of efficiently allocating capital among thousands or millions of people, then you kind of are passing a couple of check marks in terms of decentralized finance. So any protocol where there is stable liquidity, relative to the market cap size, and where there's not overbearing whale dominance, and where there is not a centralized entity, that is capable of dumping trillions and trillions of tokens, or more relevantly, 99% of the supply on the market, then you're kind of getting there. In terms of examples, it sounds like everybody else has some ideas, so I'll defer to those folks. But thank you for the question.
Richard, do you want to go next?
Hey, everybody, how's it going? I hope you're all doing well out there.
Good to have you back, man.
My pleasure.
Moving away from, without having the Bitcoin debate, you wanted to give a few examples of DeFi, and then if you can also give an overview again, because we had a lot of people join in the last 20, 30 minutes after we define DeFi 1.0 versus 2.0 versus what everyone's talking about, which is DeFi 3.0. If you can also define that, that would be great.
I think you guys are wasting a lot of time naming things instead of understanding the things. You're eating a lot of overhead to just assign things you're going to argue about later. So cryptocurrency was invented to remove counterparty risk. Satoshi in the white paper, or rather in the Genesis block, quotes that the banks are being bailed out by the governments again. And so you have socialized losses, but privatized gains. And so Bitcoin's birth was to get rid of the counterparty risk. That is, somebody just printing money forever, making yours worth nothing. And so these are the world's most expensive, slowest databases. They're garbage. They have no throughput. They're buggy. You have to check to see whether your transaction got orphaned off or forked off or didn't get put through because a block was full, or, there's all types of horror. So we put up with that horror because we have to, in order to have censorship resistance. And so the only thing any blockchain is useful for is censorship resistance, period. If your project doesn't need censorship resistance, go run it on AWS like everyone else does. Amazon is 50% of all the commerce in the United States and the internet, and they don't use blockchain at all. They'll sell it to you, but they don't use it, and they don't need it, and they don't want it because they don't have censorship problems. So, that idea, that concept basically just eliminates the majority of projects in crypto, right? They're just they're just basically virtual gambling. They're virtual roulette wheels, but instead of having numbers on the roulette wheel, you have ticker symbols for coins. So if it is the case that the only thing that blockchains are good for is censorship resistance, and that they only exist for one useful purpose, which is to remove counterparty risk, then I will list you some places where they successfully perform that function in ways that we've never seen before. So let's take Coinbase. Coinbase got sued by the government because some of its employees were front-running listings. They knew the listings were going to occur. They bought up the tokens. Then the listings would happen, and then they'd dump the tokens and make a lot of money. Well, you don't have that problem on Uniswap because there's no central Uniswap database of what's going to be listed next. And so there's no insiders that get to front run that information. There's also no team of people at Uniswap that decides whether you get to be listed or not. And I can assure you, there's a team of lawyers that sit at Coinbase to decide whether you get listed or not. And that is the opposite of why cryptocurrency was invented, because that is a middleman. That is someone's D who you have to suck in order to participate in the market. And markets work better when there's less friction, less overhead, less middlemen, less counterparty risk. And so what DeFi and cryptocurrency did was gave people the miracle of being able to control their own keys, control their own finance, never have to beg someone else for your money. And they threw it right in the garbage. They gave their keys to other people. And then they become one of the headlines. And so if you go on my Twitter and you go back years ago, 3-4 years ago, you're going to be see me saying, you don't have to be one of the headlines. Stop giving other people your coins. Stop giving your money to other people that say they're going to give you yield. You're going to be one of these headlines when they get exploited or run away with all the money. But people don't listen. And so they lose all their money. So let me give you some examples of things which do not have admin keys, do not have counterparty risk. They do have smart contract risk. So you need to make sure that the smart contract operates well, is well audited. And that's the best you can do as far as software goes. One of the funny things I hear in cryptocurrency is people say, and it's a nice soundbite, I use it myself, what do you trust more, men or math? And that one sounds better than what do you trust more, men or code? because anyone that's ever actually done software development, it's like, I don't know about that code. A little harder to trust. Math's a little bit easier to trust. Code is a lot harder to trust, which is why you see so many people with hacked and destroyed projects. So here's some specific instances of miraculous, glorious, decentralized finance really killing it in the real world. You may have heard of Uniswap. I made it popular on my back. I promoted Uniswap more than their founder did. So Hayden Adams versus me, I did a lot more to promote Uniswap than he did. And my project, Hex, which is the world's first time deposit, another DeFi thing, which also has no admin keys and has had flawless operation for 1,000 days, it made Uniswap popular and was a majority of volume and liquidity on that platform for a month or two in the very beginning. So,
but Richard, just quickly about Uniswap, wouldn't you be concerned? It's decentralized. There are no regulators. So while there's insider trading on Coinbase and other counterparty risk, regulators, do a better job than a decentralized protocol at avoiding
no,
scams.
they don't.
Most scams.
No, they don't.
Most scams do launch on a DEX.
No, but like, okay. First of all, okay. The government sucks at everything that it does. If you look around your house right now, everyone listening, look around your house and point to things that you like, and then see whether they were created by governments or companies.
Traffic lights.
Created by companies. They're created by companies every fucking time.
They're installed
crazy.
I mean, I agree that the government can go way out of bounds, but they do things like, pave roads. I mean, the government doesn't create the asphalt, but somebody's got to approve lying down.
So
are you kidding right now? Surely you're kidding. I said, look around your room and point to stuff that the government made, and you're like, no, I'm going to go outside to the road. Like, bro, what do you think before the U.S. got? Like, do you think they didn't have roads before the government?
Well,
they did.
I have a window. I looked out of it. I'm sorry, I didn't understand the question.
Okay.
But Richard, if you go to countries that have imperfect governments, they're obviously a much worse place to live than countries that have more powerful governments.
The stuff that you guys are saying is so unbelievably stupid. It's hurting me, and I'm going to prove to you how stupid what you're saying is. It's abysmally stupid. Okay. Your thesis is that government good, private business bad. So let's extend that idea.
No.
Okay. You go to the mall, and the only things allowed for sale are the shit the government says can be allowed for sale. Are you crazy? That's a terrible idea. I mean, they tried that in communist Russia.
Richard, that's a strawman argument. The argument here by Peter, even though I think it could be conveyed better, is that there are public goods which governments can fulfill. I'm a libertarian like you, and I do agree.
What are you talking about? No one's talking about public goods. They're trying to put the government in control of what you can buy on the internet. In this case, magical tokens.
Look,
that's their thesis.
Peter, look, when you asked your question about what is around you, it's produced by the government that you like. I think that's what Peter was answering. That's a clarification.
It was a bit of a simplification on my part, but perhaps you can refine your question. I heard the question to be look around.
Forgive me for asking what I thought was a rhetorical question. I will just make the statement myself. No one needs to answer. All the good stuff that you like in your life, the things that you put on your body, the cars that you drive, the food that you eat, the house that you stay in, was created by a company. All of it. Every good thing in your life, except for the street lights. I guess he's for Halloween dressing up like a light post or something. Every single thing in your life that's good was created by a company. Period. And when you allow the government to decide what people are allowed to buy or not, you completely destroy capitalism, 100%. And what you replace it with is called communism, literally. Like you guys are literally arguing for communism instead of the free market.
Richard, that's
just quickly, Tony. Just quick question,
Hold on. How did we get from me saying Uniswap is good and remove counterparty risk to now I have to defend capitalism? This doesn't make any sense. Okay.
Yeah, so Richard,
it doesn't make any sense.
My question to you is: would you trust a company based in the US or based in, let's say,
no.
some African country or Russian?
You guys are screwing this up right now. Okay. You asked me good examples of decentralized finance actually making a difference in the world. I told you Uniswap, and you started getting me into capitalism versus communism. Nope, I'm not falling for it. The question is, what is DeFi doing good now? DYDX lets you do margin trading now, okay? You can take on leverage now at a decentralized exchange. And if they decide to run away with the money, you can go write your own front end, try and get your money back out before the liquidation bot gets you. That's still better than what you get with these centralized exchanges. Okay. If you decide to jack people for their money, you still have what do you call it? It's Tornado Cash. Tether decided they weren't going to seize the funds from Tornado Cash. USDC decided they weren't going to blacklist the funds from Tornado Cash. You still have Tornado Cash. I feel sorry for the hackers that hacked on the Bitcoin side because they got caught for basically zero knowledge proofs are superior to ring signatures. And so currently the state of the art in anonymity and privacy is still Tornado Cash, right? So Tornado Cash is awesome decentralized finance tool. Uniswap is an awesome decentralized finance tool. They both have no admin keys. They both have decentralized front ends and IPFS. They're both awesome as hell. I suggest everyone use them, except I'm not sure about Tornado Cash now. Like if it's on the sanctions list, you should be very careful about that. And these things work awesome today. And not to show my own project, but my thing's been working perfect for 1,000 days and directly lets you mint yield and is still up 250x versus Bitcoin, 70x versus Ethereum. I don't know what you want. And 1,000x versus the dollar.
So the point I was making about Uniswap, and let me know if you disagree, there are still imperfections, and I'm a supporter of DeFi. I'm on the same side as you, but I'm trying to play devil's advocate. Isn't there flaws in DeFi that are still being worked on? As a concept, it makes sense. But again, the point of Uniswap, the
I don't
scams
know what
being
you
launched
guys
on
are
Uniswap.
talking about. What does that have to do with technology? People are performing scams with paper and pen and cars and electricity too. Like in what planet do you start removing technologies from people because criminals use them? Criminals speak language too. Let's get rid of language. It's the stupidest thing I've ever heard of. Technology is good for humanity as long as the humans are by and large good. If the humans are by and large bad, then you can make the argument that technology is bad. But in fact, the majority of humans are good people trying to do good things, and therefore technology helps all of those people. And when you try and start crippling the criminals by crippling the technology, you do much greater harm preemptively to all the people. Look at it this way: what's the Treasury's Department like job? Like, why are they censoring the North Korean people? Because they're trying to get them to stop scamming. Hey, stop scamming North Koreans. Stop robbing people. Stop doing malware attacks or whatever you're doing to try and generate revenue. And so what did they do? They preemptively screwed everyone else. They did worse to everyone else than the North Koreans did. They caused more harm than the North Koreans did by attacking a tool that every honest business needs to actually use. Every honest business needs to hide the prices it pays its suppliers from its customers. It needs to hide the values it pays its employees from its other employees. It needs to hide its customer list. You cannot do any of those things without mixing, period. Fucking period. Sorry for cursing. So,
what's your? Go ahead.
You need mixing. You need mixing for capitalism. You need Uniswap for capitalism. You need people to be able to list things for sale with no counterparty risk, with no middlemen. You don't have to beg Coinbase to list you. It's such amazing innovation is working so well. I don't know how it's not obvious. Like this is, I would say that Uniswap might be a more important invention than Bitcoin, literally, because one just attempted to do currency. Yeah, Uniswap's amazing.
I love it.
It's amazing.
I love Uniswap. That's a good example, actually. Monero is another one.
Well, okay.
That's a whole other jar of.
No, it's important. Look, it's important. If more people accepted Monero, then it would be a great innovation because privacy is a human right. It's a human right, period. But people don't treat it like such. It's disgusting.
So my last question to you, Richard, just to end the DeFi segment, because we started about an hour and a half ago.
Okay, look, ready? Let me give you some more. Stable coins, necessary for business. We have them in DeFi. DAI works. It's DeFi. Now, I wish it wasn't backed by so much USDC, but hey, it works, right? You want to get de-risked? You don't have to beg Coinbase to let you send your coins to turn them into to their version of a stable coin, which is their counterparty risk USDC thing they show on your screen that you don't know what's actually backed by at all. But you do know that USDC is backed by dollars because they are audited. So we have stable DeFi stable coins, time deposit, Hex, Uniswap, trading, DYDX, margin, and it's just like it does all the things you want. Like the vast majority of commerce, the vast majority of finance is not currency. There's only 5 trillion in printed currency. There's 7 trillion in time deposits, and there's buttloads more trillion in derivatives. And like DeFi is amazing, and it works great now, and it's been working great for a couple of years now. And I don't know how anyone could say anything against it. Look at the size of the order books and the thickness of the order books. I mean, you could dump $100 million of Ethereum and eat like 1% slippage. Actually, I'll give you a number for that since I'm bragging about it. I'll give you a number for how much slippage you get on a 100 million Ethereum dump. ETA 40 seconds.
And while you're doing that, Richard, to end it with this question, where do you see DeFi over the next, let's say, 24 months or even 12 months? How do you
Well,
see,
it just keeps getting better.
how do you
Like
see it evolve?
everything.
And do you see the traditional guys start embracing
Oh,
it further?
and by
or
the
keep
way,
fighting it?
earlier everyone was talking about Celsius paying off their Aave loans. That's just more DeFi. So like you could have got yield on your
Exactly.
crypto by sticking in Aave, and it kept working fine. Or you could have given it to the fake DeFi, the CeFi scum, who I have faced down on live stream and like told him to his face, you're the opposite of why crypto is invented. And guess what? One of them went bankrupt, and one of them's doing fine. It's so obvious. Aave is working fine. Hex is working fine. Compound's working fine. DAI is working fine. A ton of stable coins are working fine. Uniswap's working fine. Everything's working awesome. The only thing that sucks is that people launch scams, which they do everywhere. There's no shortage of scams across legacy finance, and crippling the technology won't solve that. What else? What more do you want? It does all the things. DeFi is amazing.
Peter, I know you got your hand up, so we'll wrap it up. Peter, I'll give you the
So
mic.
by
and
the
then
way, like my estimate on the 100 million dump was wildly wrong. I don't know. Either that or it's just not dealing. I mean, so like if you dumped $1 million, oh, I know why. I'm sorry. I did it backwards. Hold on. It's probably not wildly wrong at all. 100 million. You would eat a slippage of 2.38%. I'm amazing,
Peter,
by the way. What an amazing human I am. You could dump $100 million of Ethereum and only get 2.38% slippage. Go try that in any other market, bro. You know what? Go buy Coinbase stock. Go buy ticker symbol COIN and let me know how much slippage you get when you try and dump 100 million of it. Lol.
Peter, I'll give you the mic to wrap it up.
Thanks, Mario. I mostly agree, Richard. Traffic lights aside, I think we're simpatico on almost everything here. Uniswap is a massive innovation, and it enables self-custody. And people need to learn that shouting about the primacy of centralized exchanges is not going to help anybody, because then it's just a whole race to get approval from our overlords. So the idea of self-custody and minimally viable communities is not going away. And yeah, there's going to be shakeouts where the scam artists and the pump and dumps, like, they come and they go. But eventually they'll find it harder and harder and harder to extract that capital, because people will have a language where they can understand these things better and recognize a scam coming from a mile away rather than just FOMOing in. So DeFi is here to stay, and we ain't going nowhere.
And the other thing people gotta understand is like Uniswap token has nothing to do with the Uniswap thing. Uniswap has functioned perfectly fine without its duct taped on token, because people decide to speculate on the duct taped on thing. It has no effect on the underlying thing. Uniswap 1 worked awesome. Uniswap V2 works awesome. Uniswap V3 works awesome. And all these duct taped on tokens, you don't need to participate them. They're not like these things. So the reason I say this is because you're talking about like minimum viable community. You don't need a minimum viable community for Uniswap. As long as there's one LP that put a little bit of money and anyone wants to trade against it, that's it. That's all you need. 2 humans or 2 entities, an LP and anyone that wants to trade. No minimum viable community needed. Like I don't want people to confuse DeFi with the duct taped on tokens. There are very few tokens that actually have any relationship to the actual protocol. So for instance, like I forked Uniswap because I forked Ethereum, and our fork of Uniswap, when it burns the coins, that actually makes an economic difference in the protocol. A lot of these, like Uniswap, you buy, you sell, doesn't affect the Uni token. It's totally tangential. It has nothing to do with it.
That's a good point. And then the last question I have for you, Richard, is the cascading liquid. Actually, the examples you gave with Celsius having to pay off their Aave loans. Can you explain to the audience how that means, before we start with the confessions segment, how that it technically means DeFi works and CeFi doesn't work? And you made that statement. It's a statement that many people don't understand. Can you explain to them
Sure.
why,
Yeah.
how that works?
So I'm pretty much an expert at this. So you asked the right guy. In normal systems that have leverage, you have a very fast frequency at which you can check whether someone's collateral is still large enough to cover their position. And if their position moves against them, the collateral gets sold and it makes the lender whole. So you borrow $100 to buy Bitcoin, or let's say Ethereum. You borrow $100 to buy Ethereum. So now you owe $100, and you use your $100 to buy your Ethereum, but then the price of Ethereum goes down, and now, like, if your collateral sitting in Ethereum, now you've got less money. So in DeFi, what you do to make up for the very high latency is you make people over provision. So like you can go 100x leverage on a lot of centralized exchanges, but you can only go like maybe 3x leverage in a decentralized exchange. Why? Because it takes so long for the system to detect that you now need to be liquidated, and it takes so long for someone to liquidate you that they need so much extra time for those things to occur, so that you don't create bad debt. So decentralized finance has extremely lower margin and extremely higher latency, but extremely more censorship resistant and less counterparty risk. So in Aave, what you do is if you want to like borrow, you need to give them more than you're borrowing. But on a centralized platform, they'll let you borrow greatly in excess of what you've deposited. So on a normal centralized platform, you could enter in 1 unit of a thing and borrow 3 to 100 units of the thing. But in a decentralized platform, you need to enter like 1.5x units of the thing to borrow 1 unit of the thing. So you have to over collateralize. And so when Celsius was attempting to use these protocols to generate yield, they would over collateralize. But then when their positions would move against them, now they need to keep putting in more collateral or they get liquidated. And if you get liquidated, you not only lose the money you have, but you also lose the premium that exists to incentivize people to liquidate you. So it's like when you liquidate someone, you take their position over, and so you need to buy their position at a discount to be happy to do that. Otherwise, no one would ever get liquidated. So basically, liquidation is just like you owe more money than you have, so we have to sell what you have to try and at least make the people whole that you owe. And so that's what's happening to Celsius now, because they weren't over collateralized, they were under collateralized. Now they have debts they can't pay off, even if they sell everything they own, which is why they're in bankruptcy. But their loans on Aave didn't go bankrupt, because if they had attempted to enter a state in which they didn't have enough collateral, then the liquidators would have went and liquidated their underlying collateral and made everybody whole. So it's a safer system. In the legacy system, you get over leveraged very easily, but in DeFi, it's extremely hard to get over leveraged because they only let you leverage up so little. They don't even let you get 1x leverage. I mean, it depends on the platform, but I think you get the idea.
I think you've articulated it really well. So I think everyone, I hope you got some value from the discussion. There wasn't much of a debate even before Richard joined. I think most speakers that came on were pro DeFi, and I think the last few months have proven that.
Oh, can I mention one last thing? One last thing. I invented this term called just-in-time security, and it's very important to understand. If the bad guys, whether they be governments that are evil, people that are evil, if people start to attack nodes, or they start to attack developers, or they start to attack projects, we're not stupid. We just route around the damage. Oh, you guys are going to start, kicking door down for this, that, or another. Okay, well, we're just going to have more doors, and they're going to be in different places. And so, just like the government for a long time didn't like file sharing, eventually they give up. They're like, all right, file sharing is there, whatever. That's how it is. And I look at crypto the same way. Like we are. It's so insane to me that we're solving the problems that legacy finance has. It's on chain. It's obvious. It's immutable. The history can't be deleted. You can see who's doing what and when. And it's 24 hours a day, and it's everywhere. It's global, and it's like the minimum middlemen. It's like we solve so many things. Any government worth their salt, any government that was intelligent, will be on our side helping us get these things done, because we really are making the world a better place. Crypto is here to stay, and the things that we're doing are one of the few things in the world that's actually making the world better. Rockets that land themselves, electric cars, crypto. I can't think of anything else that's actually getting better.
But we're seeing the traditional guys agree with that theme as well. Like we're not seeing that same resistance we saw back in 2017, 2018 when it comes to applications like DeFi. Back to 2017, 2018 is more, hating on crypto in general, hating on blockchain, hating on Bitcoin, Ethereum. But now we're seeing a lot of the big guys embrace the concept of DeFi, not the right way and trying to, take a piece out of it and do it their way. But you're not seeing that same level of resistance as we saw a few years ago.
And why should you? Because DeFi literally solves the Celsius problem. DeFi literally solves the Coinbase front running problem. DeFi literally solves the Mt. Gox problem. Like DeFi solves so many things. It's amazing.
I agree. I think it's well articulated, man. Thanks a lot for jumping on. I think the community loves it. Discord goes crazy every time you jump on. So I appreciate it. We're going to do a confession segment now. So we have Coinfessions that comes in on every show, Tuesday and Thursday, to give us 3 to 4 anonymous confessions. And in the meantime, we're announcing winners on Discord. The second winner was announced. The second code word is weather. So confession segment now for a few minutes, for about 15, 20 minutes. And then we'll have I think we have 3 project pitches to wrap up the show. So Coinfessions, while we announce winners on Discord, everyone in the show, by the way, everyone on Discord, you have to follow all the speakers, Richard and all the other speakers, Tyler, Peter, Crypto Mom, Coinfessions, every other speaker on the panel right now, you have to follow them to participate in the giveaway. And it's a way to show your appreciation for them jumping in. And some of them just jumped in last minute and sharing their thoughts on various topics throughout the show. Coinfessions, Charlie, the mic is yours, man. I appreciate you being here as always.
Thanks, man. Thanks for having me. And yeah, it's great to follow Richard. It was good to hear you speak so knowledgeably and passionately about DeFi. So thanks for sharing that with us. And it's it's a privilege to follow on from that. Unfortunately, I'm going to lower the tone somewhat. But Mario, I know you love this shit, so I'll get sharing. So the first one I'm sharing, I've just pinned it to the space. This is actually, I believe, the top performing confession of all time, certainly in terms of the number of likes. If not, it's kind of up there, top 3. So the guy that used to bully me in school and I secretly hate asked me for trading advice. I wanted him to lose money, so I told him to do the exact opposite of me and short support last week. He made 9K profit and I got liquidated. And I think there's a couple of things here that entertain me and amuse me. Primarily, obviously, there's the petty, spiteful nature of the confession, the fact that he took the opportunity to kind of get retribution on his school bully. But then layered within that, there's also this idea of, I don't know, like retail traders automatically assuming that they're more knowledgeable or more skillful than they are when it comes to reading the markets and day trading. Whenever you see an exchange or kind of like a trading company, you always see the warnings when you sign up saying 90% of traders lose money, 90% of retail traders lose money doing this. And this kind of falls directly into that trap. And to kind of rub salt into his own wound, he's incidentally kind of benefited somebody that he wanted to sort of take down a peg or two. Just pinned another one. I was spot trading for 3 years and gained nearly 750k. Then I lost everything in one Luna trade, literally one Luna trade with two times leverage, and all my savings to buy a house were gone in a single hour. And if I've received confessions on a whole bunch of stuff, but I'd say easily the most written or the most popular subject matter is Luna. But this one spoke to me in particular because it goes to show how quickly things that take so long to build can be destroyed really quickly, financially and reputation-wise.
And that goes to our point as well, Charlie. Like, if you don't mind, if I've just bring up the point of diamond handing versus trading. I know we debated this earlier today. We did it on Tuesday as well. It was a really sick show on Tuesday, and we discussed the concept of diamond handing. And if you diamond hand the wrong project, thinking it's the right project, you get fucked. When the market corrects 95, 99%. But people that made most of their money, including Bitcoin, Richard in the early days, diamond handed, correct me if I'm wrong, Richard, you diamond handed Bitcoin in the early days, and got pretty sexy returns there. So would love you, since you're on the show, Richard, before we continue with the next confession, what's your advice to anyone, looking at, should you look at selling when things are frothy, or just diamond hand, find the right project and forget about timing the market?
I think I think the most successful tactic for profiting and speculation is to hold because timing is extremely hard. I mean, I called the top on a day. Almost no one can do that, and I did it 2 cycles, and it's like nearly miraculous. Like no one else can do it. So but how many people could have held from like earlier? Like, look, you've got an asset. Like let's take Ethereum. In the COVID dip, it went down to 88. Then it went to 5,000. Any idiot could have held for any period of time there, and we never went back to 88. Lowest we got over the last like 2 years is 880. So even a complete idiot that bought the bottom is up 10x, even if they sold the next bottom, right? Not that
But how,
880
how
is
do
the
you know?
bottom,
But
but
how do you know you're hodling or you're diamond handing on
product market
Ethereum,
fit.
not a?
Product market fit. So if you have something that resembles a game, people will tend to get bored of games. That's part of the reason that I'm not bullish on NFTs. You can like, there's a bunch of reasons, but that's one of them is that, things that are game like, people will stop playing. But things that are more financial like and have a more boring sales pitch and aren't Rube Goldberg machines tend to have more longevity. So if you want a couple technical ways to predict how much longevity a thing will have, there's something called the Lindy effect, which is the longer something has been used, the longer it is likely to continue to be used. That's one way. So something like that would tell you that Bitcoin is likely to be around for a very long time. The problem with that particular measurement is that it doesn't tell you at what price point. So you can still find cassette tapes if you want, but they're not a growth industry, nor are CDs, nor are records, nor are bards coming and playing in person for you. So the way that I like to know that what I've got is the right thing is product market fit. Are you on ramping new users? Is it a durable walled garden? Is there a first mover advantage? Is it a durable first mover advantage? How's the logo? How's the community? Are people getting tattoos of it? Is there something that locks them in for a very long time? So, in Hex, there's a guy that's got a tattoo of my name over my logo on his chest. I tried him to follow him once on Twitter. He didn't like it. I had to follow him again. So, when you've got people tattooing their body and locked up for 15 years, average stake length in Hex is 7 years. These people are not going to defect. So what happens is as soon as someone sells their Bitcoin, all they say is evil things about it. As soon as someone sells their bag of anything, they want to buy back lower or just not feel bad ever missing gains again. And they just savagely crap talk the thing. Elon Musk secretly bought Bitcoin, pumped it, said you could buy cars with it. Then he secretly dumped it, quote, testing the liquidity, and then said, oh, this is bad for the environment. We're not going to let you use it for cars anymore. And so he bought it, pumped it, dumped it, and then trash talked it and savaged it afterwards. But he didn't even need to do that. Like, you're telling me the rocket scientist didn't know it used electricity? I don't believe that at all. The computer science major knows that it used electricity. He's lying. So, and look, I just bought one of his Model X plaids for like 150 grand. So I'm still willing to buy his cars, even though he's shady in crypto.
So I've got look, quick question. You said you're against NFTs. I want to give you 3 NFTs. Tell me if the utility makes sense or not. So one of them is Etihad is doing an NFT. Now I know you might say you don't need an NFT for this. You could just use a centralized system. But would you, doesn't harm to use an NFT for something like giving you access to like business class at a discount or to
I mean, look,
lounges?
this particular thing, I am not a tax advisor or an accountant. And so I'm weary of giving this type of advice. But if somehow you found a mechanism by which things you may normally be taxed or taxed in a different way, then, that's on you, right?
So I got 3 examples.
Imagine a world where no longer you purchase anything, you just buy the NFT for it. It's like, hey, you know what? I was going to buy this car and pay sales tax on it, but instead I bought the car FNET and they just let me drive it all the time and there's no tax. It's like,
And I think tax regulations will catch on. But from a utility perspective, I got 3 examples, and funny enough, they're all 3 sponsors. But like, you might say you don't need a blockchain, you don't need to decentralize it. But like this one is a museum. It's a real museum in the metaverse. Now, experiencing a museum without having to travel to a country. I know it's a metaverse. The art in that museum could represent an NFT, showing it's a digital representation of the real thing. would that utility make sense for an NFT? That's my second example.
So like when I'm on Pornhub, am I actually in a virtual museum? Because I mean, looks pretty good in there. I like what I'm seeing. I
Yeah,
mean, like it just you're just renaming you just basically you just have a website with pictures on it, but now you renamed it and it's now the metaverse. You're like, no, bro, it's a website with pictures on it. You're just renaming it. That's silly. So look, I mean, look,
okay.
you might make money with any of these businesses, but like, I think the idea of a web, like, you just renaming a website's a silly idea.
Fair point. Charlie, I'll give you the mic back. The next confession, man. Sorry, we digressed a bit. We do that a lot when Richard
Do we
jumps
do
in.
all three? I only heard two. Wasn't there three
Yeah, we got
NFT ideas?
yeah. The third one, and I'll give you that one, and then we'll go to Charlie's next confession because I know he has to jump off. The last one is I think that one you I think last time you agreed. I think it was you that agreed that it made sense. And it's one of my favorite. People experiencing the metaverse. Obviously, you wear a lot of beautiful clothes, beautiful brands to signal a certain identity, and you've talked about it as well. Wearing that same thing in the metaverse, would you agree that makes sense? So an
Well, I mean,
original Dior bag.
we've already seen that successful with gun skins and Counter Strike. We've seen it successful with hats and Team Fortress
I agree.
2. I
I agree.
mean, we know that people will overpay to signify. I mean, I got $1 million of Bulgari jewelry, so like, people will do that, and if you can do it digitally, there's actually less negative externalities. Although I think it reduces the durability of the walled garden because like, so like I've got a Jacob and Co casino watch. It's like 650K, and there's only 88 of them. And then they're like, well, we're gonna release a version that's black. We're gonna release a version with this other little change, and then they like dilute the market by releasing these little special edition ones. Well, it's like, bro, that's coming out of my pocket. Like every time you guys release another one of these things, you're competing with me if I ever want to sell it. And so, like, the thing that I worry about in these digital products is that the thing that makes them have less negative externalities is also the thing that makes them so they don't have a good walled garden.
Good
You
point.
know,
Good point. Well, then
yeah.
again, branded t-shirts not that big of a walled garden. Manufacturing t-shirts easier than a digital t-shirt, but still, it's a
Well,
fucking
you'd think
t-shirt.
that, but
But
I paid $900 for t-shirts rather often, and I wouldn't buy them if they were $9, which is probably what they cost to make. It's like there's something magic that goes into these brands.
exactly. All right. So, Richard, if you want to stay right after the confessions, we're going to do the pitches. We've got two pitches today, and I think two of the projects I mentioned will be pitching. So it'll be your first time coming on. It's like a Shark Tank like pitch, and I think it'll be good to have you there. Also, I'll DM you the Discord link. Discord is spamming us to try to get you on there. So if you want to peep in, I think they'll go a bit
Have you
crazy.
guys noticed that like every time I join, Tone Base runs away? It's really weird.
I know. I try not to bring it up, but it could. Charlie, do you want to go to the next confession, man? And thanks a lot for being patient with us.
That's all right. Have I got time for two? Do you think?
Of course you do, man. I think the audience loves your confession, so two will be
Okay.
great.
All right. So I've just pinned another one, and this sort of references back to the conversation that you were just having with Richard about TradFi over leveraging and versus over leveraging versus DeFi. So I tried to take a loan from my bank near the Pico top both in 2018 and 2021. Luckily, I was declined both times. So this is, I guess, TradFi saving retail pleb from himself. But I thought that was particularly entertaining, and obviously they've got the ability to look back at it now and kind of be grateful that their finances are in obviously such a poor state that they haven't been able to sort of speculate on cryptocurrencies thanks to TradFi. So I thought that was just quite an interesting one, because often everybody likes to shit on TradFi, and people argue the toss whether or not regulation is good or bad. But certainly in this instance, this person has been helped out by their local bank. And then the last one, I've picked quite a dark one because Mario, I know you love the dark stuff. So I started with 30K of unemployment money. I made and lost 1.1 million in paper gains. My mum was so happy for me, she gave me the keys to her IRA on the way up. Tried to make her a million too. Lost 250K of my mum's real retirement money. Pain. She's my number one love of my life. But if I can survive and recover from this, I can survive anything. But hearing her voice shake as we try to figure out a game plan rattles my spirit. my heart and body have never hurt like this.
And that's like again. So one thing Charlie, you were there when I had a big argument with a lot of people about the whole WAGMI movement. Not sure if you heard of it, Richard, or any of the other panelists. WAGMI. Again, I have nothing against it because it's a positive, it's a positive vibe. But it's about we're all gonna make it. That's what it stands for. And I keep reminding people time and time again, crypto is or trading in general is a zero sum game. In some ways, life is almost like a zero sum game. It's not, but in some ways it is. So for every dollar you make, someone else lost it. It's just important to keep that in mind. And while everyone, flaunts their wins throughout every bull run and disappears in the bear run, people are losing money on the other side. And confession, and that's why I want that segment, the confession segment, in every show, to remind everyone that while we're talking, Richard talks about his successes, Peter will talk about his successes, I might mention mine, and every panelist will talk about some successes they've had. For every dollar any of us made, someone else lost it. Now, some could afford to lose it,
It's
big
not
whales,
true.
etc.
It's not true.
Tell me.
So, as a thought leader, I like to pride myself on things that I popularize and discover before others. And so, one, trading's net negative, not net zero, because there's a lot of overhead, a lot of guys staring at screens, blowing their whole lives, destroying their health, destroying their families, and enriching exchanges. And then those exchanges use that money that they took from the harmed people to go on ramp new people to harm. So it's massively net negative. And then they also pollute. They pollute all the airwaves with advertising as well. So it's not just
this point. That's a good point. Just one thing I want to ask you about. What about the positive of the efficient allocation of capital, which is what it's meant to do?
No, it doesn't. No, you're not smart enough to make good decisions to actually perform that function well. You don't know any of the underlying things that would actually cause that more efficient thing to work out. You're the person that does the opposite and only buys the things that you just heard about and amplifies the reflexivity and the volatility of the uptime, which is why people buy the things near the top, because that's the only time they could, because that's when they heard about them. You didn't hear about them when they were at the bottom. So the people that would help make these things less volatile and get the prices to be more accurate long term are the exact opposite in behavior of people that buy tops and sell bottoms, which is the majority of retail. Retail wants to buy tops and sell bottoms; they prefer it. So now so the first lesson is that these are not net zero; they're net negative. The second lesson is everything's paper gains, and your wins are not someone else's losses unless you're trading. If you're actually just speculating, you can all win together. So when everyone moved to America and left Europe, everyone won. The Europeans got more space. The Europeans got more, easier to pass laws because of less conflict. The Americans won. We utilized unused space. Everybody won. So the same thing happens when you create a new, superior economic system. So when everyone switches from the totally sucks, totally goes to zero, worst interest rates possible, worst counterparty risk possible, US dollar. And by the way, the rest of the currencies are even worse. The euro is down 33% versus the dollar over 15 years. And so if you didn't like the dollar sucking, boy, you'd hate to be in the euro. So if you sell all the houses at once, the price goes to zero. If you sell the gold at once, the price goes to zero. You sell the stocks at once, they go to zero. And since you live in a world where everything goes to zero if everyone sells at once, the game that you're playing is what goes up the highest, the fastest, and what has the least likelihood of going to zero and staying. And so, Bitcoin dropped 75%, Ethereum dropped 85%, Hex dropped 95%. When they bounce, which one's going to go up the highest? So with this, the position is, it's like insurance. When you give money to an insurance company, everyone else gives money to an insurance company, you're creating a giant pool of capital that if any person has a problem, they can draw down against it. But as long as you did the measurements right, and people in general don't have accidents at the rate that they're putting in, what you end up with is a giant pool of money that gets larger and larger and larger, which helps make up for the accidents people might have. And you can kind of look at a successful cryptocurrency in a similar manner. You've got people that are working jobs, they do savings, their savings stack gets larger over time, they save and save and save and save, that stack gets larger and larger and larger, the price of the thing goes up and up and up. And as long as no individual participant draws it down too hard, everyone gets to be golden forever. So, I mean, I bind Bitcoin at 50 cents. Now it's 22 grand. All right, well, that's a 44,000x. Okay, so whose money did I take or jack or steal or whatever? You know, and it doesn't work that way because it's all paper gains. So your real estate's paper gains, your stocks are paper gains, and your crypto's paper gains. And really the game that all of us are playing is everyone going to sell at once? No. Okay. And so what runs up the highest? Okay, crypto. And then so stocks drop 30, crypto drops, 85. Fine. But we're up, that's how we went up 690 million% in Bitcoin, is by being more volatile. Volatility is the price you pay for the world's best performing asset. So
in terms of the argument you made, of net negative. So would you say trading? So I'm not a trader. I never trade, and I'm a shit trader. Would you say trading is okay? Exactly. Investing, so VC like investing. Obviously, not all of it will be not net positive, but it is meant to be an efficient allocation of capital.
Fail in 90. Well, no, like VCs 90% of their plays lose money. 10% has to do better than a 10x for them to win. So basically, your one winner as a VC has to do 100x for you to make a 10x, because you've got to make up the other 9 out of 10 losing. And so if you have 100x, well, if you get 100x on one, and you have 9 out of 10 lose, then your net is that you're up 10x total after accounting for the losers and the winners. So now it's as efficient as we found. So if we talk about mad gains, the maddest of gains is cryptocurrency. And look, I'm not shilling my bags, right? Like I'm very minimally shilling my bags. My thing went up 1,000,000% in 2 years. 1,000,000% before staking. That's real numbers. Real numbers. You can, if you sold $1 million right now, you'd eat 2% slippage. Real numbers. So it's like, I think 2.3. So, but my point is, you should net negative gain. The thought leader thing, the thing that I discovered that no one else will tell you about, is that all of the gains are paper gains. All of your yield at the bank is inflation yield. All of your yield as a Bitcoin miners inflating the Bitcoin supply. All of your yield as an Ethereum miners inflating the Ethereum supply. And all of your yield in staking Hex is from inflating the Hex supply. And so since they're all paper gains, then which one runs up the most and is least likely to have everything draw down at once when you might need to sell? And the breakthrough, the understanding is that we can all win together. You don't have to, because we all are happy with our paper gains, and because we're happy to keep adding to them like we do for our savings across our lifetime. If you're a good, smart human being, your saving stack grows over your lifetime. It doesn't get smaller. And so therefore we can all get rich together. It's possible. It's not net negative. It's not even net zero.
Charlie, you had your hand up. Jump in, man.
Yeah, sorry, I wasn't going to jump in. I was just going to slip off, actually. I've got to run, but thanks for having me. And yeah, enjoyed the rest of the conversation.
Yeah, we're gonna do the pitches now. I think I like the net negative. So I've always talked about the zero-sum game, but I think the argument that Richard made about it being net negative in some cases, net positive in others, if it is an efficient allocation of capital, but most trading is net negative. So I agree there. Is a good argument that I'll make in future shows. KK, I know we've got 2 pitches to go before wrapping up the show, man. Let's kick it off, and we do have Richard and Tony both on the panel for this time around, so I think it'll be an interesting segment. You there, KK? Oh fuck, he dropped off. Etihad, how are you guys?
Hi guys, thanks for having us here today.
Can you hear me? Okay.
Yep. Yeah, we
right,
can
guys,
hear you.
so cool. So you got Richard. I'm not sure if you guys know Richard. Been in the space for. Okay, cool. KK's here. But you guys, not only Tony Wu, who's usually on the panel for pitches, but you got Richard as well. So I think, there's a pro and a con. The pro is that you're going to get a pretty big audience, Richard's audience here as well, and one of the biggest guys in the space listening to your pitch. The con is, he's pretty direct if he doesn't like something. But yeah, KK, I'll let you kick it off since you're back, man, and we'll let Etihad pitch.
I'm right here, yeah. Is Richard going to be part of the panel? Holy fuck.
Yeah, man.
All right, okay. So, Etihad, are you with us?
Yep. Hi guys, thanks for having us here today. And
So guys, before you kick it off, hold on, guys. Hold on. Prepare the timer, KK. So you got 90 seconds at the head.
Minute and a half timer, 90 seconds. Go, Mike is all yours.
Right. So we're here to talk about our NFT collection today. So Etihad Airways is the first airline to step into the space in the space of Web3 with some real world utility, especially in NFTs. So our supply is limited at 2003 NFTs, and our artwork is designed around our 787 Boeing 3D models, featuring the art of Manchester City and the Formula One Abu Dhabi Grand Prix. So we really take pride in sort of building utility at the core of the collection. And to emphasize more on that, when you purchase the NFT, you instantly get silver status on Etihad. This means that you get access to a business class lounge, priority check-in, extra baggage. And to be honest, you don't even need to fly Etihad to gain and spend these miles, and you can do it on, American Airlines, JetBlue, Lufthansa, Air Canada, and tens of other airlines. So we're currently about 80% sold out and only 400 NFTs on the supply remaining. And we'll be closing the sale in about in a few hours. I think the host will soon pin our tweet to the mint link. So just make sure to grab, one of the last few NFTs left. So, after the close of the sale, we want to focus on building one of the first decentralized governance systems by a brand. So our holders, our EY01 NFT holders, get to propose extra perks that they want. It could be, potentially limitless. It could be anywhere from first class priority boarding or a guaranteed, inaugural flight tickets. And it could be quite literally anything. And sort of the more NFTs you purchase,
Timer's
the more
up.
voting. Oh, sorry.
Timer's up,
Yeah.
guys. Timer's up. Yeah, KK, your alarm is not as loud as it usually is. All right, guys. So essentially, just one question before we kick it off with Tony and Richard. What is this in one sentence? What is the utility of the NFT? Just one sentence.
Yes. So it gives you the sort of digital membership pass that you can trade, and it gives you the perks such as
Okay.
lounge access
I
and
got it.
stuff
I got
like
it.
that.
So I
Yeah.
I travel on an almost weekly basis. I'm an Emirates guy because I'm in Dubai. So the
Yep.
utility makes sense. I think the question that Tony and Richard, other than regulation, will be why a blockchain, but maybe that's where the hype is. Tony, do you want to kick it off? And obviously, Richard, you can unmute anytime with any questions.
My question is actually, Richard, I think you're probably going to ask the exact same question. On a tax level, how do you guys account for that?
Nah, I'm gonna avoid that. I'm too crypto to want to ask a question that lame. But yeah, I hear you. I mean, like, look. And so I googled it. Like, it's had, if I'm even saying it right, it's lounge access is $25 to $75 a visit. Apparently, if you go to like their most expensive one, I found like it's $200 or 125 or something. It's just like I if you have found a way to arbitrage lounge access, fine, I'm okay with that, But
Yeah,
I have
I
a
mean,
feeling what's more likely is that you're just going to exit scam and not actually be able to fulfill the thing that you need to, because if you're selling the NFT once, but then you've got lifetime costs from the
Did everyone just got muted or?
yeah, it looks like everybody got muted.
Yeah, I think Mario just mispressed
I'm
the
muted
button.
now.
Yeah.
Yeah, no, I'm
What
not
did-
pressing it. It glitches by itself. But yeah, from a taxation perspective, have you guys considered that? Richard, we're trying to bring you up. Twitter is just glitching. But go ahead, guys.
Sorry, did you say from tax perspective?
Yeah, from a tax perspective, and then sticking to. So Richard made another concern. Like, I know you guys are, it isn't officially backed by Etihad. We verified this because they tweeted it from their account. Verified it with them. So I'm not too worried. Richard's point about utility and being an exit scam. They've got too much to lose reputationally when it's an
Yeah, I
airline.
mean, when it comes to the reputation, it's not just the lounge access that we're actually providing. Like, I know that Etihad, the NFT account who was pitching, they didn't get to talk about the NFT tier and what we've got on the roadmap. So, I know that the silver tier status is good utility, but it might not be something that's long term and something that may be worth the money. What's really worth the money and what's worth the NFT is the NFT tier that we're making after this, and it's a decentralized governance system. I think it's one of the first ones by a brand, and it means that everybody who holds an NFT will actually be able to propose things to Etihad that they want within the NFT tier. So say they want an extra benefit within the club, they want something extra that they want when flying Etihad, they can propose that to us, and then all the NFT holders will use that NFT as a voting right.
to then vote collectively and say yes or no to that benefit over other ones.
Okay, that's interesting. So essentially, use the NFT as a way to vote for utility.
Can I just say? Can I say that like an NFT actually being associated to a real company is statistically improbable beyond all belief, like extremely rare. If it is the case that this is the first time, I have no problem with companies allowing access to stuff by using NFTs. That seems just wonderful. You know, like go ahead. You already use a digital system to allow people to access your thing or not, and now you're just slapping a JPEG on it. I don't see the problem with it.
Yeah, I mean, it's more the fact that it's, you know, it correlates to the community a lot better. So if somebody, say, for example, Etihad was to make a normal loyalty system, what they would be doing is they'd be selecting a focus group of people to actually sort of decide on what the utilities will be within the separate tiers. Now, what we can actually do is we can get the people who would actually be flying Etihad and actually use the NFT and be flying with Etihad all the time to essentially get them to vote instead of using a focus group, if you know what I mean.
Yeah, I think that, look, to be honest, yeah, look, most NFT projects launch pictures and then try to build up utility on top of them. In this case, you know, you're trying to have a reason for having an NFT, which is, you know, allowing voting rights, which is like, you know, a step in the right direction. And at least you're launching with a utility and maybe adding pictures afterwards. You know, I've seen projects launch with a utility with a purpose. Hey, you get the NFT to have access to XYZ, to SaaS softwares, whatever it is. And then the pictures are just a representation of it if you want to add an identity to it. So for me, I think it's like when I looked at, just FYI, I'm going to give you a bit of critical feedback. And I'm going to be honest, I think you're underrated as a project for this particular reason. Your Twitter, the link to the website, etc. Our team almost rejected you guys coming on just because they're like, Mario doesn't look like it's backed by Etihad, looks like a scam. So just from a presentation perspective, I think it's not doing you guys enough justice, not enough press around it, because you're above most other NFTs that we've seen or that ping us to come on the show. So that's it's a plus. Richard also made the point that, hey, why not have an NFT? At least, there's a reason to have it. And Richard is, just so you know, guys, he's generally very critical of NFTs, and he was part of the debate.
Yeah, this is the closest you'll ever see me to being like, yeah, that's right.
That's what I mean. That's what yeah. To be honest, like Richard, the organizer of the show, he's like, Mario, like, are you sure you don't put Richard on the panel? Like, what's gonna happen to the projects? I'm not gonna be too happy. But I replied to Romy, I'm like, I think it's gonna go well because I think he's gonna, because we've had this discussion before. So I'm playing with fire, but I think Richard, you
I don't see a problem with it. I mean, look, man, if you have a nightclub and you're just like, yo, if you have this NFT, you can come in. Seems legit,
Exactly.
Okay. If you got extra spots in your little place where people sit down in the airport and you want to, you could give them to people who wear pink shirts. You can give it to people that have the thing that you want. Like, that seems fine.
I think the thing with the NFT tier is, say we propose a benefit to somebody that it goes outside the normal traditional loyalty system route. So say, for example, what we're thinking of doing in the future is actually adding sponsorship efforts of Etihad into the tier. So it doesn't constrain within the normal Etihad Airways experience. We can actually then add on, say, for example, something to do with Manchester City, an offer to do with them, or we can go to the Abu Dhabi Grand Prix and add offers to do with them as well. And it really expands the possibilities that you can do within the loyalty program, and it makes it a lot more seamless as well.
I think everyone would be totally cool with all of these kind of projects if people just didn't overpay for the stuff. I think the biggest problem is not the projects. I think it's the speculators that film with them usually,
which are pretty dead now. Like the NFT volume collapse, and we're seeing like when you have real utility and utility that can be quantified, then prices relate to that utility. But when you have just promises and a picture, which again, I'm not against, it's just much harder to price. That's where speculators come in. Like, it's hard to speculate with this access card because you can see the value, you can go on the website, see what the price is. But it's much harder to value a picture with grandiose promises, which again, I don't want to shit on them, but I have concerns with
I agree with you, bro. 100%.
And another thing to point out is the fact that, we aren't on that sort of hype trend, and really we don't believe in it either. We take 0% royalties for that exact reason. We're not wanting people to flip it and trade it for that reason.
I like 0% royalties.
we want a trustworthy base of people who want to stay with Etihad and believe in the community, and it just seems so much better to us. Sorry, I should introduce myself here. I'm part of R-Cube. R-Cube is the company running it for Etihad, the collection. So yeah.
The only thing I might mention is I wouldn't be surprised if one day these NFTs did lose their rights, just like people that bought online movies. If you bought movies from like PlayStation, they just cancel all your movies. They don't even care. They're like, yeah, the movies you bought, you can't watch them anymore. It's over.
Good point. Good point. Like when with those centralized companies, you remember when I can't remember which airlines it was, Richard. They to raise money decades ago, they created a unlimited access to first class for one fee of like 200, 300K. And then I don't know if you've heard the story, read the story, and then people bought it, abused the fuck out of it, and it's unlimited forever. But they were desperate for money, and people are still using it today. And the airline tried to cancel them. American Airlines, yeah.
Yeah.
I read the story about the guy that abused it, and he should have had it terminated. Like he was being unfair to the company, truthfully. And the other thing I would say is like in general, companies really don't care what you have to say at all, and usually the customers' suggestions suck. So like, I wouldn't put too much faith in them really caring about like. You either have this NFT or you don't. You're probably going to get treated the same as the normal comments box, if they even have a comments box anymore. You know, used to be businesses would have a little box where you could put suggestions. I haven't even seen one of those in a long time.
I think actually to better answer your questions, if we have time, sorry to say, Simon should be here from Etihad, the head of marketing, global head of marketing for Etihad. If you have any more questions for him, I don't know.
Is he actually? Is Simon there?
Yeah, he should be requesting to speak if he's not already.
Oh no, I can't see. If I see, it would be good to get. I want to ask him a question.
Yeah.
Like, what does the board think of this? But we'll go to the next pitch. I think it's a great pitch, guys. The pitch was actually pretty mediocre, but the project is pretty cool. I would have actually asked you guys to give us some NFTs to come on, but I'm an Emirates guy. I almost never fly Etihad because I'm in Dubai, not Abu Dhabi. But yeah, like good luck, guys, and it was a good pitch. So we've just put a poll up for everyone in the audience. This is the first of two pitches. Check the poll and vote whether you like the project or not. Fuck, 89% love it, which is well above the threshold to be good, which is 80%. So congrats, guys. Everyone else, if you want to participate in the giveaways on Discord, you have to vote because when you win the prize, we have to see proof that you voted as well. So check the pinned tweet above. It's on my profile and above to vote, and the giveaways are being announced on Discord. Next pitch, KK, second and final pitch, man. Kirill, fuck, did it drop you out again? All right, I'll do the second pitch while KK tries to come up. So we got, is the second pitch up yet, Romy? Open Games, you there, guys? Open Game Builders?
Hello, guys.
Hey, man, so that's going to be an interesting one. That's for the museum. So it's going to be a really interesting one. I'd love you to articulate, so you got 90 seconds. I'd love you to articulate it very clearly and very well, because that's a very, I think it's exciting, but it's harder to understand the utility of it. So I'll let you guys speak. You got 90 seconds, and I'll run the timer since KK is not here. Mike is yours. Go ahead.
Okay, thank you. My name is Mauro. I'm the CEO and the founder of Open Game Builder, we're a company from Spain. We are making the fifth platform in the world based for games on real asset connected with esports. We have two MVPs right now. We have one game fighter, 1v1, like Mortal Kombat, for example, connected with esports. And we have the second MVP is the Quantum Collection Metaverse. We are making the first collection in the world. We have the most complete collection from fossils, minerals, and meteorites. And we are making the digitalization of these pieces and introduce into the metaverse. And then finally, we want to build the real museum. We are talking with some governments to buy a place to build the real museum. So the idea of the project is, I don't know if you see Jurassic Park, but they make like restoration with Ambers. We are doing the same right now with through digitalization, blockchain, and NFT. We not only have dinosaurs, minerals, or meteorites. We have Formula One cars, collections. We have gold champions, bronze champions connected into the metaverse. This is not a web with pictures. It's a metaverse when you can go, you can feel in, you can translate and travel to the past to feel everything of the history of the life.
10, 9, 8. All right, man, good pitch. I think you finished. All right, cool. You have 10 seconds left. Man, so...
Sorry, just stop because I don't know the time.
Oh, good. Oh,
Yes.
good, man. So my first question for you is, all right. So you're a metaverse. So just to understand it, and your audio wasn't that good, but you're a metaverse. You mentioned Formula One, for example. Um. So what's the experience? If I go into your metaverse, what do I see, and what role do NFTs have to play there? You're muted, by the way. I'm just mute and unmute. So when you want to speak, just unmute and mute again, please.
Okay, sorry. We're a company and we are making our main work is make the transition of big name companies into the metaverse. For example, in Formula One, we have our partner Campos Racing from Spain, and they have a collection from cars like the first car from Alonso, for example, who used to win the world championships. So we want to make the digitalization of this. Holders have benefits, holders get a game because we are making like a game from them, and people can use this NFT to go to for example, the paddocks, and we make giveaways, we make some benefits to the holders in the Formula One scenario. But that is the same to every project because we have now 4 projects connected into the metaverse.
Okay. I'm struggling to wrap my head around it. Jason, Richard, do you have any questions or thoughts on this?
Yeah, I'd love to know kind of what the utility, the same as the earlier question. What is the sort of main utility for the NFT? Like, how does it, what is the value for it? How does it accrue value, and why would somebody want to trade it?
Well, for each project, I go to talk about Quantum because it's the first project we go to launch. You have benefits, for example, if you hold a real piece of digitalization, you not only get the 3D model, you get the real piece and you have a little of the history of the life in you. You have benefits like, for example, if you're a holder, you can get like 3 months. We are making some travels to the place where people find the fossils, the judgments. So we are giving these benefits to the holders. For example, you can get free pass in the real museum. You can get free pass, or you can sell the entrance in the metaverse museum. You have a lot of benefits. You can go more deep in the web. You have everything there, even perfectly detailed because it's a lot of information. It's a project with a lot of work inside,
Okay. By the way, don't feel bad. By the way, Open Games Twitter just glitched. A lot of people just suddenly got kicked out. FYI. So don't feel like it's your pitch. Don't worry. Discord is blowing up with people just getting kicked out. So don't freak out, man. Go ahead. Sorry,
I mean,
Jason.
like, I think, like, I speak Spanish, but it's pretty hard to understand you, bro.
True.
So, like, everyone wants to pretend that they like understand what you're saying. I think half the people don't really understand what you're saying just because of the language barrier. Because you got a strong Spanish accent. It sounds like you're trying to stick companies on the blockchain, and then you go to the company and you're like, "Hey, man, your fans like stuff. What do they like? Your cars. All right, let's stick your cars on the blockchain and see if they can get them to buy a token." I think that's like an okay business that a lot of people do. I mean, it's like merchandising, right? Like, oh, you like Star Wars? Let's see if we can get kids to buy Star Wars lunchboxes and socks and underwear and shoes and hats and gloves, and you just shove the logo on every imaginable thing. I guess it's an okay business model. I guess it doesn't really need to have any utility. By and large, I think the metaverse sucks. It doesn't really exist. You're just looking at pictures on your screen.
I'm a big fan of the metaverse. I think that we discussed that before. Like, I just think we're living in a metaverse already, just not that immersive yet. But it was a discussion. So Open Games.
Hey,
Before we
I
continue,
just was in virtual reality today, killing my friend in the head with arrows. Like, I like virtual reality.
so
My
this is it.
shoulders hurt from shooting him in the head with arrows.
But this is it. Like, this is just a Web2 version of the metaverse without the concept of ownership. And I think, like, Open Games, what you guys are doing is leveraging NFTs. When you add the concept of ownership in the digital world, just makes it more interesting. When you can move your assets from one game to another, still too early for that. Or you can owning a piece of history is a bit vague, but owning access card to different ecosystem with different games, that's a decentralized access card. It's not as exciting as like a spaceship that can move from one virtual world to another. Owning an identity, that's an asset, that's an NFT. So that's how I see like a metaverse, a Web3 metaverse. We're technically living in a metaverse already. Like, we're in a fucking room right now with just headsets on. So you could look at that as a metaverse, just a pretty boring one compared to what it can be. But no, Open Gaze, you tried to unmute. Another, this is your time, so I'll give you another, another couple of minutes of questions. So do you want to add anything?
Yeah, I'm wanna talk. Sorry for my English. I go to try to
Nah, you're
to
good, bro.
talk
You're good.
more
It's
slow, no problem.
no,
And I
yeah,
think
exactly. Speak slower. I think we'll understand more. But I got what you're saying. Some people may not. So just speak slower. It'll help a lot.
okay, when we are talking about we are building a metaverse, is because we are building a real world when you can travel, you can make anything. It's not like you was talking before in the show, like just a web with pictures when you can go and see the Mona Lisa, for example, or you can see the Da Vinci. And you are going to travel to the past, you go to feel everything because it's a 3D experience and it's everything connect. It's not only the build of the museum. This is one of the projects. We are making golf game, bots game with the Federation of Spanish. We are making with the PGA of Spain one project in golf. We are making a lot of stuff
Yeah.
in
So
one
we were,
ecosystem.
we were talking with the PGA. So like, can you give an example of how the PGA project would look like?
Yes, we start working with the Ligas Golf in Spain. They are a foundation and they make like amateurs and they make like leagues from 7 years to 21. And then these pro players or amateur players jump into the PGA. So we are making like all the game and all the NFT collection of his museum in Valencia. They have a big museum of a lot of stuff in golf scene. So we want to include this like then they enter like a sponsor. We go to include even we are talking with Pink. I don't know if you know the brand of clothes from the golf. So we are making a lot of stuff in this ecosystem.
Okay, I know. I personally like it. I think there's so one of the companies I co-founded is it's a public company on the Canadian and European stock exchanges, NFT Tech, and we acquired an agency. And they've been killing it. It's co-founded by the Decentraland C. He was the ex-executive at Decentraland, I think, chief partnerships officer. And what they do is they bring real life experiences like the Australia Open, for example, and I can't name the other ones, but similar experiences to the metaverse. So I personally think what you're doing is like bridging the experience from the physical world to the digital world makes a lot of sense. I think the pitch wasn't that great, but what you guys are doing, because I took the time to go through the website as well, is interesting. So I'll give you props for that. But Richard, like you don't, do you think moving those
I mean, like,
experiences that we have
so,
on the physical
I
world to the
mean,
digital world?
it's okay. You go to elementary school and you ask kids, you're like, hey, kids, what do you want to do? I want to make video games. And then you give them a computer and you're like, okay, kids, go make video games. And they all suck. And so, in the real world, it's extremely hard to make a good video game. It's extremely hard to make good art. It's extremely hard to make good music. And so any of these appeals to like, we're going to make something good, by and large, they probably will not. It will probably fail. And so maybe these guys have a history of already doing good stuff. I would find it highly unlikely because, like, if you can make good stuff, you just launch it on the same platforms that all the other multi-billion-dollar companies launch their stuff. So you would put it on whatever Meta's stupid headset thing is, or HTC's headset thing, and then that's it. And you'd have a million times the audience. Maybe you'd only have 100,000 times the audience. But you'd have 100,000 times the audience. You'd probably have 10,000 or 100,000 times the revenue. And so, like, just being like, screw the largest possible imaginable market with devices that could actually use this stuff. Let's cut off our legs and just launch it to the crypto nerds. Like it's silly. So, like, I was addicted to games for 10 years. I have a pretty high bar for the kind of game I prefer to play, which is currently none because I kicked the habit. But if I hadn't kicked the habit, I don't think the blockchain game would be what I'd play.
Yeah, like
Yes,
I
sorry.
agree.
Can I answer to Richard one question?
Of course, man.
I'm
Yes.
yes,
Speak
I'm
slowly, bro. Just for your
yes,
own good. You go ahead.
yes. I'm a professional eSport player, and we not are making the games by ourselves in the company in Spain. We have more than 500 people working for us in Pakistan and Dubai with Game Store Studio company, like partner of us, and they have a lot of win-win conditions on Google Play, for example. They have a lot of game. Even we have a pre-alpha of one game And I invite you, if you play games a lot of time, I invite you to play and test the game, and then we can go more deep if you don't like. But
it is possible to make a good game. It's just hard. Most people fail. Like if you go to
everything is hard.
if you're an outlier, it's just everyone when they come in these short interactions says they're an outlier, and you're like, well, it's improbable.
Yes, but we have to try. It's like if the big companies are not entering in the blockchain, because the normal gamers hate the word blockchain or NFT. But if you change the mind of the people and you make a transition of these esport professional players and the gaming scene into a platform easy to play, like Steam, for example, that is what we are making on Phantom Foundation with the support of the net. So it's more easy to bring more people and make the transition for the future. So we are building in the worst scenario possible and thinking in the future, because people have to play and people go to enter in the blockchain. So you have to get the vision.
I'm a fan of it. Like Tony had to jump off this space because I was trying to. He has a call that started 16 minutes ago.
I want to jump off just because I don't want to hear people's random pitches. I'd rather them buy coins that go up 100x than any of this other stuff. Look, even if the stuff you're doing is awesome, it's like, yeah, but they could have took that same money and bought something that's going to go up 100x. I'd rather see them make life-changing wealth.
You can't say some of those projects pitching can't be the next 100, 200,000x. You just don't know which one it is going to be. Axie was pitching to raise money back then. Decentraland pitched to me, and I said no, which I know you might not believe in them till this day, but they had incredible returns. So I kind of giving props for the pitches. And I think you didn't shit on them either. I think like for you not to shit on a pitch means there was a pretty good job vetting them. But
it's true. I usually savage them, and this is the least savagey I've ever been.
I know, man. Like I wish you can see my WhatsApp group. The guys behind the scenes running the show. If you could see their chats, they're gonna crucify me for getting on the panel. But it worked out pretty well. I think both pitches are good. It did, man. The second pitch is great. Anyone that wants to vote, you have to for the giveaway. That was the final pitch. It's pinned above.
Mario, can we get everyone here to go play with their free coins on the test net, so they don't get wrecked on the real net? Go use your free coins on test net, guys. That's it. They don't even know what I'm talking about. Go on pulsechain.com and use your free coins. Play around with them. Hey, you want to know a game that's on the blockchain right now? It's the most awesome game on the blockchain right now. It's free. You can't lose money. It's called Go Play with Your Free Testnet Coins on pulsechain.com. It's a copy of all your Ethereum coins and all of your weird tokens that you like from like 6 months ago. They're sitting there. Go play with them.
Richard, one final question to you, man. Market conditions. We ask you this question every time you come on the show. You still bearish? You still think
Grayscale? 33% discount. You're not getting a sustained bull run until it goes away. That's it. Until the Grayscale 33% discount goes away, which is a free 50% more money if it just went back to parity, a free like 70% more money if it traded its normal 20% premium, you're not getting a sustained bull run until that goes away, in my opinion. I don't think anybody is so stupid in Wall Street to be just like, oh, I could have a free 70% profit by buying this thing that's totally actually secured provably. I don't think that's the case. Like, I think you're going to keep getting downside.
Richard,
and did we do our historic 85% dump? No, we did. Are the NFT guys still here, still pitching? The bottom of the bear is when the NFT guys finally give up pitching, and when everyone is like, yeah, we give up. This stuff's dead.
I'll tell you this. So two things. First, what Bitcoin? How much did it correct? We didn't hit 85%. What was it?
75.
75. It doesn't mean you have to hit 85, but I get your
point. You think that, but there's actually a really big difference between 75 and 85. And so this is another one of these thought leader things where I got to teach everyone the way to see this. When I tell you that Bitcoin dropped 75, Ethereum dropped 85, Hex dropped 95, I make them look all similar. But I can do the opposite of that as well. And they're both true. So I'm going to do the opposite for you. When something drops 75, you've got 25 left. When something drops 85, you've only got 15 left. The difference between 15 and 25 is like an extra 50%. When something drops 95 instead of 85, you only got 5 left instead of 15. That's an extra 3x that you have to go to make up the difference. That's an extra 66% dump. And so while 85 and 95 sound quite similar, in reality, you're left with 5 instead of 15. The 85 is 3 times better than the 95. And so what you have to do,
go ahead, sorry.
so you have to invert, what you have to do is you have to look at the inverse and then reason about the inverse. Now, it's still very useful to think that they're small, because usually the thing that dumps more, if it has product market fit, overcomes a 3x very easily, at least, in Hex's terms historically. So, but it's important to show these things accurately, right? Like, I could frame it in the big way or the small way. You might as well just know that both exist, so you don't get caught in any cognitive traps. You're aware of both.
And then there's the other argument that, and I say this to a lot of people, and people that bought Luna when it dropped 95%, what they don't understand is if something drops 95%, it doesn't mean it can't drop another 95% and another 95%.
No, that was a weird one. That had a reflexive property of inflating supply on the way down that the vast majority of coins do not have. The vast majority of alts just die 95 and stay at 95 until they pump again, like Doge, if they have product market fit. If they're straight scams, they just go to zero.
Exactly. That's the point I'm making. So scams. So when you're sitting on your bags and you think, I was talking to a bunch of NFT guys earlier. Again, I love the NFT community. But I was talking to one of their investors, and they're like, "Yeah, we're just waiting for the market to pick up and get my bags to pump." I'm just telling them, like, a small percentage of projects will do extremely well in the next bull run. Again, product market fit. But the ones that don't have product market fit, or shitty team, or shitty founder, if they drop 95%, doesn't mean they'll pump in the bull market. They'll drop another 95 until it's zero. So just a reminder.
Well, yeah, like holding a scam longer just gets you wrecked more.
Exactly.
I cannot express. It's like, look at the metrics, right? Are you on-ramping new users? Is the sales pitch remaining the same? Do you have a durable moat or walled garden? Are the fundamentals getting better? And I think for a lot of these things, like, so for instance, okay, what was the first NFT project? CryptoKitties. Okay.
Yep.
Well, truthfully, I don't know how well they did, and I don't know how wrecked they are now. And I think it would be very useful to know that if you're trying to predict how wrecked the stuff is now versus how it could be, and then how likely it would be to maybe get back again in the future. I think that it would be useful to know that. I also think that you have opportunity cost. Like, even if you buy something that goes up, is it the thing that is going to go up the most? I'm about the mad gains, not the medium gains, the mad gains.
Yeah, but the more you're aiming for those big gains, the riskier it is, because you can just buy blue chips and be happy with a few X's. But if you're looking for the next 1000X, it's going to be a bunch of them going to zero before you land 1000X. So it is a tricky balance.
Maybe the recipe is to go with founders that have a history of doing 1000X and 10,000X stuff. Maybe, I don't know, but I am biased because I did a 10,000X. So
congratulations for that, Gary. I know you have a hand up, man, and good to have you.
Yeah, love the show. Love it when you have Richard on. Really appreciate that, Richard. Thank you very much for Hacks. Really excited about Pulse, all that good jazz. Just wanted to come up on stage real quick and slight correction. The first NFT project out there, pre CryptoPunk NFT, is the ENS. Nope.
I forgot.
ENS, Ethereum Name Service, which I know Richard's not the biggest fan of, but
I hate it.
Yeah, but is the smart contract for the .eth names is completely without admin keys on the blockchain, and if the only thing you got to worry about is your name expiring, and the only attack vectors if the DAO was attacked and the prices did increase. But yeah, just get your Web3 username app.ens.domains. You could learn more about your ENS.
We did a segment, Gary. We did a segment on ENS domains a few weeks ago. I actually bought a 3-digit ENS domain live. So but I don't like Richard. What's the other side? Like, what do you hate him?
Sure. Okay, so you have smart contract risk. When you just have someone send to an address, you don't have any smart contract risk. You generated the address. You have your own entropy. You're not worried about some centralized entity jacking it. Now, okay, what if I go to the people that are the country of Ethiopia and I negotiate with them to take over the .eth domain? And now the dum-dums, they go and type your .eth, right? Like Vitalik.eth, they go type it into the URL. Now they're going to go to a website I control. Is that a good idea? Should we be training our users that they should be typing in .eth things in the browser? There's a totally different mechanism by which it operates than any other actual top layer domain name, because Ethiopia owns ETH and Ethereum and nothing associated with it does, which is why you don't go and type hashtag ETH on Twitter and see an Ethereum logo. You see an Ethiopia logo for a year. Now I think it expired, they didn't renew it, but you're not going to see an Ethereum one because Ethiopia owns it. So I don't like the counterparty risk. I don't like someone else getting rich selling something that I own. Okay. So let's say I own richardhart.com and now someone registers richardhart.eth. Oh, and now they're squatting my name that I built the brand for, that I invented. They're violating my rights. I have to beg some company to assign me my URL. I don't like any of that. I don't like someone else getting rich on my name. And what happens now if I at one time did control the stupid thing, which doesn't even work when you paste it in a browser and has smart contract risk, but let's say magically that I did own it for a little while and I lose my keys or I get hacked. Now what do? Now the hackers get paid on that forever, because instead of doing the smart thing, the intelligent thing, the thing that we all invented from the first place, which is you know people's name and number by social consensus, and then you send to it, sometimes with a test transaction and then a verification to make sure that there was no man in the middle attacks. Sometimes not, but like the cryptocurrency was invented to get rid of counterparties. And this is an entity that's getting rich as a counterparty. Cryptocurrency was invented to remove middlemen. This is a middleman, and it trains people to do the wrong thing. And I hate everything about it. And in addition to that, one of the founders about that villainizes and demonizes me for reasons I don't really understand. So I don't like anything about it, and you don't like it. It seems terrible to me. Why is someone else getting rich on squatting this new fake TLD, which isn't even TLD? It disgusts me. It makes no sense.
Yeah, Richard, you bring up a lot of good points, and a lot of those same points that you're leading about this, you could say about Twitter, you could say about Web2 protocols. What it comes down to is that you bring up a lot of like really valid concerns. Some of those valid concerns are have been addressed. Some of those valid concerns are in the process of being addressed. And if people do things incorrectly, then there's no helping them, because if somebody does get their wallet hacked, then yeah, maybe they lose their NFTs, maybe they lose their blockchain identity, their ENS name. They also lose, all the coins in that wallet and a lot of other situations like that. What it comes down to is that the human readable blockchain-based naming layer, ENS protocol, is out there in a way that has, no, there is a token, but there's no VCs. It's built on builders. It's out there that is the most decentralized human readable naming system that's allowing people to create identities and to add on a human readable layer. And it does add, it's true, it does add a layer of like uh, a layer of things to know, a layer of risk in the middle. If things, it can be seen as being safer as just using someone's IP address as opposed to using their domain name. But I mean, with some of the problems like the .eth, the ENS believes in a responsible naming space. So the only decentralized naming is the .eth. It is taken out of the DNS space, and at the same time, it's forward compatible with ICANN, which means that other people can play. But in terms of the blockchain-based people, Web3 people, and I'm also not a big fan. You mentioned a lot of points in there, Richard. I'm also not a fan of the squatters. The squatters aren't fun, and it's not cool when they're squatting on the names. And
But yeah,
what
so
I can say is, once you
in
do
terms of
secure
the
your name, once you do,
go
I'll
ahead, sorry.
say this: once you do secure your name and you secure your crypto and your NFTs properly, then that name is yours, and then you have an identity. And then if you follow best practices, it just gives you a layer of opportunity. And even though there are legitimate risks that Richard and I
Because
talk about,
I gotta tell you, for a guy representing something I hate, I like you. You seem great. Like, you seem, you took every concern I had and addressed it and realized it was there and maybe agreed with some. And like, look, I understand security convenience trade-offs. I think people should be allowed to make them. And I try to, like, there's so many things we build in Hex people don't realize, all these things out there like Uniswap, you have to authorize the contract to spend your funds. You have to authorize the Uniswap's contract to spend your funds. And God forbid you authorize a fake one, a proxied one, and then they change it, and now you just lose all your funds. And so that design mechanism of having people authorize contracts to do things is actually a terrible thing to train your users to do. And so what we do in our system is there is no authorizing a contract to do anything ever at all. And so if you go to remove all the permissions imaginable, it doesn't harm your experience with Hex at all, because we use message sender every single time as the verification method. And we never use a contract to do things on your behalf and empty you. And so training users with superior design parameters and superior behaviors is like the best we can do to help stupid people make good decisions. So
well, let me give you one cool security feature that the ENS names have is that the ENS names have two Ethereum address records. One of those records is the owner of the address, and then the second record is the controller of the address. And so the name that owns the NFT is not the same address that has the ability to make updates to that record. So the address that you're using to update the records and connect to things, if that gets hacked, just because they theoretically could change the fields and the data fields in the ENS name, they would not be able to change control. So there's a lot of
can I ask you a question?
Yeah, of course.
What happens with Pulse Chain?
What happens with Pulse Chain, or fast forward to
well, PulseChain.com is a full fork
exactly.
of the Ethereum system state.
I know exactly. Yeah, what's going to happen?
Right.
Obviously,
So what
there's going to be a duplicate of all the ENS tokens. There's going to be a duplicate copy of all the ENS blockchain domain names, and just like everything else, it's going to be interesting to see.
So is it going to break, or is it going to work? Do you have a decentralized IPFS front end, or
no?
Is it all kind of fake DeFi centralized, or?
No, everyone's going to choose which contract that people look to as the ultimate source of truth, for things. And they may bridge, some things like ERC20 tokens are going to bridge over, and they're all going to become ubiquitous. And other things like the Bored Apes and NFT projects and ENS names, ENS is more of a protocol than it is an NFT project. It's a protocol. It's, top of the stack development layer of blockchain naming and identity. I don't want to get into that. But yeah, people are going to have to choose,
well, I mean, so what it sounds like to me is that it's going to work fine. So let me take a stab at it, because I usually have everything figured out. I do not have this figured out. I'm figuring this out with you right now, because you know more about ENS than I do. It sounds like, or my gut feeling is the majority of places people actually use ENS is in MetaMask. And if MetaMask didn't handle the .eth suffix the way that you wanted them to and point to the contract you wanted them to, it wouldn't work at all. And so in actuality, the centralization part of making ENS work is begging MetaMask to say, hey, when someone types .eth at the end, can you please point to this contract, which we consider to be authoritative, pretty please? And so as long
I could push back on that a little bit, because what's going to happen is that there's going to be a standard with Ethereum called the EIP 4361, which is going to be assigned with Ethereum standard. And then everyone, when they come to blockchain, instead of all their devs figuring out, oh man, how do I do this thing where I connect with MetaMask and I connect with the wallet? There's going to be a standard, which is the IP 4361.
No, but I'm not trying to dog you on this one.
No, me neither.
Like this is like minimal. This is the minimum abstraction. Like everyone's using MetaMask, you have to beg MetaMask to do stuff. Like it's okay. So my point is, like, if that is the case, that really the only reason ENS works is because MetaMask lets it work with a setting in their code that says.
I'm saying that's not the case. I'm saying that.
But it is now. Like before that EAP rolls out, it is now, right? But that's good.
No,
Listen, this current system state makes Pulse Chain run better, is what I'm saying. Because I think what will happen is, if you just change the network you're on, MetaMask still thinks that Pulse Chain is actually Ethereum. It's just another fork of it. And therefore, I think that people's .eth domains on Pulse Chain will still point to that contract, which is also deployed on Pulse Chain. So I think it will just work. I don't think it's going to break. I think ENS will work on Pulse Chain. By default, right now.
Yeah,
you can test it right now. I think it works.
100%.
My guess.
I'm
yeah.
99% sure that it not only works, but
well, that's nice.
ENS is blockchain cross blockchain compatible, blockchain agnostic.
Sweet.
And ENS will work on Pulse Chain. And what I'm saying is that let it be Pulse Chain,
because you understand a lot of stuff will not work on Pulse Chain if it's fake DeFi and requires you to beg somebody to change something somewhere, right? Like like Compound and like their liquidation bots, they need to be told, hey, go liquidate on this chain. And like their front ends need to be told, hey, go look at this chain too. And so the fake DeFi stuff, or at least, not totally. I like the stuff that just works, right? Like Uniswap just works. Hex just works. It seems like ENS is just going to work. I like stuff that when you do an honest fork, that it just works.
So when you say it just works, there's two different things that meaning it just works. There's one thing where the smart contracts are going to continue to run on the Pulse like fork
Right.
version of the system.
Yeah.
And then, but at the same time, that the fork obviously creates a fork, not just into a new Pulse chain, but also then the
yeah, but
ENS
users decide.
ENS
Users decide what network they're on. Like
Exactly.
you're yeah. So as long like
So my hope
there's two
is that
different universes, and the
apps that are
users
built-
decide which one's authoritative.
and devs, users and devs, two different
Sure.
constituents that get a say. And so my
And
hope is that
MetaMask,
devs-
MetaMask could break either of these at will.
Yeah, well, there's the Ethereum standards and the EIPs and how that goes, because then it breaks everybody. But MetaMask breaking would then break everybody who wants to play with MetaMask. So MetaMask would hurt himself. If they
Look,
did that. But
hey, MetaMask banned one of my URLs once.
Yeah.
So literally anyone that had MetaMask installed, when they would go to one of
There's
my
risk.
URLs, I think
There's
it was
risk.
Pulse X or Pulse Chain, I don't remember which. They just like they banned it, and you're like, hey guys, why'd you do that? Oops, and then they unbanned it, but you're like, oh, the ugly head of centralization has popped up here. Unfortunate,
Yeah, it's a 0-day attack. Once they did that, they showed everybody that they could do that, and
Yeah.
I think a lot of like pseudo DeFi is being shown as as we're seeing with Tornado Cash and things like that. And some people are
Yeah.
learning where's the difference between a back end smart contract and a front end interface.
Yep.
I digress. When Pulse Chain
Hey,
launches,
I like you, dude. Who are you? What do you do again? You seem smart. You're fun to talk to.
Well, I have a marketing technology business with my wife, ADA.ETH,
All right.
Unfolded Life. We just launched Web3domains.com. We're really into Ethereum and Web3 and Pulse Chain, and
Cool.
we're
All
both
right.
like old school hexers, like day 3 hexers.
Epic.
Because day 1 and 2 wasn't very smart, but day 3.
I
through
told
7
everybody. I
Day
told
3
them.
did well.
Yeah.
We listened to you because.
Thank you, man.
It was just like when everyone says one thing, and I just like validating things. I couldn't find proof of what people were saying, and then so yeah, I took a risk, and that risk paid off for me.
People don't
I really
realize how many
appreciate
smart
you
hexagons
being
there are,
real.
man. There's geniuses up in our joint, dude. Like I love hexagon. I had no
Yeah,
idea
cool.
you were a hexagon. Like that's
Yeah,
awesome.
neither me.
Like,
So Gary, you were in the ENS section as well a few weeks ago. So I appreciate coming back. I didn't know you're the guy behind Web3 domains, and I didn't know you're a hex. What is it? A hexagon. So that's
I'm
you-
everything DeFi. I'm everything Web3. I love Ethereum. I love Pulse Chain. I love Hex. I love the Bored Apes. I love ENF.
You should have
I think
been.
everybody in here. I thought
Gary
I was.
should have been on the.
With
No,
the
you should have been on the show. No, not that one. They should have been on the show with Richard and Bitcoiners debate. It's probably the biggest show we've had. We
I
had
was
like
I was here.
75,000.
I was in the room. Yeah.
Yeah, I wish you went up. I wish you went up and spoke, man, because you're pretty well spoken. But yeah,
Thanks,
I'll let you hit
If-
up Richard privately, and
yeah,
I just want to give you.
I'm in. We Richard and I have DMs together on Telegram. If he checks his Telegram for Gary Palmer Jr., I'm Gary Palmer Jr.
oh shit. Yeah, I
Uh,
recognize that name. You have
yeah,
like a PFP of a monkey, I think.
Yeah, some people dig it, and I dig it, and yeah. But listen, I again, I have been nothing but helped by Richard and Richard's free book and Richard's community, which is partly my community. And on the Ethereum side of things, my hope is that everybody looks into ENS domains and secures their decentralized, .eth name, because although, like if you want more privacy, maybe you have an address with no ENS name. But if you do want a public identity, once you secure your public identity with your .eth name, then you can add your. I don't have it set up this way right now, but once Pulse Chain comes out, I'll be able to receive Pulse tokens with my ENS name. I'll be able to receive Bitcoin.
So Gary, quick question, man. Can you what do you think about the three? I need to end this discussion, but I'm curious. The 3-digit flex, 3-digit.eth, which is the one I bought on the show a few weeks ago.
Some people might think it's stupid, but scarcity is really cool, and people like scarcity. And there's a huge network effect on both the number of people purchasing ENS names and the number of apps and dApps that are integrating login.xyz in the Web3 protocol. And so as ENS becomes more popular, and we just hit 2 million names in 8 days, we just added on point 0.1, 100,000 new names, or a lot of names, a lot of apps, dApps adding on, signing with Ethereum. So that's creating this network effect, and the numbers are only going to increase with the decentralized, version. There's only 1,000 of those names, and then what's more is that everyone needs to realize it doesn't matter if it's an emoji, a number, or a word. Every word, every letter put together into a word is a symbol. It's all, every symbol is a meme, and every meme has value. And so therefore every number has value. There's only 1,000 of them, and there's only 10,000 4 digits, and there's only 100,000, or not, 90,000 5 digits, you know what I mean? So forth. So scarcity is cool, and ENS names are NFTs with real utility. It's not just an NFT, it's a protocol.
Pixelord, I know
Yo,
I saw you unmute. You wanted to speak, man?
yeah, I was gonna say I got some emoji, 3 emoji domains and
Yeah, that's crazy.
four
The
digits.
emoji domains.
Yeah, I love them. I just love them. I don't know. I keep staking them and stacking these, these emoji domains NFTs, or maybe also I got some 3 letters domains, and I just keep them. I will see. Maybe something happens. These
Yeah.
are really rare. It's kind of
Who would
the
have thought?
collections inside the collection. It's a collection
True,
inside the collection. So it's very cool
like
that people make special websites where you can track these domains, because on OpenSea it's really impossible. And yeah, this is a huge movement.
And if you're on
yeah,
your Brave browser, you can go to garypalmerjr.eth, and then I'll ask you if it's okay to use Infura, and then it'll redirect you to my IPFS website.
do you want to know something funny, Richard? That we talked about jewelry in the last discussion about NFTs, and you talked about your diamond. Did you hear about the Tiffany pendant they made just for people that own a punk? And they make your punk into they only made
I did
a
not.
hundred and so Tiffany made pendants purely for punk owners. They only did like a couple of hundred of them. It was like 30 or 50K a pop. So that's the first time I personally ever buy jewelry, because I felt like it kind of Web3 related, and it was a good flex. But maybe if you got a
No, Richard.
I'm
let me,
looking
let
at
me,
a
let me
picture
tell
of
you
one
something,
right
Richard.
now, dude, and it looks real not good.
No, Richard.
yeah, I know.
Richard, let me try pitching this to Richard. This is what you get. First of all, somebody owns a CryptoPunk, and it's a unique design. And then they get to not only get they get a real physical limited edition of 250, gold jewelry, diamond pendant,
Oh.
like a physical thing, and they get the NFT. And now, Richard, they have a set. So when they can now sell the Tiffany's jewelry, and someone will be like, not only do I want the pendant, but I want the original punk that goes with it, and it now adds value. Like all 3 things together create like a new level of value for that collection.
Yeah, let me do
And
you
one is physical.
some verbal combattery here real quick. Hey, people are stupid enough to overpay for bad art. Now they're stupid enough to pay for the same thing digitally, even more. We fucking reloaded them twice. Lol. Okay.
Oh man, well, it was a good
I
way
mean,
to
like,
end the segment.
it's if the damn art were cooler, it would be more legit. You know what I mean?
No, so I'll tell you. No, Rich, we didn't add this. So it starts with a pendant, but they're building it into. They're gonna add more utilities to it because it's represented by an NFT. So it could give
I'm
you
gonna
exclusive access to
copy
some
every
Tiffany
one
events.
of these things for my NFT. When my NFT comes
Yeah,
out, I'm gonna do all of these silly things too, and then I'll be more friendly towards them.
you should. And you should do like try to do exclusive drops for like a punk or an ape community. And then you start adding utility to it. Like you do an event, they get exclusive access to it, or they get exclusive access to a drop that you're doing, whatever it is. So that's what Tiffany's doing, adding more utilities to it. And yeah, welcome to the dark
How do
side,
you
man.
feel about exclusive access to a 95% dump?
All right, man.
Hex drop
Richard,
95.
Richard,
Anyway.
pleasure to have you, bro, man. It was a good segment. I hope you enjoyed it as well.
Thank you, guys.
All
Thanks.
right.
It's been
All right,
awesome,
bro.
really. Thank you.
Thanks a lot, Ryan. Thank you. All right, everyone. It was a pretty fucking cool show, to be honest. And Discord, I know you guys are going crazy to have Richard in Discord. You just got to convince him. I did a tweet telling him to jump in, put a link there. So just hit him up and just ask him, try to get him to join you guys on Discord. Richard, you got a lot of fans there. Before we get to the last couple of giveaways, I want to, and then go through the last. I've got the Rolex winner up on stage. So I want to chat to him in a bit, how he won the Rolex 2 weeks ago, because it's a pretty cool story, and how he turned out to be a pretty cool dude, investing in property in Dubai and Singapore, and owns a whole bunch of fucking Rolexes. So he's just going to add one more to his collection. But before doing that, open games, I'm pretty fascinated by what you guys are doing, because I'm heavily investing in this space. I wanted to selfishly ask you a few questions. Are you still with us, man? I don't know if you're still with us, but I want to be selfish with my questions if you're okay. You there, bro?
Yes, I'm here, Mario.
All right, cool. You cool, cool. All right, man. So first, um, can you go through again? But I want you to say it slowly in just one sentence. How would you explain quantum museum? And I'll tell you why I'm asking.
In one sentence, we explain that we go to preserve the history of the life through the NFT and the blockchain, and we don't go only sales or make a museum. This is have more works at the end of the road that, for example, make all the fossils into the blockchain to certify these fossils and stop the black market, for example.
I agree. I agree. So essentially, you're solving a couple of problems. I'm just gonna mute you when you're not speaking, just audio. And this is like I want to stress this a bit further because it's a space I've been interested in for a while. And again, at NFT Tech, we're pretty invested in the space. I'll actually connect you to the guys at NFT Tech, the CEO there. I'll if Romy, you can hit him up, please. Hit up Moro. I want to connect him to the NFT Tech guys. So essentially, what you're doing is represent the NFT represents the physical piece of art. Let's say fossils. Number one, is that correct?
Yes, we make a 100% physical copy in the digitalization.
Okay, I like it. So essentially, when I go into that, let's say there's a dinosaur museum, and you're migrating that into the metaverse, so creating a digital version of it. Am I on the right track so far?
Exactly, that's the point.
Okay, and then the NFT represents the actual fossil. Let's say it's a T-Rex, and that shows that the T-Rex representation I'm seeing, the virtual one, is actually representing the real one as well. So essentially, acting as a so essentially creating a virtual representation of it, but you're also using it to track the physical T-Rex bone as a way to avoid counterfeit bones. Am I on the right track still?
Yes, we are making the
Okay.
digitalization. Yes.
Are you looking at also, so just having a museum that's purely virtual is okay, but what's more exciting is starting to gamify it and add more experiences to it. Because when you have a metaverse, it does open up things you could do that you can't do in the physical world. So will the NFT also represent different forms of utility? Let's say that T-Rex NFT. Would that be the case?
Exactly.
Okay, and can you give me ideas of, and this is where it gets exciting. So anyone that's investing in the NFT space, I'm a fan of PFPs. I have punks. I made a tweet about buying my next PFP. I just think, I don't know, I'm trying to value them and see if the market has got further to go. The Bandao liquidation is kind of getting me thinking twice before investing more. But I've got, I'm invested in punks, few punks. That's all I have, and V1 punks. Um, but I want to touch. I've talked a lot about in-game NFTs, but this is another example of an NFT that has utility. So if you're looking at space, understanding the space, NFTs like this that have utility, and we had the Etihad NFT earlier as well that has real life utility. You got, and you can go to their website. I think I retweeted their tweet and it's pinned above. So if you look at Etihad's NFT above, it's pinned above. Check them out. They have actual utility. So you're not buying it just to make money. You're buying it to actually use it. And you're more when there's actual utility to an NFT, especially real world utility, it's much harder for it to go to zero because people could actually use it for something. So when it's close to zero, people will buy it because they can fucking use it. So that's something very important to remember. But when it's an NFT that represents a promise, the problem is the promise can go to zero because it can be, delivering that promise becomes a challenge. So, but just to go back to you guys tomorrow about open games, the NFT that represents T-Rex that has other forms of utility. What's another example of utility you can create or an experience you can create using the NFT in that digital metaverse?
You can use, for example, all the metaverse will be connected between all the games. For example, in the quantum games, you can go like World of Warcraft, just to put an example, and you fight and you can find a piece of this. You can find, for example, with the boss, a suit of the T-Rex. So you have the NFT. So and only an special collection. So you have the utility, one, to get these pieces and get money, or you can use it, for example, to go to the real museum, because we go to build a real museum, not only the metaverse. And you can go, for example, to a place to find dinosaurs with everything paid. And maybe if you can get one special piece in the Quantum Museum, you get, for example, one ticket to go to see Formula One in Abu Dhabi in the paddock. It's an example. You know
So
what I mean?
so that's a good example. So what you're doing is essentially, I'm just gonna mute you again just because you got a lot of feedback. Perfect, thanks. So essentially, and this is what I think, and I've talked about this a lot. By the way, everyone, the giveaway is about to come. So just heads up, we're gonna have the riddle guys come up on stage after we talk to our friend Tommy who won the Rolex. But I want to touch on what Etihad and Open Games are doing. Open Games Builder, sorry, doing. Um, and where I see the space going. And something I'm really passionate about. And again, it's very important you understand what I'm talking about, because if someone's talking about NFT PFPs now, it's not that exciting. But if they were talking about it in 2017, much more exciting. Why? Because it hasn't gained that traction yet. Now we've already been through the bull run. What hasn't gained enough attention, in my opinion, and I could be wrong, and I'm not giving you saying go buy it now. I have no fucking idea what will happen. But what I'm trying to tell you is that it just makes sense. In-game NFTs, um, I'm not going to name drop games again, but we've name dropped a lot before. In-game NFTs make sense because players, even though games have a high likelihood of failing, players will use those NFTs in the games. They have a purpose of existing other than making money. Game NFTs, let's say back to Etihad, they have real world utility. You're gonna use it as to be able to get lounge access or discounts for tickets or whatever utilities they have listed on their website. And if you go on Open Games Builders NFTs, he's just telling you that the NFT will have utility in avoiding counterfeit dinosaur bones. It will represent the original representation of that physical art in the metaverse. So it's a real representation, not someone just copying it. Cool, but not that great. I can see a copy as well. Okay, well, it's also going to give you access to the physical museum as well. Maybe some events they're doing. Oh shit, they're going to integrate it into another game. We're having a T-Rex NFT of the T-Rex, the real T-Rex fucking museum bone. Will give you access to a T-Rex pet in some fucking metaverse, and that T-Rex pet has some sort of capabilities that gives you an edge in that game. It sounds very far-fetched, but for gamers, they're like, holy shit, this is fucking cool. Now I want to go to a museum. I want to see the T-Rex. I want to maybe win the NFT. So this is the evolution I see in the space. This is why projects like Open Games, like Etihad, and projects we've brought in another, Faith, who's also been on the show, and we talk a lot about. They bring fashion to the metaverse. Well, the NFT is representing something. It's avoiding counterfeit branded clothes, so they're acting as that sort of utility. So you can't wear a fake Dior or fake Rolex or whatever it is. But they're also acting as a digital representation of a Dior T-shirt. Imagine buying an NFT from Dior that gives you a physical T-shirt that also has a virtual version of it as well. And you can wear that same T-shirt to a physical fashion show, and at night go an after party where people are discussing the different fashion dresses and connecting, wearing that same T-shirt that people can prove is authentic. So
Hey
these are the
Mario,
forms of utilities. Yeah, go ahead, bro.
we're doing that stuff right now. Like this has been the most exciting week of my life. Like we're literally talking to Tommy Hilfiger and Gucci about integrating these like NFC chips and bringing these things on chain. Some people are like using it for authenticity. Some people are using the NFTs just to have a simple digital closet of the things you have. And this is all like actually happening. It's not even a pipe dream anymore. This stuff is really awesome. You know.
I'm gonna connect you to Wahid, man, from Faith. I think you guys should speak. So Wahid is he runs a big fund. Has a few $100 million on the management. Invested in a whole bunch of fashion brands. I'm gonna meet him in Paris for the fashion week next month, I think, in a month. And he's doing the same thing with all the top brands. So I'm just messaging my team now to ping you and connect you with Wahid.
We've had 35,000 people tap these NFC chips in the last 3 weeks since we've launched and onboarded those people to Web3 seamlessly with no KYC, no any form of putting your ID in or connecting your bank or waiting 7 days for Coinbase to verify you or having to write down a seed phrase and hide it under your pillow or whatever. So as an entry point, like all of this stuff is so awesome. But keeping it on the topic of with open games, I have a question. So are these NFTs like in these games only going to work if you create the NFTs? How are the NFTs going to be like what contracts are you going to use to recognize like items and players and such, because like you can't just take a Bored Ape and give it a in-game item that like you grabbed at a museum. So like how are you guys only working with NFTs that you create, or are you going to have some kind of token gating process for like other popular NFTs for like your metaverse?
For the moment, hello, nice to meet you. For the moment, we are including our own NFTs because it's connected with the real asset with the companies we are working. In the future, maybe we can add more value with another companies. Even like you are saying with the clothes, we are talking with Pink, is a brand of golf, and we go to make some digitalization. They are waiting for the golf game to include these brands into this market, so people can buy, for example, the T-shirt in the reality, and they get the NFT to use in the golf game. Just for example, it's like you are talking is almost the same, and the vision is the same.
That's cool, man. Well, if you guys need any help with NFC chips, we got that shit covered. Our company's called Cupcake.com, and we're freaking having a ball, man. We did a Lollapalooza in the U.S. and it was really successful. 35,000 new users.
I had no idea you're doing this, man. Congratulations.
Yeah, dude. Like it's not just a dream anymore. Like these conversations, it's like
it's happening, man. The brands are interested. They're having those discussions. You know, I'm going to speak at different events, focus purely on fashion, on how they can incorporate NFTs. Because you got a lot of these brands doing it wrong. They just do a drop with basic utility just as a cash grab. But these days are over. So now they're looking at exactly how it makes sense
and you're no
looking at the
longer
metaverse as well.
you're no longer approaching them and saying like, "Hey, come make a random NFT collection, Gucci." You're saying, "Here, you can put this technology in seamlessly, and your users don't even have to know that they have an NFT. It's just a form of tech." That's the way that is supposed to work. Like people that swipe their credit card and use that ease, they're not like, "Oh, Stripe's the best." Stripe or whatever it is, it's just in the background working, right? So we just need stuff that's in the background working, making people's everyday lives better. And I see it happening over and over again, more and more, like an exponential rate. So it's really been fun. And yeah, great space. Thanks for having me up. I jumped in late because I was on the wrong time zone. I'm learning how to use and be a big boy here. So.
Good, bro. Like, just want to go back to Etihad. You guys, can you tell me again? I've tried to repeat your utility, but I think I butchered it. What's your utility exactly?
So yeah, so we got two different types of utility, I guess. So short term, everybody who buys an NFT who mints them, and I'm bearing in mind there's only about 12 hours left on the sale. Everybody who mints them will directly get Etihad Guest Silver status. So that means you'll get the business class lounge access, you'll get the priority check-in, you get the extra baggage straight away, and a load of other benefits that come with silver status.
For how long? For how long?
So you'll get that for 1 year when you mint an NFT. However, as we build the NFT tier and the sort of governance system, people will be transferred from silver tier that is sort of like there whilst we build, and then they'll get transferred over to the NFT tier where they will stay indefinitely as long as they have the NFT. So then, of course, with the NFT tier, you know, you can then the community as a whole, they get to vote and they get to create proposals and vote on those proposals using their NFT as a voting right.
Okay.
So yeah,
and then are you looking at? So my question is, are you looking at? And that's I'm actually genuinely curious. Would you be building more utilities on this over time? Like, how's Etihad? Not Etihad. Yeah, Etihad. How are they? Like, how are they looking at it? Is that a short-term thing, or they want to build more on top of it over time?
Oh yeah, no, it's definitely long term, and I think, you know, a great way to think of it as we start as Etihad Airways, and we add the utility and we add the proposals in based on what the community wants, and then we expand based upon the sponsorship efforts, and then we go into other Web3 projects and other things that people want actually physically in our community. They might want a whitelist for another community, so we're like, right, okay, we'll try and get that for you, and that's the kind of mentality.
So you're launching. Hold on, you're launching an NFT, and then you did a partnership with Etihad.
No, so we launched the Etihad NFT. I'm from RCube, and we launched the Etihad NFT for them, and we're building the actual Web3 technology around the Etihad NFT for them as well.
So this is the official collection of Etihad Airways, and like Harvey mentioned, this is definitely a long-term plan. However, we decided to start out with instant utility as that is something rare in the NFT space. However, we want to keep on building this Etihad NFT Club where proposals, as in a benefit that holders could potentially add to their tier. So that's how sort of the proposals work. And the NFT tier would be indefinitely continued. So it would be for as long as you hold the NFT. And we are planning to build even more something beyond that, which will be real soon.
Okay, cool. All right, well, I think that was a Pixel Lord. Anything to add on this point, man, before we go to the giveaways and the riddle?
No, I was just gonna say we do currently with my small team. We do this metaverse digital fashion. We have one outfit out. So if you guys, I just welcome you to check it. But maybe you want you were speaking about digital fashion, and it's really interesting that it works through um, the platform. It's called Ready Player Me, and you can just
Hold
create
on,
your
hold on,
avatar. And
hold on, hold on. Are you part of? Hold on. Are you part of Ready Player Me?
no, I just have a drop there. Yeah,
Oh,
we partnered
nice.
with
Okay.
them. Yeah, for
Congratulations.
this
Yeah, they're
drop we
doing fucking
partnered with
great.
them. So yeah, it's a fucking great platform, and you just can create avatar really fast and use some of the free outfits, or maybe you can pay and buy some of the exclusive ones like ours. So yeah, you just can wear it basically in all big metaverses. So it's really
I
cool.
like it.
It's really
Cool.
works everywhere. Yeah, just check my
Congratulations.
pin
All right,
tweet.
man.
Yeah,
We'll do,
yeah.
bro.
Just
We'll do.
say
Pixel,
check
pix,
it out.
pix, pixel or ORD. Pixel
Pixel or
ORD. Pixel
yeah,
Ord.
Pixel or
Cool, man. Well, good to have you, bro. Appreciate it. Now we're
thank
gonna
you.
kick
Yeah,
off the giveaway, everyone. Thanks a lot, man. I appreciate it, bro. Appreciate you.
Sorry to interrupt, Mario. We now also have Etihad's global head of marketing, Simon. I think he just requested to speak.
Yes,
Yeah, I'll bring. I'm trying to bring him up. He's no, I
uh,
can't see the request.
I'm here. I'm here, guys.
Oh, hey, man. Hey, man. Yeah. So congratulations on the launch, man. Can you hear me fine?
I can hear you loud and clear.
Yeah, before we kick off the giveaway, the final giveaway in the riddle, and then chatting a bit to Tommy, like what's so you work directly with Etihad? You're not from the NFT space, correct?
Yeah, so I'm heading up marketing for Etihad.
All right. So
And
was it your idea to do this? I'm curious.
yeah, so essentially a year ago we started to think how we can get into this space and how we can start to leverage Web3, right? And our thoughts evolved together with
Can
Arcube
I?
when we met up with the guys from Arcube.
I want to tell you something and be very honest about it. Can I speak freely?
Absolutely.
Cool, man. So one thing I've learned, and this is for anyone looking to launch a project, and so I do two shows. I do one on Tuesday, which is purely the NFT community, and I do this one on Thursdays, which is general crypto. By the way, everyone, fuck, I forgot the name. Who's the director joining? Michael, Michael Bay, Michael Bay. Michael
Michael.
Bay is joining. Yeah, he's joining next Thursday, everyone. So that's gonna be sick. He's gonna be on the show. He's the fourth highest paid director, Transformers, Armageddon, etc. Anyway, I'm digressing. So on the Tuesday show, we were discussing this, and I made a tweet about it. NFT projects so the OG Open Games as well, Open Games Builders, Mari. I think you'll find this interesting as well. Anyone launching an NFT project, what I've learned is that you could have an incredible project. You can have a lot of big celebrities, great business behind it, like Etihad. And I don't know much about your product. I haven't gone deep into it. I don't know how if you minted out, etc. I haven't looked into it. I think you're still minting. 80% sold, so congratulations. But like this, what you guys are doing is for me a no-brainer. So I'll probably go and buy an NFT, and I never shill a project. So I'm not saying everyone go invest. I never do that for any project in my life. But it's something I'll probably go after the show and buy an NFT because it makes sense. But what I've found in this space is that projects that, because it's so nascent, they don't understand and get into the NFT guys, the NFT community, which are so interesting. And so like the spaces of the NFT community is so fucking different to the crypto one we're doing now. We used to merge them before we separated them because they're completely different communities. And our studies have shown, I'm going to post some numbers in a few days, that uh, any project, sorry, someone's DMing me the name of the director. Yes, Michael Bay. Any project that launches that doesn't have that NFT tick of approval. What I mean by this is having those NFT thought leaders talk about it really struggle to succeed. I'm not saying don't succeed. And I think long term it doesn't matter as much because eventually utility will win. But in the short term, it's such a funny beast that we're doing something in the NFT space finally, not launching an NFT, but something more interesting. And like we would never dream of doing it without all the relationships we've built through the show and just we have an NFT incubator as well. Without our incubator and the show and the relationships we've built, because we've seen so many brands do it and not either acquire or partner with the NFT community itself and go just understand it and build those relationships and struggle. But then we've seen projects that are very mediocre, but they've gotten the respect of the NFT OGs, for lack of a better term, or just like did what Nike did and acquire a project that has that respect, that NFT community support, and do extremely well. And the best thing to show for that is look at the top NFT projects. Um, Punks, Apes, Mutant Apes, CloneX, and most recently, uh, D-Gods from Solana. It's Solana NFT in the top five, which is insane because Solana's still like 90 something percent smaller than ETH, I think, based on trading volume. So, but they all of them are not by a big brand. All these projects are not by a big brand. They were launched by native Web3 people. So just a tip to anyone launching an NFT project, anybody, is get into the NFT community. The shows on Tuesdays are perfect for this. You can see who they are and just connect with them. All the big guys just come on the show on Tuesday. So we do the biggest NFT show. So it's a good place to start and connect with them. Or just fucking find them. It's hard to Google them and know who they are, but once you know them, some of them have a lot of followers, some don't, but they have the clout, the respect. And it's crazy to see how big of a difference it makes when you get those guys on your side. So just a side point that I hope you find valuable, not only for Simon from Etihad or Mari from Open Games Builders, but for anyone launching or looking to launch an NFT, or anyone investing in NFT projects, just keep that in mind. NFT projects that have the respect of the community, they've always outperformed. I think this is more of a short-term trend in a nascent industry, but a very interesting trend nonetheless.
Mario, thank you. I think that's sterling advice. I think we've seen it. We've seen that in engagement with community, NFT communities, and projects that really sort of showed interest into our project. We did AMAs on their group, with their communities and with their followers. We did several of these in the build up to the launch, and we saw that interest really stem from these collaborations that we did. So I think you're spot on, and for me, it was such a learning curve just to see how marketing and sort of communicating around NFT projects is so different to all sort of traditional marketing. And to your point, maybe this is just at the beginning of a project, and then a successful project will then find its place and do well and be successful. But to launch it, I think you're spot on. It was such a learning curve for me, at least, and for Etihad.
It's crazy, yeah. And I'm a crypto guy. I've been in crypto since 2017, and I'm still like trying to understand and get into that NFT community. That's me on a personal level. My team is NFT native, at least the incubation team, the NFT incubation. But yeah, I personally I'm in a similar position. And again, I've been in crypto for years. But last question on a selfish thing to end it. I'm an Emirates guy. I travel on Emirates every week. I can't remember the last time I was on Etihad. Considering those facts, other than flipping, so from an investment perspective, which obviously is less interesting to me, but from a utility perspective, there's no, I don't get any benefits with Emirates if I own your NFT. It's purely Etihad. Is that correct? I know it's a stupid question, but fuck it.
No, it's not a stupid question, but that's absolutely, you're correct. I think, and the way we saw this is, we know that the NFT and the utility, the immediate utility we're building into this NFT is not going to appeal to anyone. You need to have the interest of it, or you need to be a frequent flyer or someone who flies regularly and is based in the UAE or in the Gulf area, or is sort of flying east to west really regularly, so that you could actually make use of the utility. And I think short term, we built in a utility which was immediate, but in the long term and the more medium term to long term, we're saying, even if this benefit is not working for you in terms of silver, we are going to create an NFT club, and this is clearly our direction. We have the CEO's support on this, just to understand, what are the additional benefits that we can build into this NFT, right? That even if you don't fly regularly, you're not based in these locations, you don't fly east west regularly. What else can we build in? So to your point, if you want to continue flying Emirates, that's fine, but we can build in benefits that maybe based in Dubai you can still make use of and not necessarily have to fly with us, right? And this is what we're exploring at the moment, and we're using the expertise of RCube and other people who are really pitching into this project and really giving us that direction that we're after to learn. Yeah, and make it
Cool,
worthwhile.
love it. Well, I like what you guys are doing. I like what OG Games Builders are doing as well. So congratulations to both of you. I think it's two of the more interesting pitches, because just Tuesday, 2 days ago, we're discussing on building utilities around NFTs. So I think is perfect timing as well. Chat, I know you're here for the riddle, and everyone's waiting to win more giveaways. So everyone that's listening, we've given away over 100K By today, it'll be over 100K in giveaways. And one of the winners who's on stage right now, Tommy, you've been fucking patient with us, man, but you got a Rolex from us, so I'm not feel too bad. But man, like, tell us before we kick off the next riddle, the final part of the show where someone wants to win some sweet dollar bills. How did you win the Rolex winner to add it to your collection, man?
Hey, how's it going, Mario? Thanks for having me up. Just wanted to reiterate you earlier. You said I was from Singapore and Dubai. I'm actually from Canada.
No, I mean, no. You're investing. Sorry, you're investing in property in either Singapore or Dubai, not from. I thought you're in the US, not Canada. But yeah, I said you're potentially. Oh, that's at least I thought what I said. You're looking at investing in property in Singapore or Dubai, and you own a bunch of Rolexes, which is a pretty cool story. And you have a project as well.
Bali and Dubai. Yes, that's correct. Not Singapore, but yeah.
Oh, Bali, yeah, even better.
But yeah, no. The riddle for me, it was just obviously just staying tuned in. It was all about the Rolex, obviously the giveaway. If you read for the first half of the riddle, it was kind of just more so talking about Yeti Society, the brand or the company that was basically sponsoring the Rolex giveaway. And then the last tail end of it, it was kind of, I'm not going to say easy, but if you just kind of broke it down, is on a face it, this protects it from the ground, yet in place it keeps it wound. If you think of on the watch face, basically it protects it from shattering on the ground.
So can you say that? Can you say that again? Just so for everyone listening, just what Tommy's doing now, he's breaking down how he solved the last riddle to win the Rolex. So we're gonna do a riddle now. The guys are gonna do a riddle right after this. So listen to Tommy and Tommy, break it down. So what did the riddle say? How did you connect it to the sponsor, etc., and how things are connected? Just for people listening to see it, to try to win in the riddle in a few minutes.
For sure. So the beginning of the riddle, a store sign in sight with a Yeti in light. So obviously Yeti Society, it was sponsoring the project. But inside you find a way to track time. So obviously I'm going a store, you find a way to track time. I'm thinking watches. They're giving away a Rolex, obviously at the time. The watch ticking away, high fashion to time our way. So obviously high fashion, I'm starting to think APs, Rolexes, Richard Milles, stuff like that. And then this is really the indicator that gave the word. The word was crystal, by the way, if anybody doesn't know. So basically at the end of the riddle, it says, on a face, this protects from the ground. So protects it from the ground from like shattering, yet in its place, it can keep it wound. So if the crystal's on it, the crystal that protects it from the ground, if it's shattered, it's the watch doesn't work anymore. The time's not going to be wound. So I just kind of threw a dart at a dartboard, threw up crystal, and we ended up winning.
Cool. How many Rolexes do you have now?
I have 5 currently.
Congratulations, man. I'm more of an AP guy. I don't.
It's more of an investment hobby for myself. I obviously wear one as like my daily, but again, my background comes from real estate and investment, and I've always been a huge watch fanatic, and it's pretty crazy what these things have done in the last year.
Do you think they'll be represented? So everyone that says to me, Mario, NFT flipping is gonna die, I believed that until I realized that NFTs just represent digital assets. And what I said, like, I think in the future, NFTs will essentially represent physical assets like watches being represented through an NFT as a way to authenticate it. And people will start flipping NFTs. So then you'll have a lot more liquidity coming into something like watch flipping. Would you agree with that statement?
Well, 100%, because like for instance, right now, like if I want to go buy a Rolex, I've got to go to a very accredited dealer. I've got to make sure that it's legit. I've got to get an appraisal done on it, read the VIN number, the whole 9 yards. Whereas if it goes to the blockchain and it's digitalized, you just simply verify whether or not that was real, bought from a Rolex dealer or not, and it's very easily simplified. And as well, I think NFTs are going to take over a lot of businesses just in the community aspect and the application sense. It's just got to get over the rug period of all these people just trying to make a quick buck and running away with it. Oh, did I rug it out?
I think we might have lost Mario's audio.
Oh shit! I was no. I didn't. I was just talking to myself like an idiot. No, what I was saying to everyone is, don't forget what I said. Yeah. Oh, okay, I get. All right, cool. That's a nice jab. I'm not joking. So what I was saying earlier is, and before Tommy said, just a reminder to everyone is that not watch flipping, fucking PFP flipping might have been, that might be dead. I'm not saying it is. I'm saying might be. Let's say you have that argument, which is a fair argument to have. Doesn't mean NFT flipping is dead. And I'm not a flipper, by the way. That's coming from someone that doesn't even know how to fucking flip. I hate trading and I don't know how to trade. I wish I did. But it was PFPs. Will next be in-game assets? Will next be sneakers? Will it be fashion? So NFTs will essentially democratize the ability to buy
Music
those assets.
NFTs.
Make it music NFTs is hyped up like fuck. Imagine flipping music. I'm gonna do a whole
We'll
segment
do
on
that.
this.
Yeah, this year.
I
I
want to
think
do a
this
whole.
year or the next year. Yeah, yeah.
I'm gonna do a segment on this, man. I'll do it next Tuesday. But like NFT flipping as a concept is not PFP flipping, it's digital asset flipping. And it could be anything. So and music, let's do music fucking next week. I like it. It's been
Well,
gaining a lot of traction.
Well, I'm back to the PFPs. I do also think it is an industry that has a potential to stay alive, especially the big blue chip projects, because essentially, like you look, some of the artwork that was done 100 years ago, hundreds of years ago, people still trade in it. It's went up extreme in value. So I think art's always going to be a collectible item, but it just again, it's going to be very, very few projects, and those are going to be the blue chip projects that have communities that just never end.
Cool, man. I think it's well said. All right, everyone, we're going to kick off the riddle. Chat is on stage. Keep an eye out on my profile. Follow all the speakers right now. And I've just brought my dancing partner on stage. A lot of people have asked me about her. Jennifer is her name. A lot of people keep asking me about my dancing partner. She's very shy. So I'm like, fuck it. Let me bring her up on stage. So she's on stage. Give her a follow, even though she'll probably never tweet. But make sure you follow all the speakers, including TB77, which is Tommy, and of course Open Games Builders and Etihad, our sponsors and pitches earlier. Pixelord, Gary, who was a great fucking addition with Richard earlier, and of course R-Cube, who did the launch for Etihad, and of course the man, the myth, the legend, Chet, who's doing the riddle with Sigmund. Chet, we're gonna do the riddle now. How is it gonna work? Everyone's waiting. Discord is lighting up. Everyone wants to win the prize. How can they win? What do they need to solve? How does it work? Tell us.
Yes, how's it going, folks? It's fantastic to be here today and to be presenting you all with another wonderful leg of this journey that is coming your way. We've had quite a lot of great engagement from the community, and I have to congratulate everyone for getting as far as you did. Being able to even get that tweet over 1,853 likes at the beginning of the week is pretty fantastic and shows a lot of the strength in this community. So very awesome there. What we have coming for you today is a very interesting riddle. This one's going to be different than what you've seen before. Mario has been giving you some hints, 3 hint words throughout this space that are going to be quite key.
I didn't say the third one. I didn't say the third one. I'm going to say the third one now. Let me say it to everyone. I said 2 of them, so I hope you guys got it. The third one is, let me see which one the third one is. So third one is thunder. So I said the first and second. If you missed it, you're not fucking listening. The third one is thunder. All right.
So
Chet,
wonderful hint is just dropped for you all and the family are things that are going to help guide you on this this next riddle that is about to drop. The key thing that I will say here for everyone, if you want to solve this riddle, please make sure that you go to the Telegram link that will be posted in the riddle. And then please post your answer there. That'll help us track who gets the answer the fastest. And the person who does will get $1,000 in fiat and tokens. So congratulations to whoever that is and good luck. The riddle will be posting very soon. Have a look up.
And while everyone's looking at the riddle chat, how does it work? So for anyone that's just listening for the first time, they need to solve the riddle. Where do they put the answer and how do you choose the winner?
Absolutely. So they put the answer in the Telegram that will be posted directly in the link on the Twitter where the riddle is posted. That is where the Riddle Hunter community is at. We can easily track your answer there, and then we will know who the first person is. And the first person to get the answer correctly will be the winner.
And Rolex was last week, wasn't it, man? We've given away over 100K by today. Rolex was last week. It's been fucking insane. And while you're doing that, while someone's solving the answer, what's the plan? You know, we've been discussing about partnering with NFT projects to do more riddles. A lot of NFT projects which have shown a lot of interest. What's the plan over the next few weeks and months with what you guys are doing, the journey of riddles? You there, chat?
So yes, sorry. So as we are going, I was talking to myself this time. So as we are going forward here, we have a very long, interesting journey. We're about midway through this current journey that we're in right now. This is the second chapter. We had the first chapter, which ended in a seed phrase giveaway. This is the second chapter, which is going 4 weeks long. We're in the second week of it right now, which included the Rolex that happened last week, this 1K that's happening this week, and then some interesting things that are going to happen over the next 2 weeks. And you will find that this will be somewhat similar to the way the giveaway system happened last week, but I'm not going to give away too much. I want you to just pay attention to the fact that the riddle words are out there, and keep track of them. That might be very key for you going forward, and we're going to give it a little bit more hints as we go.
Cool, man. Love it. All right. Well, guys, keep an eye out on the Telegram group. I checked my latest tweet, I guess, which has the. Let me see my latest tweet. Oh, fuck. Okay. New riddle. There it is with an image. Holy shit. All right. Let me put it above in the space. That's actually pretty fucking cool. You guys are going above and beyond with this, you and Sigmund. Make sure you follow Chet as well and Sigmund, who's not on stage. And Chet, you'll announce here when someone solves it.
I'm going to announce that right now. Actually, we have someone who has solved it in the Telegram with very, 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 very lightning fast speed, I think would be the appropriate thing to say here. Nunya, with the word storm, which is the solution to this riddle, because, of course, this is a quote from the famous X-Men character Storm. This is an infamous quote from that character. So congratulations, Entertaining Ape, at Entertaining Ape on Telegram. You are the winner.
You guys are going above and beyond. You're putting like 10 hours, you and Sig, each one 10 hours into this. So you guys are taking this, you're not taking it lightly. So next space link. So congratulations, guys. All right, well, I'm going to end the show. I think it was a sick fucking show. Incredible debate. Richard Hart came in, which stresses me every fucking time he comes on, how to handle it. Congratulations to the winner of the last giveaway. Jen, what do you think? You came in late for the show because you're doing your Spanish lessons. You want to speak for the first time on a show in front of thousands of people? Thousands will listen to the replay. Most people listen to the replay. So what do you want to say to them, Jen?
I've been here for the last hour. It was amazing. Thank you, for Mario, for all the info.
How nervous are you right now?
Yeah, you know, I don't like speaking in front of people.
All right, guys. All right, everyone, thank you so much for coming. Every speaker is still on stage. Gary, Pixelord, ZK Shark, TB77, which is Tommy, Chet, the man, the myth, the legend that does the riddle. I need to stop saying the man, the myth, the legend. That's a habit that I have now. Jen, not sure why I'm thanking you, but thanks. And of course, our sponsors and the great pitches that we had that I'm going to probably bring in again on Tuesday because I want the NFT community to hear them, which is Etihad's NFT by rcube.eth, who are there, and Open Games Builders. So the pitches get segmented. For anyone that doesn't know, they get segmented and sent to our VC network. A lot of VCs listen to our pitches. So the team will cut it up, send it to them via private messages. And for the VCs listening, if you want to be connected, as always, DM us. We'll connect you to the projects. Otherwise, great fucking show. See you all on Tuesday. Right after I end this, in about a minute or two after I end this, you'll see a pinned tweet on my profile with a link to the next show. Make sure you fucking register. I'll see you on Tuesday. Love you all. Thank you from the bottom of my heart. Bye, everyone.
Bye bye. Awesome show.